Are we seeing the resolution to the long-standing conflict between Russia and Ukraine, and could today be the D-Day which marks that turn of events? Well, good morning and welcome to India Market Open right here on NDTV Profit with me, Neeraj Shah, and Alex Matthew. And Alex, I don't know what you thought of it.
I thought this was the next logical step in
Zelensky blinking? No. You think?
I think what is very natural is for Trump as a deal maker to press and press hard, and I think we've heard this from experts that have watched him as a deal maker over a period of time, and if somebody's likely to be very combative at the table, what he will simply do, as he has done in this case, is to not invite that person to the table in the first place and say, look, either you participate in this deal or I won't include you at all. And a day later or 2 days later, you immediately have the envoy speaking to President Zelensky, and you have a positive outcome there.
Yeah. So, I think it's important to get that on the screen as well as to what's happened before Alex dwells upon all the other things as well, and we'll talk to Anurag about it. But this is the big thing, right? That Zelensky says that had a productive meeting with U.S. envoy Keith Kellogg, discusses the effective security guarantees with Kellogg, but most important is the third line. Ukraine ready for a security agreement with Trump. I think the big thing in some sense whether right or wrong, or whether it's done in the right way or the wrong way is separate, but there is one solace to this conflict coming to an end, is the humanitarian, on the humanitarian grounds, right?
Oh, without a doubt, because you have so many people that have been affected by this, and also it has implications, Neeraj, for if things go back to normal in terms of sanctions. Of course, Europe does not want that. A large part of Europe is against it. But think about the implications for energy, and you're talking about gas, you're talking about crude supplies, a lot of things that have now become a new normal, then start reversing. And if you have Russia selling oil once again in the global market, then $76 on Brent crude looks a little expensive, don't you think?
Especially at a point of time when OPEC is now starting to do those, the measured cuts, if you will. So it could be interesting. But lots beyond, right?
Absolutely.
There is dollars or DXY strength?
No, it's actually reversing. Is the reversal. But let's talk about some of that, right? So, eye on the globe, as I like to call it, Wall Street seeing selling after a bleak outlook by Walmart, and Walmart incidentally forecast sales and profit below consensus estimates after it posted its numbers. It cited the need for caution in navigating uncertain geopolitical environment, and this is something a lot of companies in the US have been saying, and they've apparently been sending this message out to the Trump administration as well. What they have done is that they have focused, or rather they have forecast EPS at $2.5 to $2.6 in FY26. That's the financial year ending January of 2026. And that was lower than the analyst projections of $2.76. Shares of Walmart, by the way, rose as much as 72% in 2024, and they declined about 6% overnight. The S&P 500 as a whole was down about 0.4% or so. Dow saw a sharp crack, down 450 points, down about 1%. And you had the NASDAQ composite also that was down about 0.5%. Now, I know that a lot of commentators will say that this is par for the course, but based on what we've seen in the recent past, this is a big move. The dollar, as Neeraj was pointing out, declined overnight, with the DXY losing about 0.75%. The 10-year yield is also at around 4.51%. About the 12th of this month itself, it was at 4.63%, so it's come off a bit. And some of that has to do with the jobless claims data as well, which came through overnight. It rose to 219,000 in the week ended the 15th of Feb, and that's from an upwardly revised 214,000 in the previous week. Of course, what has been seen in the 2025 so far is that these claims have actually been reducing over a period of time, and so that showcases resilience. But the only point that experts are pointing to is that there aren't a lot of fresh jobs. So while jobless claims may not have risen very substantially, a lot of job creation is not happening. So the status quo is maintained, and ultimately what the biggest fear is at this juncture, Neeraj, is of stagflation. And this is something of a of a murmur that is going around Wall Street. What if growth does not come back? And what if, because of Trump policies on tariffs, etc., inflation doesn't come down on a durable basis as well? And then you have a situation of stagflation, that boogie man, that bad word that people are worried about.
Yeah, and also just before we get to Anurag, I mean, today we've had two large B2C companies talking of caution, right? In the US, Walmart saying what they have said, and Mercedes-Benz talking about how EBITDA as well as sales, but EBITDA in particular, but sales as well will not necessarily be very strong for the current calendar. But Walmart having said the way it has and saying that this is without the impact of the tariff wars, and if indeed those were to come about. So yeah, I mean, that is the interesting piece. But from a world markets perspective, the US dollar stumbling on tariff fatigue, DXY slightly over 106 is great news, Alex, I thought.
100%.
Yen
and yields coming off also.
Yeah, and the yen is quite marching its own pace. I think that's the other big factor to watch out for. In fact, Anurag Singh, I'm told, Alex, managing partner of Ansid Capital, is with us. Anurag, good having you. Good evening to you. Thanks for taking the time out. There are 2 or 3 key things that me and Alex were talking about at our morning this time around from a global perspective, which stood out for us. So between Vladimir Zelensky agreeing to maybe move ahead with something on the resolution, or global majors like Walmart and Mercedes-Benz talking about a lackadaisical 2025, or the dollar index coming off, what do you think is the most important from an investing parlance?
Yeah, morning, Neeraj and Alex. So look, by the way, you've covered the entire syllabus, right? I was listening to you, you've already covered everything. So by the time you came to me, everything is taken,
no,
right?
we are mentioning the news, Anurag. We want your views now.
I know. So let me give you one by one. Okay, let's go. So look, by the way, we are not geopolitical expert, but it was very evident and clear that Trump will come and he'll take a different view of the war, and he will end the war. So I understand, there might be other reasons that the world wants to see a weaker Russia. Europe wants to see a weaker Russia because it has huge energy. Europe wants energy, unlimited supply, so that it can keep green, green and whatever propaganda going. But reality is somebody is losing soldiers in the war. It needed some guy to say, why is Ukraine losing 50,000 soldiers, right? The point is everybody can support the war until their kids are going to fight the war. And I believe to the camp that ultimately, if there is a peace to be had, we should make it. So limited point is Trump had to settle the war. By the way, who knows, Zelensky has the opinion of the people in the, within Ukraine, right? I am sure if the elections are held, he'll lose. But the point is, the war is coming to an end. That's a good news for the world. That's a good news for the, the general, not only energy prices, but overall for the world, right? Because it had kept a lot of uncertainty. While one ends, the other one begins, because now there is a China and Russia nexus, and then there is a US. So that's a bit of a cold war, but that's for the long term. Short term, it is all good news. Let's come to Walmart. Look, Walmart has this habit of constantly lowering the expectations and then getting ahead and beating them every time. I'm very sure. And Walmart is a place where I even, specifically out of interest, keep tracking the prices. And they've just taken the price hikes, within the last 1 month, right? So I'm pretty sure whatever they are projecting, they're going to beat it, right? So by the way, so in this 5% growth, 2% is inflation, 3% is the real growth in transactions. So that's how the revenue growth comes in, 5%. But I'm very sure it's not a worry. Neeraj, on the whole, this year, the earnings are going to be good. 280 is the S&P projection on earnings. So between a Mag 7 and the rest of it, earning growths are going to be 14, 15 to 18%, depending on what estimate you believe. So that's the estimate, and it's not too bad. For the time being, let the market settle down with the news about trade and everything, right? Which is obvious. But I think the very sensible thing Trump has done here is that after the rhetoric of 25, 30% tariffs, etc., now he's saying it will be reciprocal tariff, right? What this means is that, look, we are here to negotiate. Let's do a trade-off. countries have a trade balance. China has 300 billion, Mexico has 150 billion, India has 40 billion trade balance with, deficit with US has the deficit with India, right? So they're going to sit down, they're going to negotiate and give and take. I think which is fair, right? So if he's going to sit down with India, the discussion will be that why are you tariffing us, when ultimately, we are not tariffing you. Likewise. So it's a sensible plan. That's how I believe it. And I don't think there's in terms of earnings.
Yeah, fair point. So the question then arises from our perspective here in India then, Anurag, and you've seen increased flows into China at least. You've seen the Hang Seng index go up quite substantially over the last 12 months or so. But the point is that at what point do you think that will shift the global flow of funds? We're already seeing dollar come off quite substantially. It's now just above 106. Is that the precursor, you would say? Because few people have said that fatigue is likely to creep in. It has crept in. What do you think will happen now?
So Alex, there are 4 or 5 things. Let me not repeat what everybody else is saying. These are well-known facts. Rupee needs to depreciate. I strongly believe rupee is highly overvalued. RBI is holding it. It needs to go much further. And it's not a national prestige issue. Rupee has to find its level. That's 86.6 is certainly not the level, right? That's one reason. Second is the world has become more attractive. Look at this. I want to just bring this attention. Go 4 or 5 years back. MSCI index had China at 34% and another 12% of Taiwan, so 45%. That used to be the block. Now China was barely 25% in MSCI, while India jumped from 15 to 20. Some of that, what happened in the last 4 years, that seems to be reversing. China was too cheap for a size of $18 trillion economy. 25% MSCI weightage was too low. And I think Chinese government seems to be turning its course on the corporate world, right? So some of that is a very positive signal. So ultimately, I think India had it good when it was going, but it was a tailwind for last 3-4 years. But now the reverse is happening. So I think India will have to rely more on domestic flows. But here is the catch. Is that, FIs built huge positions when the prices were right. Now they'll exit when the prices are right for them. And domestic investors will have to really give them that exit, right? I really liked the way Uday Kotak put it, right? There is a 700 billion in the markets and then nearly 1 trillion in the unlisted market. Ultimately, all of that money is going to find exit. And that's going to be like it or not, that's going to be a headwind for Indian markets till 2030. Not only in the short run, but that money will go eventually.
Interesting perspective. Anurag, thanks for joining us this morning and for giving us that perspective. Neeraj, interesting, right? Because that's one perspective. The other perspective is, of course, that ultimately what he was talking about foreign capital that is in the unlisted space. Ultimately, that exit has to happen. The exit has to happen only in the markets in India, the stock markets in India. So ultimately, the Indian investor benefits. You're not always going to get a premium as you got over the last 1 year or so, right?
Yeah, but natural course. I wouldn't comment too much, but that's how things will happen, right? If there were large unlisted space in the US, eventually it had to list in the US and find an exit there. So I don't know, but of course, Anurag looks at this very closely. Uday Kotak has made his comments. Yeah. Interesting thoughts.
Yep. Let's quickly take our viewers through what happened in trade yesterday. You once again had a net sell number, and if you take that one exception out of the picture because of that Bharti Airtel deal, it's pretty much been par for the course. 3,300 crore sold yesterday on a net basis, about 3,900 crore bought by domestic institutional investors. The Nifty 50 traded in a very narrow 110 point range through the day, and it ended off the low point of the day. In fact, very close to the high point of the day, though it ended with declines of 0.1% or so. In fact, an interesting data point that Somit threw up, and Neeraj, perhaps you will talk about it. The fact is that we've more or less been range bound for a while for the last several trading sessions. The bulls once again defended the 22,800 mark in trade, and large private sector banks underperformed. In fact, HDFC Bank's 2.3% fall weighed on the benchmark, accounting for over 60 points on the downside for the benchmark Nifty 50. Broader markets once again were buoyant. You had the mid-caps and the small-caps that recovered from early selling, and the Nifty mid-cap 150 and the small-cap 250 rose nearly 2% from the intraday low and ended very close to the high point of the day. Auto stocks, X of Maruti Suzuki, shrugged off early losses, and M&M in fact gained 5.5% from the day's low to end about 3% higher. And that's certainly a talking point for us today as well. We will bring you exclusive information on what is being considered on the import duty front for electric vehicles. Metals were the top gainer, up 2%. Energy, PSU Banks, Realty also gained, and the market breadth favored the advances, with 3 stocks gaining for every decline, Neeraj.
Yeah, and of course, what also happened overnight is that India won its first encounter, and we are preparing for the 23rd of February, the big day, Alex. So certainly watching out for that. But yeah, from a trade setup perspective, you pointed it out. Minimal change. I mean, in 4 of the last 5 sessions shows that now there is consolidation. You could argue, the bull could argue that the screen is respecting the 22,830 mark. This was the line in the sand that I repeat now for the 3rd day that Dr. C.K. Narayan drew in his column last week, that if this week were to go with that. Now, whether that will happen today or no remains to be seen, because the US market's really cracked, and therefore interesting to see if we hold that line in the sand, 22,800 zone effectively. It's never that exact number, but that zone. Right, so we need to see that happens or no. But the broader market trend for the last couple of days is while unpredictable to say whether it will continue or no, but it's certainly very, very welcome, because you needed this breadth of strength for people to have MTM gains at the end of the day. Very, very crucial, and we've now kind of have that, because a lot of portfolios viewers, frankly, even on the derivative side, were not necessarily in the Nifty, but beyond the Nifty 100 as well. So bear that in mind. The most important thing is that after being shunned for a number of quarters, large BFSI is now becoming the first port of call. You ask people and they are saying that they are finding value in a bank or a NBFC or two, and that is where they are moving back towards, despite the fact that that's not a bucket that really cracked as much as some of the mid caps and small caps have. So bear that at the back of your mind. That is the key to monitor. But I dare say, Alex, before we get to stocks, I think on days like these, and even otherwise, it's very crucial to get in what the derivative picture might be looking like, and who better than Agam to put that into perspective.
100%, and yesterday was expiry. Let's talk about what you took from that. Agam, we ended at very close to the high point of the day for the benchmark.
Yeah, but there wasn't much in terms of reading of the expiry, because it was a very, very uneventful one. And this is the 3rd consecutive expiry where it's been an uneventful one, which actually begs the question of whether or not now whether or not something is afoot. So what's happened is that over the last 4 or 5 days, a lot of technical analysts are saying that there's a rebound which should come through, but we cannot time that particular rebound. What has also happened is that the last 12 sessions, we've seen the Nifty come off in about 11 out of those 12 sessions, but also that this decline has been very, very small. And based on that, we actually have seen not so much of a decline as much as we've seen consolidation around and in and about 22,800 and 23,000 on the higher end. A very, very tight range, and whenever this happens, usually it's followed by a direction. The hope is that this will be towards the upside. Whether or not that happens is, of course, a wait and watch. But as we were mentioning earlier as well, when it comes to positioning of index futures and the FIIs, that also has remained sticky over the last, well, at least 2 weeks, and below the mark of 20% for net longs, which means about more than 80% are still shorts, and that short covering comes through, and when it does, that's when you start seeing, well, improvement in market sentiment. But speaking of market sentiment, we already know that the market breadth in the broader markets, of course, has improved over the last 2 to 3 sessions. So keeping in mind there is some sort of hope. To tell you about what happened yesterday, Firstly, the Nifty again closed flat for the second straight day, at least very, very marginally in the red. Not too much change in open interest again. But the Bank Nifty, however, took a step back. But do remember that the Bank Nifty had shown a lot of strength in the session before this. It was up, in fact, by as much as 1%. So consolidation continues here as well, even as we see very little change in open interest. Now let's move on and talk about your options market. And as we move into a new week, as one might expect, a lot of calls and puts written around the 23,000 mark. And as I've been saying, 23,000 is which continues to be the pivot point, the fulcrum around which the Nifty has been hovering around. And at the moment, once again, it's a very wide 1,000-point range, 22,500 on the lower end denoted by puts, 23,500 on the higher end denoted by calls, which is seeing a substantial amount of writing coming through. But, moving on, as far as stocks go, again, a good day of trade for a lot of these companies. BSC as well as Chambal Fertilizers. BSC actually looking to make a new life high as we speak. And besides that, we have a decline of around 3% for Nykaa. So that's where we've seen some shorts coming in. And among stocks which are unwinding, let's pull that list up as well, where we've seen decline in open interest. Short covering for Poonawalla FinCorp, Tata Steel, as well as Cipla. So all in all, a mixed day of trade yesterday as well. But as I've been suggesting, if the market breadth remains positive, if the mid-cap and the small-cap indices are looking, well, up at the moment, you never know. But it's going to be a wait and watch on that particular recovery.
Interesting. Thanks so much, Agam, for getting us those details.
Just one question, though, follow up to Agam, really. Agam, 2 days on a trot, we've had the broader markets outperforming the Nifty, right?
Yeah.
On the derivative side, are there some specific pockets of, forget strength, that the screen will tell, but any build-up or interesting activity that we've seen in the non-Nifty 50 or the non-Nifty 100 pockets?
So I haven't taken a very, very close look at the open interest data, but what I can tell you is that for the broader markets, the open interest has certainly now picked up.
Okay.
Considering the market breadth, as the more gainers than losers, I reckon that this is towards longs, and which means that something could be in the offing. But you never know, because it's a broader markets, if you have a negative trigger, it could potentially fizzle out as well, just as easily.
Got it.
On the other side, so you pointed out for the Nifty 50, you're talking about 80% shorts, right?
80% shorts for FIIs, yes.
For FIIs. And so what that would mean is that if there's a sudden spurt on the upside, you could have a very sharp reversal of these and a covering of these, which could push the benchmark very, very quickly higher, right?
So just want to make a quick point there. Firstly, that the Nifty is at around 23,000, a little below that. 23,500 is where the most amount of calls are. 23,600 is a 200 daily moving average. If we do see the Nifty move above that, maybe a span of 2 or 3 sessions, then you're in the offing. Then it just completely changes the picture entirely. But yeah, it's still a bit away from current market levels.
Absolutely. Thanks so much, Agam, for getting us those details. Let's talk about stocks. And I've got an interesting one on my list. In fact, it was in the list of stocks that saw short covering that Agam just spoke about. Cipla ended with gains, if I'm not mistaken, of about 1% or so. And it is a significant development for this company. And I usually am terribly afraid of pronouncing these formulation names. Thankfully, this is an easy one to talk about. Nilotinib capsules. This is an interesting one because it is used in the treatment of chronic myeloid leukemia, CML as it is called. What is this formulation? It was developed by Novartis to treat CML leukemia, and its patent, in fact, Novartis patent expired in July of 2023. Dr. Reddy's laboratory already has a capsule. This is, by the way, listed on the WHO's list of essential medicines, and it's a significant development. When are they going to start manufacturing this? It's expected to be launched in 25-26 in the US. There was, by the way, also an inspection at its subsidiary company in Navi Mumbai, and 2 observations were sent out or issued by the US FDA. The inspection was concluded at the analytical testing facility. It's a thumbs up, and expect this company to react positively. Action Construction is the second one on my list. And in fact, this is a significant order, a very large order, the largest ever for this company from the Defense Ministry, 420 crore. And this is for 1,121 rough terrain forklift trucks. So you were talking and have been talking, Neeraj, over the last several weeks about the starting up of capex and spending by government and government agencies, Defense Ministry, of course, part of that. And this is a positive sign for a number of companies, a very large order that has come through for Action Construction and bodes well. The third one, and I chose this despite my inability and difficulty in pronouncing the name, Narayana Hridayalaya. See, I got it better. To invest 900 crore rupees and to set up a Kolkata hospital with 1,100 beds. It's a significant development. The first phase of 350 beds is expected to be commencing operation not now in FY 28-29, but it bodes well for the company that it's setting up additional capacity. It's going to be using a mix of debt and internal accruals to fund the investment. A lot of these hospital stocks have been in focus, Neeraj, and positive certainly for them.
Okay, and we'll just have some updates on some of the pharma names since healthcare is so much in focus. Brokerages have come out with their new views there. The first stock on my list is a bulk deal that is done, is ISGEC Heavy Engineering. Goldman Sachs sold about 10.43 lakh shares, 1.41% at 915. Now, the declared name, of course, one of the buyers is Nippon India, which bought about 8.32 of those at about 915 a piece. There are supposedly a couple of other very interesting names that have bought into this. So watch out for ISGEC in the session today. If there is a reaction, you would know why, because of a block deal that has happened. A couple of brokerage notes that stood out for me, and we'll of course talk about them in detail, but reckon that those stocks could react a little bit. So Morgan Stanley's come with a note on JSW Energy. They have initiated with an overweight rating and a target price of 545. They say that the fastest growing utility makes us overweight, and they see an EBITDA CAGR of 24% over FY 24 to 28. 24% over 5 years. Effectively, if you growing at 25%, you're doubling in 3 years. So net, Morgan Stanley is believing that JSW Energy's EBITDA from FY 24 to 28 could actually grow up about 160-170%, which is actually pretty strong. So keep that in mind. And since we're talking of banks, like I said, a lot of people are actually anchoring into banks. Nomura has a note on Axis, a buy with a target price of 1230. They've included now Axis Bank as one of the top ideas. They say earnings CAGR of 11%, largely similar to peers essentially over the next couple of years. And that's the key line, that is largely similar to peers. Let's see if Axis has a reaction. But meanwhile, important takeaways coming in from Motilal Oswal and Indian Pharma Alliance meet, where the industrial body says that Indian companies will see minimal impact from potential US tariffs. Varsha Johnson to talk more about it. Varsha.
Thank you, Neeraj. So yes, Motilal Oswal had hosted Sudarshan Jain, who is the secretary of IPA. What they're saying is the reciprocal tariffs would have a minimal impact on Indian pharma, as India has an export surplus of medicines to the US. While US President is expected to make a detailed announcement on 2nd April, there is work in progress when it comes to bilateral trade agreement. And the price erosion of 10 to 11% annually has already reduced the cost of medicines for the US patient pool. And what they're saying, the impact of the tariff when implemented would be passed on to the patients, thereby increasing the cost of medicines. While Government of India has implemented schemes like PLI to promote indigenous manufacturing. And if you see the Indian pharma accounts, almost 44% for the US pharma market by volume and 47% when it comes to generics prescription. So thus they're saying that it would be difficult to replace Indian pharma manufacturers purely by a tariff increase. While there was a note on pharma by Citi also, where they're saying that they believe that tariffs on the Indian generics and API exports to the US are unlikely at this point. The US is very high dependence on Indian generics, which are operating at a very thin margin. If tariffs are placed, then Indian drugs and APIs exported to the US might decide that they no longer want to, go into a place where that is less profitable, and they might rationalize the portfolio and exit the market. And if this happens, the US could face massive shortage of those drugs because they rely heavily on Indian market. However, due to uncertainty, the stocks may remain volatile.
Very interesting perspective, right? Because if you think about it, why would you put tariffs on certain goods to bolster domestic manufacturing? If you don't have domestic manufacturing, you can't set it up, then there is no real purpose behind it. Ultimately, one would assume that it's simply going to be used as a bargaining tool. And that seems to be the consensus at this juncture, that there won't be a major impact of tariffs on pharma. It's time to slip into a very quick break, but we've got trading strategies, stocks to discuss on the other side. As things stand, the implied open suggests that it'll be a mild downtick for the Nifty 50. but you never know. That has sometimes not panned out over the course of the last week or so. Let's see how that does. Slip into a very quick break, more on the other side.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies.
Welcome back. You're watching India Market Open on NDTV Profit. Get the implied open once. It's showing a 92-point downtick or maybe a 100-point downtick. Now, this means that we will be hovering in or around the 22,800 mark. Do we defend that, much like what we've done the whole of this week? Or do we give that up is the key question. Maybe some bit of it would also depend on what is it that the FI flows look like, because frankly, that is the key driving factor for the markets in the last few days. Now, the key is, viewers, that if you are wondering that there have been incessant FI flows, but for one day when there was a Bharti Airtel block deal, what is it that the FIs have really done in February thus far? What is it that they have bought and what is it that they have sold? Now, I would reckon that an exact detailing of this is mighty difficult, but some sense of what has happened is always welcome, and therefore it's great to get in Rucha, who's trying to throw some light on what is it that FIs have done in terms of buying and selling thus far in February. Rucha, good morning.
Good morning. Yes, so I'll start with the overall flows in the first fortnight of February 2025. FI flows was net negative of $2.5 billion in the first fortnight. Now, this has been consistently done, and because of which the markets are also getting affected. But pertinent to note that the last two fortnights witnessed an outflow to the tune of $7.3 billion in just last two fortnights. So this is a big number for the market to handle, and that is why maybe we are seeing some kind of sell-off in the market happening. But let's look at the sectoral picture of the same. Well, the highest inflows were seen in telecommunications. $269 million is what we could see over here. Even Bharti Airtel posted really good results over there, and that is why maybe could be a bit of support in this sector. But net outflows highest was seen in financial services to the tune of about $615 million, then followed by capital goods at around $585 million. But picture in last 6 months stands at largest outflow seen in energy. Largely outflows is what we could see over here, except for healthcare, which saw the highest inflows of $1.2 billion. And now remind you, this is a picture of last 6 months. Highest outflows seen in energy, automobile and professional services as well. But overall picture of what FI did in last 1 year, well, they have been consistently overweight in financial services. As I mentioned previously, in last two fortnights, financial services was one of the biggest losers. But on an overall picture, broadly over the last 1 year, they have been overweight in financial services. But talking about their underweight rating, largest underweighting is seen in energy at about 1.7%, followed by software services, largely the IT space over here, negative 1.5%, and this is also followed by materials at negative 1.4%. So this is the overall picture of what FIs are doing, especially in the sectoral front as well, where we saw the highest inflows in telecommunications over the last fortnight and highest outflows in financial services.
Got it. All right. Thanks for telling us about that. Interesting note there coming through from MK. Let's get you some more brokerage notes. And in fact, there's an interesting one on Suzlon, which is talking about a potential upside of over 20% for sure, target of 70 rupees. This is Investec on Suzlon. They're positive on the stock. They've initiated a buy. And we've got Mika joining you to tell you what they're saying about this. Mika, a lot of retail interest in this counter. What is Investec saying?
Yeah, so Investec has initiated coverage with a buy rating. 70 rupees is the target, which means a 29% upside to the previous closing price. Now, the brokerage is saying that the company is well positioned to capitalize on the resurgence that we're seeing in the wind energy space. Their 5.5 gigawatt order book provides revenue and earning visibility for 2 to 3 years, and which provides a 66% CAGR on those terms. It has also mentioned the strong return ratios that the company is maintain, the robust bidding pipeline and optimized supply chain, which work in favor for the company, and the growing round the clock, which is RTC and FDRE, which is firm and dispatchable renewable tenders, present growth prospects for the EPC services of the company. These tenders are tenders that include different types, which is your solar, wind, as well as a battery energy component in the orders, and these have been rising in several months. They also expect Suzlon's sales, EBITDA and net profit to post a compounded annual growth rate of 55%, 63% and 66% respectively over FY24 and FY27. And lastly, they also expect the company's return on equity to expand to 32% in FY27 versus 28.5% in FY24.
So tremendous potential is seen by Investec. But there's JSW Energy as well, which Neeraj spoke about, and a tremendous growth over the course of the next several financial years in EBITDA is being seen by Morgan Stanley. What are they saying? What is their target price?
Yeah, Morgan Stanley has also initiated coverage on JSW Energy. It's initiated with an overweight rating at a target price of 545 rupees, which indicates a 20% upside. They've stated how the 1 year forward EV to EBITDA valuations of the company are now standing at 13 times, which is below the 3-year average of around 14.3 times. They are calling the JSW Energy one of the best Indian utilities to play the future of energy theme. They mentioned the diverse asset portfolio across power generation, the emerging businesses that the company is getting involved in, and also the various investments is looking forward to as positive for the company. And it's also stated that JSW Energy is one of the smartest and most experienced management teams in the space, which works in favor for the firm. Lastly, Morgan Stanley has noted steady cash flows, and the recent equity raise by the company will help fund the growth capital for the company. They expect JSW also to achieve its 2030 target of 20 gigawatts of operational capacity well within time by FY28. They also expect EBITDA compounded annual growth rate of 24% over FY24 to 28. They do expect net debt to rise to 7 times in FY27, but then reduce subsequently.
Okay. Thanks a lot for that, Mihika. Appreciate this. So, well, on the energy sector, we've been talking about how energy transition, those orders continue to come, right, on different facets of power, whether it's grid, whether it's otherwise, and I think a couple of brokerage notes out there on different kinds of energy companies, by the way, keep this in mind. But nevertheless, bullishness out there on both. I must say, on Suzlon, by the way, it's again, much like the Nifty is defending that 22,800 mark, Suzlon is defending the 50 mark. If you just look at the chart of Suzlon for 1 month, you will see Suzlon continues to stick around that 50 mark and not quite go below that. Twice it has done that and then bounce back. Let's see if the brokerage note today gets the stock excited or no. Speaking of stocks which might be excited or otherwise, let's tell you what's on the profit watch list. So we start off with a positive piece of news. Action Construction Equipment has gotten an order of 420 crores from the Defense Ministry, mind you. So that is one thing to watch out for. Actually, on energy stocks, one more name that came out today is Adani Energy. Elara sees about a 37% upside in that. JSW Energy, as we just told you, 16% upside as per Morgan Stanley. KEI Industries is the other one in which Morgan Stanley's initiated a note, up about 17%. And Suzlon, Investec sees about 27% upside. Lots of brokerage coverage, I must tell you today.
Let's talk about the rest of the list. We've got Narayana Hridayalaya, which has invested 900 crore in Kolkata, and that's something we spoke about earlier. It's a thumbs up. Of course, it's going to take a couple of years or 3 years for them to set this up and start operations, but still positive that they're expanding capacity. NTPC Green has signed an MOU with Bharat Light. This is seen as a positive as well. And finally, Cipla has gotten a nod for a drug that treats CML, as it is called, leukemia. It is, and it will start production in the next financial year. Sanofi is something that you should watch on the downside. The PAT has fallen as much as 34% and the margin has declined in the quarter gone by, and certainly something to watch out for in trade today. Now, we spoke about this at the start today, and this has been a bit of a buzz about especially when you're talking about Teslas coming through and being sold in the Indian market. What price will they be at, which particular model? And in fact, it's come to light that the government may modify the terms of its new EV policy amid Tesla being readied for an India entry. Sources in the government have said that the new EV policy is expected to be rolled out in March, and that was something that was announced a year ago, remember. Shrimi has the details, and it's something of a tweak that could come through. Shrimi?
Government is working on finalizing the guidelines on the new EV policy. Remember, the EV policy requires the investment of 4,150 crore, which gives you the concessional duty of 15% tariff from the current 110% tariff at this point of time. So what we've been given to understand that government is, working on making some changes in the terms and condition of the EV policy. And in fact, companies and car makers may give a mandate to have a revenue target of 2,500 crore by the second year itself from the date of manufacturing unit being set up. In fact, in the draft policy which was approved last year itself, already have a provision of 5,000 crore revenue target in the first 4 years and 7,500 crore by the fifth year. So this is one addition which is going to be crucial if at all they are going to come as a change in the final policy. Other than that, the assembly line could be included in the existing factory, and any past investment by these car makers whomsoever is interested in the policy would not be considered as a fresh infusion. Any land building cost will also be not counted as a part of the total investment. However, there are consideration around that 5% of the total investment could go towards the EV infrastructure. So that consideration is still in work. So overall, some terms and conditions could see some tweaking, and once the scheme will be notified, the application will be sought, and 2 to 3 months of the timeline will be given for the approval, and after the approval comes, the companies can go ahead with the import. This is important and coming at a time when Tesla, one of the considered to be a key beneficiary of the EV policy, is planning its foray in the Indian market. So this is important, and we've been also told from our sources that 2 to 3 car makers have already showed interest. However, there is no such commitment came so far. So government, especially the heavy industry ministry, was the nodal ministry, is working with the commerce ministry and finance ministry on the proposal, on the changes, and we will see some development in next month itself. And if all goes fine in the internal consultation, we would see that application will be invited by April itself.
It's a big talking point, Shrimi. Thanks for that. And I must tell you, it's a big talking point, not just out here in India, but for global majors as well. I mean, if you visit websites of Bloomberg, CNBC, what have you, across the board, Tesla's India plans are top draw. And I'm not saying the EV policy is being facilitated for ensuring that, I mean, it's great for the consumer that maybe there's more competition coming in for car makers. And the Indian companies, I must say, are fairly confident that they'll be able to stand up to that. And why not? I mean, some of the cars that we've seen have been fascinating. Well, let's talk about that with Kush Bora, founder of kushbora.com, car enthusiast, I'm sure. Aditya Shah, founder of Hercules Advisors, will probably put into perspective the fundamental aspect of this as well. Now, Aditya, can I start with you on this? Good morning to both of you, of course. But let's assume that for a certain kind of investment, the duties are reduced and it facilitates global car majors to set up shop. They have targets, much like companies have targets in the PLI schemes, etc., etc. What does this mean for electric vehicle penetration in the country, part one? And what does it mean for incumbents? We saw M&M recover a little bit after the drubbing that it got for the last 3 days, and their cars have shown some very good sales thus far. Maruti has given out a 5-year plan. They are planning about this seriously. I'm sure Hyundai, with its Creta launch, is now thinking of very large EV plans as well. What does all of this mean for an investor?
Good morning, Neeraj. So this is particularly good for the sector. We feel that as Tesla will come in, all automakers will be forced to innovate and invest in technology. Mind you, one of the biggest difference between IC car and an EV car is technology. An EV car is loaded with a load of technology, and today we've seen the largest automaker only now starting to invest in the EV supply chain, and they are going to launch their new EV in terms of Vitara Plaza. So in my opinion, this is really very good. All incumbents will now aggressively invest in the EV ecosystem. Not only Tesla, BYD is another one from China, which is far ahead in technology, and it will also be a major beneficiary in it. So as more and more people come in, as more and more competition come in, it's good ultimately for the consumer, as cost of acquisition of EV will come down and it will benefit the entire ecosystem. So this is very good news. I will welcome Tesla to come in and set up shop in India. And over a longer period of time, this will be positive for all automakers like Mahindra, Maruti, Tata, as the sector will move on and cost of acquiring an EV will come down.
Aditya, that's all a fair point. But then from what I've heard and people who are in California, where a mass migration has taken place to EV, the problem is not with the availability of the vehicle. The problem is with the availability and the cost of energy. And already you're talking about a split in India. Of course, you have capacity that is renewable, but you're still talking about a large amount of the production that is still thermal. And ultimately, it's going to increase the pressure on the grid to have at certain points of time, because you're talking about cars usually getting charged at night. So what are the implications for power producers for the grid, and are there plays there if India indeed does move a larger part of its mobility towards electric?
I'll give you something interesting. All automakers across Europe and US are slowing down their investments in EV. It doesn't mean that EVs will come overnight. Only in the stock market, by stock price movements, we see that the market is anticipating things will change overnight. This is a 5, 10, 15-year story where EVs will slowly and steadily continue to penetrate the ICE engines. And over a period of next 15, 20, 25 years, we will see a full-fledged EV car. So slow and steady changes will happen. Changes will be synonymous with the fact that government continues to invest very aggressively across renewable energy, together with the fact that there are batteries. Either there are swappable batteries or either there are fast charging batteries. That ecosystem will take time. So this is positive in the shorter term. However, the bigger change will come over 10, 15, 20 years. Now talking about the ecosystem, of course, the EV ecosystem is going to be a major beneficiary of this. Somebody like an IEX, where power trading will really happen, that is going to benefit out of it. And auto ancillaries supplying to all of these EVs will be major beneficiaries. For example, somebody like a Motherson, somebody like a FIAM Industries or a Lumax Industries, or Sona BMW. These are all the players who are going to benefit. However, this will not happen over a shorter period of time. Long tail will be there because still in EV players are understanding what technology will be mass produced. So slow and steady progress will happen. Don't expect something to happen overnight.
Yeah, and it's a very fair point that you're making. Speaking of global car makers that are making this transition, Mercedes is one of them, and it is in fact in focus after the company announced the annual results. And what is interesting is the outlook going forward, which is not looking very rosy. Puneet joining in to tell you about some of that. Puneet, this has implications for some of Indian, or one in particular. You're talking about Jaguar Land Rover, which plays in similar markets. So what are they saying?
Well, thanks for that. But definitely, it's a very gloomy outlook that we have given for 2025. Just in terms of numbers, the group revenues in this FY in 2024 was down 4%, but the group EBIT was down roughly about 31% in this fiscal year. And the company has mentioned that it expects significantly below estimates going forward as well. They're also estimating EPS to come down. EPS actually has come down by 24% in this fiscal year. And the free cash flow is also down 19%. So it was a washout year across metrics for the company. When you look at the sales performance as well, the overall sales is down 3%, but the EV sales specifically is down 9% in 2024. And the overall top-end car variants have also down 14%. So it has seen demand, being not sustainable for these two segments specifically. The uncertainty they mentioned and commented in their results that uncertainty of tariffs and trade relations continue, and relations between US and China as well as Europe and China are significantly something to watch out for, could impact demand going forward. And just finally on its outlook, it has specifically mentioned that it expects 2025 sales to be slightly below the 2024 numbers. And when they say slightly below, it's anywhere between 0 to 7.5%. So that could be the impact. In terms of revenue, also similar estimates. They're expecting a slightly below number, but EBIT they're expecting a significantly below number, and they define significantly below as more than 15% impact. So it could be another washout here for something like a Mercedes-Benz. In FCF also they're estimating a more than 25% fall in this particular segment. So they mentioned that China impact could have some of the demand pressure, while Jaguar has a lower contribution to something like China. I think in this fiscal year it's going to be a tough market to crack going forward as well.
No doubt. And gloomy outlook therefore extends to JLR. Let's see what pans out. Thanks, Puneet, for that. Kush is joining in as well. Kush, sorry to keep you waiting, and good morning to you. We've defended, or rather the market or the Nifty 50 has had that 22,800 mark defended yet again, but the range was very, very narrow. What do you see as the key talking points for the benchmark today?
Hi, morning, Alex. Morning. I think the global cues have been rather soft negative, but if you were to take heart, it's the dollar index that slipped to those 106, 106.5 levels, which alone perhaps would have been the silver lining or the one talking point that could have actually taken the markets higher, but not today perhaps. That's the kind of market we are in. We're seeing consolidation for the last 4 to 5 sessions, and that is welcome after the kind of moves that we've seen on the downside. Right now, the range seems to be 22,750 on the downside and 23,000 on the upside. And while in absolute terms, FIIs do continue to pile on index shorts, the percentage of short continues to remain 84%. For the last 4 to 5 sessions. So I think somewhere it's being netted out. Now there is a 23,000 straddle at play. Even now, the kind of moves that we've seen intraday, over the last 3 to 4 sessions have been encouraging, and that they do make a case for a rebound rally in the market. It's just that the call base has shifted lower from 23,300 to 23,100 and 23,000, and hence 23,000 becomes the first mark of resistance. I'm still playing for a rebound in this market, and with a stop loss around the 22,700, 22,750 zone. Even if not a positional bet, then intraday. So if you do get that dip today, which the GIFT Nifty is suggesting, and the markets do sustain around those levels for the next 15-20 minutes after opening, then there's a possibility that you could see another move towards the 23,000 mark going forward as well. So still playing for that rebound on the Nifty.
Still playing for the rebound. All right, that's the benchmark level. I'm wondering if you have any specific calls on the Bank Nifty, and also what are your picks for the day, Kush?
So Bank Nifty, Alex, is the more interesting play. While it might seem a lot more resilient than the Nifty. I would beg to differ, if someone's got that view, because it's certainly more volatile than the Nifty, but I'm not sure if it's entirely resilient, because you take the time frame and then you can perhaps argue the case either way. So on a weekly or a 1 month basis, perhaps the Bank Nifty has outperformed. But if you take a 3-month perspective, then the Bank Nifty is underperformed. So I'm not sure of that resilience of that outperformance on the Bank Nifty. As I said, depends on the time frame. However, here too, what you've seen is that the downside is for now restricted to that 48,800, 48,700 kind of level. The 20-day moving average is acting as a resistance, and the PCR has again slipped to 0.75 level. So for me, there is a rebound trade to be had. But what I would prefer for Bank Nifty is to buy closer to the support zone of 48,800, 49,000, where the risk reward ratio becomes attractive. Because at the moment, the 20-day moving average of 49,400 becomes a resistance, and then you've got resistance around the 49,800 mark. So closer to the support zone of 49,000, 48,800 is where you go long on Bank Nifty. As far as stocks go, given the texture of the market, it's a long and a short kind of a mix. Indigo, this stock has done rather well over the last couple of sessions, broken above the 20, 50 and the 200-day moving average, sustained above that yesterday. So a good closing. 4,600, 4,700 are your targets. 4,400 is where you place that stop loss. On the short side, I've got City Union Bank. Practically a one-way slide for this stock from those 180 levels, and even now no signs of abating. So from a near-term perspective, you're looking at targets of 153 and 150 with your stop loss around the 159 mark.
Okay. All right. So there's a sell on City Union Bank. I'm just wondering, in the metal space, Kush, if there's anything that you're seeing, because this entire pack yesterday, and one of them, of course, was APL Apollo. Neeraj tells me there is word of a price increase that they've taken in their products. But I'm wondering if there's any plays there, if there's strength that builds in heading into today as well, Kush?
Glad you point that out, Alex, because metals is one play that we've discussed over the last couple of sessions, and the two stocks that we've liked in this space have been JSW Steel and Hindalco. So JSW Steel we discussed just, I think, 2 odd sessions ago for targets of 990 and about 1,010 or so. And yesterday, it came very close with first target of 990, 987. This stock also has actually made a good base, and contrary to the market moves, it's been moving higher on the back of decent volume. So that is one stock that I like. And Hindalco was a stock that we discussed, I think yesterday or just about day before yesterday. There too, our first target was 635, second was 645. So comfortably above that first target. If anyone wants to hold or initiate a fresh position, you could still do so for targets of 645, 650. So we continue to like this space selectively. Now, as far as APL Apollo goes, we've seen a vertical move in the last 2 sessions on the back of good volumes. Momentum could well continue, but I'll watch out for the 1500, 1510 zone. If that is taken out in the opening, then perhaps the kind of moves that you're seeing could continue. Otherwise, around this resistance zone, some profit booking could come in. Anyway, the stock run up quite a bit from 1300 odd levels in the last 2 sessions.
All right, Kush, thanks so much for that. We've got more stocks to talk about, and we're just a few minutes away from the start of trade. Kush, Aditya, do stay with us, and we'll be back to talk about more stocks with you. Viewers, we have to slip into a very quick break. Just looking like a bit of a dip at the start, 100 points or thereabouts off on the Nifty 50. Stay tuned, we'll be back before you know it.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction And healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Welcome back. You're watching India Market Open, and indeed we are just seconds away from the pre-open rates. At this juncture, you are expecting there to be a bit of a downtick on the benchmark Nifty 50. I would actually be looking at the broader markets very closely based on what we've seen all through the week so far, particularly yesterday and day before yesterday, where you've seen a considerable amount of strength in the broader markets. And in fact, that has been witnessed after a bit of a wobble at the start. So the markets like to give you a little bit of a palpitation and then let you enjoy the run through the races on the broader markets at the very least. The first ticks are not really something that you can take something from, but let's go to Kush just to try to understand how to play some of the strength that you've seen in the broader markets. Kush, enough to give you some positive cues, some confidence to play some of those smaller names, or are you still holding back?
So, Alex, I would depends on the horizon. I would actually start accumulating at this level. Now, what we've seen in the last two sessions in the broader markets, right, is actually more of more of a rebound rather than anything else. Now, we've seen quite a bit of a sell-off in a lot of these names. After that, some kind of consolidation, some kind of an uptick was par for the course. I am not reading too much into it just yet. I mean, of course, I'm also taking heart from the fact that the selling for now seems to have stopped, but I don't think we're completely out of the woods yet. Mid cap and small cap indices we know has been underperforming, especially when you compare it to the Nifty for the last week or month. Take your time frame. But it's more of a rebound rally at the moment in some of these names. But largely, I don't think we're out of the woods yet. So I will be a little cautious before I go out and start making big make big positional bets. But yes, if you've got 12 to 18 month kind of a horizon, these are good levels to start accumulating for sure.
Now, I want Aditya to talk about a short list of stocks. I wonder if any of the FTSE India March 2025 semi-annual review stocks come into the feature, because that is going to be announced today. Right, Feb 21st is when it's going to be announced, post-market close today. Adjustments, of course, take place on March 21st. Now, this review, the flows that are believed to come in, some of the names out there include a 361, wherein possibly about $49 million of flows, which is about 5 times the average daily, 5.1 times the average daily volume. Blue Star, 54 million, about 5 times average daily volume. Fortis, about 65 million. But it is 4.5 times the average daily volume. APAR 25 million and CRISIL about 18 million. So keep some of these stocks, not very large, but interesting. I mean, then there's also Bajaj Housing, IndusInd Bank, BSE, wherein the flows are decent. In BSE, for example, 76 million, but relative the volume is not very high, and therefore the impact may not be very, very high. And therefore, the first list really is the one which makes a difference, wherein because there is just so much in terms of the average daily volume impact that could be seen. This is, of course, remember viewers, as per the all desk of IIFL Capital. But Aditya, you know, some of these stocks, a lot of these stocks have gotten beaten down as well, particularly on the wealth side. Yesterday, we did a piece about stocks which have seen P or rather earnings expansion, but for FY25 and FY26, and yet the P multiples have come off, and wealth management outfits came right out there. Nuvama, for example, today we see 361 might see some inflows as well as because of this FTSE rebalance at some point of time. What's your view on this bucket?
So, Neeraj, real test of the capital marketplace starts now. If we see 2025 with negative returns, you will find a problem in all of these companies. People will start to remove a little bit of money from equity side of it, whereby the margins for a lot of these companies will start to get hit. Mind you, many companies are also down 30-40%. For example, a classic capital play like CDSL is down 40-50%. So I will be very cautious on capital marketplace. If the market does tend to give not so great returns or even negative returns in the last 1 year, in the next 1 year, this whole narrative that retail investors have matured out will get thrown out of the window, and that's where the real test of the fruit will be. Within the wealth managers, Anand Rathi is something that one may keep an eye on, or something like a 361 also looks really very interesting. But again, as I said, I would be very cautious. This will all depend on how markets behave, and from there on, you need to take a view on these.
Okay. There is one stock that we spoke about at the start today, and Aditya, this is Narayana Hrudayalaya, the hospital stock. What do you make of it? It's announced another hospital in Kolkata, but it's going to take a little while for it to set it up. Did you look at the fine print post Q3, and what are the prospects that you see?
I have not been able to have a look at the results, but I am very positive on Narayana Hrudayalaya. The work they are doing within the hospital space is really very good. Now they've entered the health insurance space as well. There also they are trying to do something really very good. So I will be very positive on the stock within the hospital space. Narayana and Apollo will continue to remain my topics.
Narayana Hrudayalaya and Apollo will continue to remain the topic. Yesterday we had Aditya Khemka, who looks at healthcare very closely, speaking about how hospitals are his top bet as well within the whole healthcare space. So bear that in mind. You know, just before we get to the brokerage call of the day, Kush, very quickly, 45 seconds if you can, because it's 9:05 already, and then we'll do an extended conversation. But do you like any of these hospital stocks?
I do, Neeraj. In fact, the two picks that we've discussed just this month, one of them has been Narayana Hrudayalaya incidentally, and the other one has been KIMS. And yes, I do concur with Aditya that going forward, I think hospitals will be the play to look at in the whole healthcare space, even though the price action is suggesting so.
Okay. On to the top brokerage note for the day. Elara Securities initiates buy on Adani Energy and sets the target at 9:30. Now, Mihika is a pretty busy morning talking about all of these initiating coverage reports. Mihika, one more.
Yes, one more, and that also in the energy space. Seems like the growth story was intact. It was the valuations that were the concern. But now we have Elara, which has initiated coverage on Adani Energy Solutions with a buy rating. Target price is at 930 rupees, which means a 39% upside potential to the previous closing price. They expect the company to post robust growth in their transmission business as well as their smart meter businesses. And they do expect the transmission EBITDA to double to 7,600 crores just by FY26. 2027, and the new project pipeline, which are the 5 new additional projects that they have won after their recent fundraise, this will add 7,000 crore to the EBITDA as well. They also see growth potential in their Mundra Discom, and their smart meter acts as a key catalyst for Adani Energy due to the 17% market share the company holds, as well as the 85% EBITDA margins that it does make in the business. Lastly, it does expect the EBITDA to grow at a compounded annual growth rate of 26% for the counter, and the EPS to grow at a 29% CAGR, and both of these estimates are for the period FY24 to FY27. But they have mentioned 2 key risks. One is higher competition in the space and the need for timely project execution.
Okay. All right. So that's the view on Adani Energy. Any view here, Kush? Adani Energy, 681, 682 on the ticker right now. What are the prospects on the upside?
So, Alex, I think the first resistance for this one will come in close to the 720, 725 mark, and once that is taken out, perhaps even a 770. For now, the price action has been, rather muted, and I would actually look for a support zone which comes close to the 630 mark. So as long as that is defended, the stock could consolidate and then perhaps attempt a rebound. But for me, this is on that wait and watch list. On the upside, as I said, 720 and 770 are the key levels to watch for.
Okay, it's 9:08 now, and the pre-open rates have settled. I'm interested in seeing if indeed the downtick is as severe as the implied open was suggesting. Maybe not, and therefore, well, it's looking okay. The small cap index is down 0.1%. So yet again, and praying for that, there is a day of outperformance. And the reason I'm saying praying for that, frankly, is simply because that space has been so badly battered and bruised that it's good to see some green on the screen when it comes to that particular pocket. So bear that in mind. Certainly something that you want to keep an eye out for. Just a couple of names that I want to see. One is, of course, Suzlon, the big call. Remember yesterday too, I think the stock had a bit of an uptick. For now, looking flattish. Let's see if it has some uptick or no. CIE Automotive has reacted negatively to its numbers. So that's the other one to keep in mind. And APL Apollo, which had a big day in trade yesterday, likely to start off positively on those reports of those price hikes. Actually, Aditya, coming on APL Apollo, had a breakneck rise from post-COVID lows and did remarkably well. The last 12, maybe 18 months has been lying completely low. Numbers have been okay. Stock price hasn't moved. Now there is a UBS note which says that they might meet their guidance in Q4, EBITDA guidance easily, because they're taking some price hikes. As Alex pointed out, they would take a price hike if there is a demand. Otherwise, this economy doesn't permit people to just take price hikes just like that, right? How do you view APL Apollo?
Very, very positive on the company. It is a story of the promoter. The promoter has great vision for the company over the next 5 to 10 years. Of course, when the stock will have a breakneck rise, it will also consolidate for a period of time, and then it will move on. So I think the last 1 year has been a year of consolidation for APL Apollo. They are investing in increasing the capacities, and this price going down or price going up is just part and parcel of life. Mind you, they have the ability to pass on these price hikes whenever they get it. So in my opinion, this year has been an opportunity to accumulate APL Apollo, and I'm very positive on this.
Okay. Kush, I'm not asking you on APL Apollo, maybe you can include that, but I also want to talk to you on some of the cable stocks, right? Because if CapEx is indeed coming back, then cables are the first proxy, and the stocks have corrected. Polycab from 7,500 odd is 5,500 or 5,600 odd, whatever it is. Some of the others like KA, etc., have come off too. What are your thoughts here on these stocks?
So again, Neeraj, if you see the price action, what we're seeing is more of a rebound from, the oversold territories that some of these stocks have witnessed. Almost all of these names, at least the ones that you've mentioned, Polycab, KEI, both these stocks are pinpoint at the 20-day, moving average, which is the first litmus test. So for me, while the risk-reward ratio remains attractive, I'm not sure if in the near term, these might continue to see the kind of up move that we've already seen. I would want to see some more follow through on the price action that we've seen in the last 3 to 4 years. So, for example, something like a Polycab 5,800, if that level is taken out and sustained, then you might see a move towards the 6,000, 6,100 mark. On a KEI, 3,750, 3,800 is the key level to watch for. You cross that, and then you're talking about 4,000 kind of zones. So while yes, the risk reward ratio is quite favorable, and we've seen good moves in the last 3 to 4 sessions. From the very near term perspective, and I mean like a week or so, there could be some profit booking or rather fresh short selling that might come in some of these names. So I'll be a little watchful.
Okay, a little watchful is Kush on that entire pack. Let's talk about Cipla, and there was a significant update on the leukemia drug which they've gotten US FDA approval for. Aditya, significance of this, and this is essentially what it's called is, okay, I'm looking for nilotinib. Have you tracked this? Dr. Reddy's Laboratories, as I understand, already manufactures this.
Alex, for Cipla, this drug is positive. However, the pipeline for Cipla continues to be really very strong in the US with respect to the off-hand drugs that they're launching over a period of next 2 to 3 years. From a stock valuation perspective, the stock is not really cheap; it is expensive. The outlook looks positive, but I will be cautious on all US generic companies. Pricing pressure in the US has subsided for a short period of time, but this doesn't mean that the pricing pressure will not come about. Only those companies which continue to keep innovate and get more and more drugs, they will win. One of them is Cipla. Cipla's pipeline continues to be really very strong. So on any correction, I will like to add. Otherwise, I will be cautious on this.
Okay. You've seen quite a bit of chop and churn in the pharma space because of the conversations you've had in the recent past about tariffs and everything else. But considering that the consensus view at this juncture seems to be that there's not going to be too much of an impact, Aditya, any opportunities that you see? Would you go long on any one of these?
Of course, as you rightly pointed out, President Donald Trump has tweeted out that he will put tariffs on autos and pharma particularly. So within this space, then you have to be really very careful. I will try to avoid all generic companies with a huge exposure to the US. They are the ones who are going to get massively hit. I will tend to invest in CDMO companies. CDMO companies would be something like a Syngene or a Piramal Pharma, which is going to benefit from their manufacturing facilities in the UK and the US. Something like DV's Labs is something that is really very interesting and has done pretty well over the last 1.5, 2 years. So those are the plays. And within the domestic diagnostic space, something like a Krizna Diagnostics is doing extremely well. Although this quarter the growth was soft, but they also look interesting. And then finally, as I had said before, hospital space is really very interesting as well.
Okay. We'll take Kush's call post-market open because we're just 2 seconds away. Thanks for that, Aditya. Thanks for that review, but stay on. But here's how the markets are starting off this Friday morning. We are just 0.2%. So it's actually not as bad as the implied open was suggesting. 1/3% lower for the Nifty Bank. I wonder if IT is outperforming. No, we have the Nifty Bank. Let's get the IT index out here. In the green, by the way. Let's get the mid caps and small caps and see if they are relatively resilient. Actually flat for the mid cap in the green, interestingly. Small cap index in the green, but essentially flat, but not as low as the Nifty and the Sensex, which is a great sign. Let's get the heat map up on the screen and tell you what's moving and what's not. A lot of red, very little green. Okay, the standout is M&M yet again. So after a day of recovery, 1.5% today. But remember, this will now keep traders on tenterhooks because yesterday they've seen a very sharp over 5% recovery in Mahindra and Mahindra. So bear that in mind. ICICI Bank, BPCL, Dr. Reddy's, Ultratech, Wipro. I mean, no big news makers per se. The standout more, like I said, is Mahindra and Mahindra. On the other side, Cipla is a news maker, up 1%, small piece of news, but in news nevertheless. Their Navi Mumbai facility was audited for GMP practices by the US FDA and 2 minor observations on the Form 483. So I think all of that, in addition to the product launch, maybe helping Cipla. Shriram Finance up 0.75%. Aside of that, maybe the metal index is looking okay. Tata Steel, Hindalco, for some reason Adani Enterprises is a part of the metal index, but that, etc. So all of those are looking okay, but nothing too dramatic. So, well, news from the center, Alex, as I give you the pitch report, is that M&M is down And well, Tata Steel and Metals
Let
are
me
doing
tap the
okay.
pitch and see how it's looking. And it's not looking too bad at the broader end of the spectrum. So maybe you can talk about the outfield being good and supportive, and it's not too slippery and all of that. We're talking about cricket references here, of course, but 0.5% gains. In fact, is looking very good for the broader markets in the context of what we're seeing at the start for the benchmark Nifty 50, small cap index as well, trading with gains of about 0.7%. So what you've seen over the last couple of sessions, where you see a sudden and sharp spurt at the start after a little bit of a wobble or maybe a slow start. We're not talking about a Sehwag start, we're talking about a more measured start, I guess you can call it that. But let's talk about the sectors as well and what's moving and what's not. And that picture is going to, there you go, metal on the top. Metal and realty on the top doing reasonably well. Or has that shifted? Yeah, metal is up over 1%. You have realty that's recovering up about 1% or so. Auto is down in the dumps, down about 0.6%. But remember, yesterday we started more or less like this, and as Neeraj pointed out, you could turn very sharply based on the moves in a few important counters. Let's talk about newsmakers though. And Action Construction was something that I put on my list because this is, of course, a little over 400 crore rupees is the size of the contract, but it's a very large order. It's not doing too much. It's actually down about 0.6%, but it's still a thumbs up. And remember that a few of these stocks react through the course of the day and they could turn quite sharply. We've seen this occur over the course of the last couple of days as well. JSW Energy, and there are a few brokerage upgrades or initiates that have come through. MS is seeing a 16% upside. The stock is reacting up about 2.5%. Remember, the stock was up 3% yesterday as well. So quite a sharp move. I wouldn't be surprised for the week that it's gaining quite substantially. KEI Industries, again, it's a brokerage update and it's seeing a very positive uptick today, close to 4% upside. Right now, MS saw 17% upside based on yesterday's closing price. Suzlon Investec has initiated. Again, you have a positive uptick here. Remember, this is one of the stocks that has beaten down. Neeraj pointed out 50 rupees has been defended. It is at 56 or thereabouts. Some might say that it's a bargain based on how it is gained, but then remember that the multiples are not cheap even as they stand right now. Narayana Healthcare, we spoke about this. This is a stock that is up about 1% or so. It is investing in creating more capacity. Of course, that is going to come through on stream only in a couple of financial years, but nonetheless, it is a positive. Cipla, we spoke about this. I'll very briefly touch upon it. Let's see if there's gains. Okay, it's cooled off just a tad bit. Now trading with gains of about 0.75%. Thumbs down. There are a couple of stocks that you should watch out for on earnings. One of them is Sanofi Consumer. And this is a stock that is down about 2% or so on the back of earnings. The PAT has fallen as much as 34%, and the margin has actually contracted in the quarter gone by. And finally, you have CIE Automotive, which is in the auto anch space, which is down about 3.4%. The revenue has declined more than expected, and you have the net profit, which has risen, of course. But the fine print of that number looking a little bit negative, Neeraj.
Yes, indeed. In fact, let's take opening thoughts and then mark some more stocks. Kush Bora, we didn't get a chance to take your top call in the morning, but what are your opening thoughts on the resilience of the small cap index, which is now up 0.87%? You know, you accuse me for being thrilled about it, but I am, because portfolios have been bleeding. I mean, people have been really, really upset. The third day on a trot now when the small caps are outperforming the large caps. I'm very happy. What are your opening thoughts, Kush Bora, and any stocks that stand out for you?
Sure. So, as part of the opening thoughts, I think there were fairly overcast conditions before the play started, but we've had a fairly steady start. Let's hope we sustain through the middle, and I think, like we've done in the recent past, I think we can aim for a strong finish. That's view on the markets, not just the cricket, the Indian cricket team. But yes, just like you, I'm also very happy and excited that the mid cap and the small cap space that was seeing some kind of a rebound is continuing. I would like to see some of it going through the next week as well, and that would perhaps confirm some kind of a near-term bottom in this space after the kind of rubbing that it's seen in the recent past. But as I said, still remain a little cautious because right now we're just rebounding from those oversold territories in a lot of these names. Now, the one stock that stands out for me, of course, Hindalco is one stock that we've discussed in the opening as well. Doing rather well. Second target of 645 achieved. I would suggest if anyone's got this position, please continue to hold with a trailing stop loss now at the 640 mark. Markets are steadying on, and the stock is actually hitting the fresh high for the day, even though it's been just 7 minutes. So continue holding on to Hindalco. But Indigo, that is also one stock that had a steady start. I think for targets of 4600, 4700 with a stop loss around the 4400 mark, as we discussed in the opening, is also something that can be considered for a long trade.
Okay, by the way, some brokerage calls which are really moving, and either we'll get in Rucha to talk about this Macquarie note on LTTS, or we'll get in Somit or somebody to talk about the one from CLSA on Bandhan Bank. I think we should pull up Bandhan Bank as well. And as Alex pointed out, there is a Morgan Stanley note on KEI. All of these three names are up over 3%. So very strong starts. In fact, KEI is up 5% now as we speak. So three big ones and three stocks reacting. Now, first, let me try and see if there is a trade on any of these. Kush Bora very quickly, and then we'll get to Aditya on the fundamentals. But Kush, any of these stocks on the charts?
LTTS, this is one stock that can be considered, on the upside with the targets of 5,200 and about 5,300. I'm just rounding it off. And yesterday's, or rather the opening low, close to the 5,000 mark, acts as your stop loss.
Okay. Interesting view on LTTS, but Action Construction, it has recovered from the low point. It's still trading with cuts of about 0.2%, but I'm wondering what Aditya has to say. Aditya, do you have a view on this? And if not, why don't you comment also on the construction equipment space? Any opportunities there? Because you're seeing this as a barometer for the infrastructure play for the construction space as well. Do you see that picking up in the near future?
Well, Alex, ACE has done pretty well over the last about 2 to 3 years. They are the leading crane manufacturers in the country, and the order flow for them has been pretty strong. Mind you, the stock is not too cheap; it is expensive, and I would not tend to take any positions in this company as of now. Any correction towards 900 or 1,000, that could be a good opportunity, but not now. So within this space, there's Action Construction and there's Samvi Movers. Samvi Movers has taken a massive correction because their business is not performing as well as what ACE is performing. So right now, tend to avoid this space, but ACE has to be on your watch list. ACE will continue to do extremely well over the period of next 3 to 5 years as well.
Okay, but what would be your, so you're saying that it's not cheap. What would be a good level then, according to you, where it becomes interesting? Because if I'm looking at trailing, it's currently at very close to 40 times, right? So therefore, at what level do you see that it becomes more attractive? What is fair value according to you?
So as I said, anywhere between 900 to 1,000 would be good levels to accumulate. 20 to 30 times multiple is the maximum multiple that I will want to pay for this kind of a company. Mind you, this is dependent on the economy and how the government spends. If there is any slowdown in the government spending, this is the first company that is going to get affected per se. But they have done pretty well, although over the period of last 3 to 4 years. So 900 to 1,000 would be a level that I would keenly watch for a SIP type accumulation onto this stock.
Okay, so LTTS is something that we've been speaking about. We marked it and it's up and about. It's up about 4% or so, and this is on the back of Macquarie's double upgrade. What are they saying, and why is the street so bullish based on what they're saying as well? Rucha is joining in with the fine print here. Rucha, what are they saying?
Yes, so Macquarie has double upgraded the stock to outperform with a target price of 6,530 and an upside of about 33%. Now, Macquarie says that it had earlier downgraded the stock to underperform in the month of April this year because other fast-growing companies were available at cheaper valuation with the likes of Persistent and Coforge. However, now LTTS is trading at 11% discount to Coforge and 30% discount to Persistent. Remember that Persistent was one of the fastest-growing companies in CY FY24, and that is why its valuations has been shot up. But therefore, Macquarie believes that though still the growth can be lower than the peers, valuations are very attractive for LTTS, which supports its double upgrade. They also expect a growth pickup in plant and engineering margin to benefit from tailwinds, and sees a faster growth than before because of its recent acquisition of IntelliSwift. And therefore, Macquarie is bullish on LTTS. But if you look at the last 6 months share price rally, we see that the LTTS has underperformed by 6%, and over the last 1 year, it has given negative returns of about 3%. So this is what we have on LTTS of about 4.5% in today's trade.
Aditya, view on LTTS specifically, margins to benefit from several tailwinds. If I remember correctly, the Q3 print was everyone was worried about margin erosion. Are you seeing this positively?
So LTTS has been one of our top picks within the mid-cap IT space. Their exposure to ER&D and as well as to EVs and 5G technology is something that will pay fruits for the company over the next 3 to 5 years. So we are positive on the company. However, in the near term, tariffs is something that you have to worry about. Slowdown in the EV market across Europe and US is something that you are worried about. So I am positive on the stock, but not on the not in the short term. In the medium term and long term, I am positive.
Okay, Kush, I know that you probably got a view on this, but JSW Energy now up about 3.4%, and this is on the back of a sharp gain in trade yesterday as well. What are the levels that you would watch on the upside? Is there still a trade here?
There looks like there is a trade. I'm not really as perturbed by the 4 sessions of up move that the stock has seen from the 420 kind of mark. The risk reward ratio is quite favorable, and just today it's crossed and sustaining above the 20-day moving average, which is at the 475 mark. So with the kind of move that the stock has witnessed on the back of good volumes, I think not a bad idea to enter into it now as well. For a positional kind of a play, I think the targets on this one are 510. Once that is taken out, you're looking at a 535 kind of a level as well. While a support will come in at the 475 mark, which is the 20-day moving average, a more meaningful one comes in at the 460 mark. So take that as your stop loss. The momentum is just picking up on this one, and as I said, the first litmus test of the 20-day moving average being crossed, that's being taken out. So continue to ride the momentum if you've got that lower levels. If not, you could still continue to hold 530, 535 are your positional target.
Aditya, on the power, I know that I asked you about the power generation companies specifically, and I think the point that you were trying to make was that, and it was in the context of EVs, right? But I don't think you told me what you like in the space. So would you play it based on the renewable energy producers? Would you play it based on the traditional power guys, JSW Energy, Tata Power, or would you play it on the transmission and distribution companies, smart grids? How would you play this place?
Topic will continue to remain IEX. I am firm believer that IEX will do pretty well over the period of next 5 to 10 years. Next, on the renewable energy side, we've seen correction in companies like Vare or Premier Energies. However, those stocks are still not cheap. They're still expensive. And any tariffs from the US will mean those stocks would really go down. So from my perspective, I'll keep a close eye on companies like Vare or companies like Premier Energies. And within the transmission and the distribution space, Tata Power it continues to remain our top pick. Their investments will bear fruit over the period of next 3 to 5 years. So these are the certain amount of stocks that we are watching for. But IEX will continue to be my favorite.
IEX, you're not worried at all about the market coupling, about the pressure on maybe on pricing pressure? Of course, nothing has come through yet, and you're still talking about a company that has 80 plus, 85% of the share in the market.
Alex, market share loss is a given. So IEX market share, I conceptualize over the period of next 5 to 10 years will come down to 50%. But 85% of 100 and 50% of 1,000, you'll always see 50% of 1,000 is much higher. That's the first point. Second point is on market coupling. We have BSE and NSE. You don't expect to trade on BSE and NSE with a lag of 10 minutes. where the courts will go to a third party and the third party will decide what will happen. It is impractical and market coupling has not been applied to any exchange in the world. So market coupling, if it comes, has to be in some sort of sense where IEX will continue to remain a platform for a price discovery. The critical job of an exchange is to give price discovery, be it in stocks, be it in FNO, or be it in electricity per se. So all this, I call it halla around market coupling. I don't think is going to materialize. It has not materialized over the last 1.5, 2 years because what the government is proposing particularly does not make sense and is not viable in the longer term to produce power market in India per se. So yes, IEX will continue to lose market share. I conceptualize their market share to be down to 50%. However, market coupling is not something that is viable in its current form. It has to be modified where IEX will continue to be the market leader in price discovery for power trading.
On that note, gentlemen, thank you so much, both of you, for joining in today and giving us your thoughts. Really appreciate your time. Have a great weekend. Well, we are just getting started, though, on the show because the corporate conversations take over now. And top of mind for everybody is tariffs and reciprocal tariffs. So the next two companies that we have are essentially the ones which, or all the three companies that we have today are kind of in the, you could argue, in the eye of the storm or in the center of the conversation for sure. But we didn't get a chance to talk to Mr. Jalan of Ramakrishna Forgings after the numbers either. So good to get him in right now to try and get an industry perspective and a sector perspective around tariffs. And then, of course, their own numbers as well. Mr. Jalan, good morning and thank you so much for taking the time out. Neeraj here. Good to be talking to you today, sir.
Good morning, Neeraj.
How do you think about this whole conversation around tariffs, around the optionality of a lot of companies, global companies? Okay, Mr. Jalan, can you hear me? Okay, I think we just lost that link. We'll just try and get that going. But keep in mind, for RK Forgings, the one is, of course, what is his view as an auto ancillary about what could this mean for the auto space? That is one. Two, we'll of course talk to him about the numbers because after having a very heady time, Q3 was okay for RK Forgings. Revenues were up about 7 or 8%. Margins steady at 21.5% and net profit up 14%. Now, given the state of affairs of a clutch of other mid-cap companies, maybe they did really well. The question only is, can this pick up? The last point that I would want him on, okay, if we have him, okay, minute more, yes. The last point that I do want to talk to him about is the whole, if I can't, I won't call it a pullback, but a bit of a clawback into spending on defense and railways. And does that impact some of the plans that RK Forgings had embarked upon? Mr. Jalan, can you hear me, sir? Okay, I think I'll just get him. I don't know, sometimes technology plays its tricks, right? But let me tell you what they did, right? So Q3, like I said, their revenues were up about 7.9% at 1,074 versus 996 crores. EBITDA margins stood at 21.6 versus 22.1. And the net profit was up 14% at 99 crores odd versus 86 crores. Now, the other question is that for the last few years, from FY21 to 24, their export revenues have inched up significantly from 517 crores in FY21 to 1482 crores in FY24. For FY25 9 months, their export revenues were about 1172 crores, so slightly lower. Now, can Q4 be very strong and mark a substantial increase over this 1172 crores? Remains to be seen. But that is something that we certainly want to ask him about. The other aspect, of course, is the fact that North America revenue share was up while Europe share is down. And considering what Europe is going through, will RK Forgings continue to face that? That's the other key thing to keep an eye out for. There are, of course, nearshoring, I presume, because they've acquired a company in Mexico, the same as named as Ramakrishna Forgings Mexico SA. And you know, once the warehousing operations begin in Q4, the question only is what is it that does for itself or for the company in FY26. So I think all of those questions will be kept in mind. While we wait for Mr. Jalan to come back, let me get in my colleague Anushi to talk about yet another one more stock that is extremely buoyant today, and that's KEI Industries. Morgan Stanley has a note on it. Anushi, why is Morgan Stanley bullish on KEI?
Right. Morning, Neeraj. First of all, KEI Industries for Morgan Stanley has initiated coverage here with an overweight rating, and this is with a target price of 4,391, which implies around 18% of an upside. Firstly, they are very bullish on the cable and the wire franchise business of the company, and it expects the business model to improve going forward as well. Other than that, there are multiple business growth drivers for that, which includes the future of energy theme, which the company is focusing on, that could drive the performance of the business going forward. Exports is something that is expected to improve going forward and should aid the earnings and the margins growth forward as well for the company. We have seen the company talking about their Sanand facility expansion, and in line with that, the step up in this capex to meet the domestic and export demand is something expected to drive the revenue growth forward. With this, Morgan Stanley expects around 23% of an earnings CAGR growth, and this is expected between the fiscal year of FY25 to 28. So this is the overall key reasons why Morgan Stanley is bullish on KEI Industries, and they see a 18% of an upside.
Okay, Anushi, just one question, and again, I'm throwing this out of the dark at you, but is the dip in valuations one key reason also which prompts this kind of now? Because I've seen a clutch of brokerage notes today, Anushi, wherein the brokerage has not changed the target too much, but it's just that the stock had corrected so much that the valuations become reasonable, and that's why they turn bullish on the stock. Is that the key reason here too?
Right. So if we see a couple of these counters, while we have seen not just for capital goods companies, for defense and all that as well, now they're giving a bigger upside for this, and they have cited that while the correction is one of the reasons, earlier if we see margins for something like KEI Industry has remained in focus and has been on an improving trajectory. That is also something that could lead to this earnings CAGR growth, and hence with now the correction taking place, it's something that the analysts are now more bullish on, and that's why we are looking at this target, and why the analysts are bullish on these counters as well for now.
Anushi, thanks for that. Anushi, sometime next week we should try and do a piece on real estate as well, and or defense, and try and see what is it that the companies have done in Q3, what is the ask for Q4, and what could that mean. So bear that in mind. Okay, just a quick word on the markets before we talk about yet another stock which is very active today, and that is Bandhan. So the dichotomy couldn't be more stark. The Nifty 50 is 0.12%, banks are down 0.3%, small cap 250 is up 1.35%. It looks like third day on a trot, wherein the small cap index will heavily, and I repeat, heavily outperform the Nifty. Now, one of the reasons why this could be happening is that there is steadiness in the market, and therefore people have some confidence at the broader end of the spectrum. The other reason is a lot of brokerages notes are coming out. Now, we told you about KEI, we told you about LTTS. The LTTS is not exactly a small cap, but more a mid-sized company. But the third one is Bandhan Bank today. And the note has just come out this morning that CLSA, who have upgraded Bandhan Bank to a high conviction outperform. The stock is duly reacting. What's the rationale of CLSA? Somit Johnson with that. Somit, this stock has not performed, right?
Yes.
Big time underperformed. What is the rationale that CLSA is giving for this high conviction outperform?
Well, the only rationale that they are seeing, or the main important point, is that they're expecting the MFI issues to get sorted in the next 1 to 2 quarters. In fact, they have quoted legendary fund manager Anthony Bolton, and they're saying that he's had mentioned that most money in equity market is made when things go from bad to less bad, and they are expecting that the microfinance space will go from bad to less bad in the next 1 to 2 quarters, and from less bad to normal from the second quarter of FY26. And that is the key rationale behind this upgrade that the brokerage has done, and the return potential, and that they have maintained the target price at 220, which suggests a return potential on Bandhan Bank to around 61%, and that is something that must have got the street very much excited when it comes to Bandhan Bank. They're saying that Bandhan Bank is a play on MFI MFI recovery cycle with gradual migration to secured loans. That is the bank's stated strategy going forward. They're also saying that the new management team, they do not expect any legacy baggage, so not much of a provisioning issue might come in for Bandhan Bank going forward. They're saying that Bandhan Bank is also performing better than its peers in the MFI cycle, which is also a key and important point coming in for Bandhan Bank. And lastly, they're saying that they are gravitating towards secure lending, which I mentioned earlier, that is the management strategy going forward, and there won't be much need of capital for the bank for this strategy going forward. So no equity dilution coming in for Bandhan Bank with the right strategy going forward, and valuations obviously have become cheap given the fact that the stock has been beaten down.
Interesting. So again, a common thread, right? One of the reasons is that because the stocks have fallen so much, a lot of brokerages are now finding merit in changing their stance because valuations are in favor.
Yes, it's because of this fall in share prices. It's the upgrade that is coming in from outperform to high conviction out.
And that's, Swami, one last thing, and then we'll go to Borosil Renewables, of course. Mr. Kheruka is waiting, but that's a thread that I'm seeing across a lot of brokerage notes, right? That valuations have become comforting and therefore the stance is changing.
Right, because after Q3 results, they had come out with their final target price after factoring the results and the outlook as well. And post that, we have seen the sharp fall coming in the markets. Hence, this upgrade coming in for most of the stocks.
Very valid point. Sumit, thanks for putting that out across. And, that's the view of CLSA on Bandhan. 4.2% higher today is the stock. Now, I wonder if Borosil Renewables is up yet again. Should pull that stock up. In the green, was up 5% for the last couple of days. Now, keep in mind that one is, of course, all that's happening around earnings for these companies, and two, of course, the duties and the whole, how do I say, developments, if I don't call it uncertainty around policy and what it could do to businesses. Mr. Pradeep Kumar Kheruka, Chairman of Borosil Renewables, joins us right now on the show to talk about all of this and more. Mr. Kheruka, good having you. Thanks so much for joining in and taking the time out. Now, before I get to the individual brass tags, just want to understand from you, sir, does this whole chatter around tariffs, duties levied by US for imports and exports, etc., impact the sector meaningfully? And does it have a major impact on you as a company as well?
No, it does not. And the reason for that is that the US has imposed tariffs on imports and exports, and they are not solar industry is not very important under the new regime. Well, we were never exporting anything there anyway. There's nothing of great significance. So it doesn't really matter to us, to answer your question.
Okay. Now, having said that, we did get a chance to talk to you post your numbers as well, of course, and there were reasons, of course, you were in a silent period, if you will. I would love to understand how you've thought through for the first 9 months, and especially Q3, wherein you had, from the reported numbers perspective, a tough quarter, Mr. Kheruka. Some reflection on that, and what is in store for Q4, arguably for 2025?
So there are three factors to be considered while looking at my industry or any other industry for that matter. First of all, how well is the industry performing technically? Which means, is it going along on full production? Is the production suffering? So technically, or are you up to speed in terms of production? In that, we would score a 9.9, I would say, because we've been producing at full tilt and we've been selling everything that we produce. So on that, as far as the sales are concerned, there's no issue at all. Second is the question, what are the prices? And the prices had dropped in the third quarter because the Chinese have been reducing their prices with effect from about April this year. They were already dumped to begin with, and then they reduced it another 38% between April and October, because 10% duty was coming, so they had slashed it by another 18%. So that's what was going on. Now, the other thing that happened was that the freight rates from China to India were quite high in the period from July to September because of the attacks in the Red Sea and so on and so forth. There was a shortage of shipping. and so we had higher freight rates. So the landed price of Chinese glass was a lot higher. From October onwards, the freight crashed. So the FOB prices were severely discounted. Secondly, the freight also came down, and therefore the landed price was really, really low. And that is the reason why we had a lower selling price, and therefore lower EBITDA, lower margins. The new duty was announced on the 5th of December, which means all the imports that were already in the port but not cleared were subjected to the new anti-dumping duty. However, as far as the company is concerned, as far as we are concerned, we always have subsisting contracts for at least a month ahead. And so we were already sold out for December. And the prices at which we had sold were indeed the old prices, which are competing with the very dumped prices. So December did not give us any joy in terms of the numbers. The things have changed from January. We are significantly up from January, and we are continuing like that. So going forward, we are back into a position where we are in a position to have good profits and be able to plan for expansions as well.
Okay, so just explain to us, Mr. Kheruka, this whole policy shift via ADD, right? And what is the key monitorable ahead? Because from what we glean right now as well, that while there was this whole 10% BCD on solar glass imports, but apparently there is no impact because there is a cut of FOB 18% on the FOB export prices of imports by the Chinese. So at times it gets confusing for us to figure out the move taken and the impact on you or the space or the entire sector, if you will. Can you talk to us a bit about the recent policy shifts?
Sure. In fact, it's very interesting. The recent policy shift has introduced a reference price. So the concept of a reference price is about now, and based on today's exchange rates, about 58,000 rupees a ton for the glass. And if the glass is imported at any price below 58,000 rupees, it's actually in dollars per ton. Then the difference between the landed price and the reference price will be the amount of duty that the importer shall have to pay. So this is a sliding scale of duty, and the idea is to bring it up to a certain level. In the event that the landed price is 59,000 rupees a ton, let's say, or even 58,000 rupees, then no duty will be applicable. So what it does is it caps the price at this much. So the domestic industry, which is our user industry, is not impacted beyond a point, number one. And number two, what it does is that it gives us a chance to get a respectable price, which is good in terms of long-term growth and in terms of the IRR that any investor would like to see before he invests in it.
Noted. Now, Indian operations, German operations, and others, and the set of questions mainly that come around, at least in terms of interest from investors, Mr. Kheruka, seems to be around German plants and the losses thereof. And when would those reduce? Now, considering the fact that while Germany is a great hub, but it's a country that is going through a metamorphosis, if you will, and cost structures which for a lot of players are seemingly Herculean. I would love to understand what happens to the German operations when the losses come off. Can you throw some light there?
Certainly. So you see, let's begin with the European Union, because Germany cannot do anything independently. The European Union Parliament decreed about nearly 2 years ago, or a little more than that, that all renewable energy that is generated in Europe should be generated, at least 25% of it should be generated from equipment that has been made in Europe. So that was mandating the solar panel to be manufactured in Europe to the extent of 25% of all power generated, which should have been very large and absolutely more than sufficient so far as our German operations are concerned. The thing is that the last German government was a coalition government. And in that, they had the Liberal Party, which did not see eye to eye with the two larger partners who wanted to implement the policy. The Liberal Party stuck to the point that they believed in a free competition and so on, and so they would not implement the EU policy. This led to the closure of 3 Volkswagen plants in Germany. And of course, it led to the closure of all renewables. So what that did was the chancellor fired the finance minister, who was from the Liberal Party, and called for new elections. The new elections are to be held on Sunday, the 23rd of February, which is just 2 days away. So we expect to see by Sunday evening the completion of voting, and by Monday evening we should have some idea about what the Germans have elected. Based on opinion polls, the party which is leading the pack is the CDU, that is the Christian Democratic Party, which is a right-wing conservative party, which has been around since after the war. Very respectable and very thought-out policies which favor manufacturing, job creation, and things like that. The other party, there are a couple of other parties, but the other one is the Social Democrats, who seem to be having about 15% of the vote, 30% for CDU. And therefore, both of these parties are very pro-manufacturing, and we hope that they will implement the EU directive. So we see good times ahead for the German unit.
But the losses reduce in the next 1-2 years? Possible to say that, Mr. Kiruka?
If the production starts, the losses start declining immediately.
Okay, naturally. So but there's no certainty as of now that you have there.
So as we speak, there is no certainty, but we should have some visibility maybe sometime in April.
Okay. Lastly, a few days ago, I got a note from one of the brokerage houses which is speaking about your expansion plans in India. I believe some plant or some expansion happening by September next year or thereabouts. And the blue sky scenario on targets on EBITDA, I'm not going by revenues per se, Mr. Kiruka, but on EBITDA as well, are very, very high. And I was looking at your numbers. Your March 24 EBITDA, correct me if I'm wrong, console was about 54 crores, which came down, by the way, from 143. The trailing 12 months numbers are also not looking that strong. But do you reckon in the next 4 to 5 years, your operational metrics and your EBITDA in particular could actually go northwards of 700, 750 crores, maybe even nudge 4 figures? Is that a possibility?
See, the quarter that we are in currently is already showing signs of that.
Okay.
So we are looking at a healthy. We're looking at healthy bidders. I never make forward predictions or projections, but I'd say that already with effect from January, we've started margins are about 30%. So that's pretty reasonable, I would say.
Oh, okay. So if you clock in 30%, sir, and if I look at your quarterly numbers, since whatever the last data that I have, the highest was probably in 2022 mid, which was 25 and 28. Since then, it's been single digits. You're saying you're going back to 30%, and that might be sustainable, you said, you reckon?
It should be.
Very interesting. Okay, Mr. Kiruka, we wish you all the best for this and more. And it'll be lovely to talk to you post quarter 4, or rather post FY25, to get a gauge of how well the quarter has gone and what's your confidence for the year ahead.
Certainly. There's one last thing that I would say.
Please.
That we have a lot of catching up to do.
Yeah.
We have solar modules at the rate of 75 gigawatts per annum, and we have glass, which is only at the rate of about a little more than 15. So, we need to ramp up our production significantly. We need to have investments, and more people will come into this. Reliance is starting 2,000 tons per day, and so on. So without a return on which an investor is ready to invest money, it will be a non-starter. I think the government has recognized that, and that is why they are, they are supporting the industry.
Great. Looking forward to talk more about this, Mr. Kiruka, in detail as well. But thank you so much for this limited interaction today. Really appreciate your time.
Thank you. Thank you very much.
That's Borosil Renewables. That's quite a comment from the management. 30% EBITDA is not something that they've done in a really, really long time, if not ever. So it would be interesting to see. Now, we've gotten companies which have had a slightly rough quarter 3, so on and so forth. The next company is actually the one which has clocked in their highest ever consolidated quarter 3 and 9 months revenues, adjusted EBITDA and profitability. strong sales volume growth across geographies, I reckon. And by their own admission, they remain optimistic about various geographies that they have their manufacturing plants in. I'm talking about Pearl Global. And Pallab Banerjee, the MD of the company, joins me right now to talk about all of this and more. Pallab, great having you. Thank you so much for taking the time out, and I hope all is well.
Thank you, Neeraj. Looking forward to speaking.
It's great for me to speak to you as well, because we haven't met too many companies which had such a stunning Q3. So tell us what went behind this, and is this, how do I say, for lack of a better word, a trend that you take forward with you in the quarters to come?
Yes, definitely. We look forward to that. As you know, Pearl, we have a global presence. We do manufacturing across India, Bangladesh, Vietnam, Indonesia, and Guatemala. And we do have market across the globe. Like US is still our biggest market, almost about 60% plus goes to US. And followed by the other countries like Spain, UK, Japan, Australia. So these are our markets where we are supplying to the biggest of the retailers and the brands. And yes, we do have our strategy. We have a very strong relationships with most of our, the top customers. We build up a very strong, I would say, strategic and transparent relationships. And that gives us the visibility of how the business will be for the next few quarters.
Interesting. This morning, or rather overnight, Walmart came out and said that even without the tariff wars starting, they are very cautious about how the US consumer might behave in 2025. Other companies like Mercedes have done that, but that's okay. Essentially, Walmart, I thought, was relevant per se, because 60% of your business is US, right? Have any of your clients sounded off the caution around the US exceptionalism that we've been used to for the last couple of years?
Yes, see, the consumer market definitely goes a little bit of up and down. But if you look at US as a overall, especially you're talking about the textiles and garments, that segment has been growing almost about at the rate of anywhere between 3 to 5% annually. And we don't see a big change in that. What happens is which segment, that means what kind of price points the customers are spending money. People won't stop wearing clothes. So naturally, either they go for the best of the brands, or they are a little conservative and go for a little conservatively priced brands. So that's the fluctuation that we see normally in the apparel sector. Yes, there were the few challenge a couple of years back when in US had an extraordinary situation of over inventory. I think that's behind us. In terms of when brands are looking at a conservative approach, or the retailers are talking about a conservative forecast, so that figure, how much does it come down? If you look at that historically, it hasn't moved much. That number remains more or less flat in terms of consumerism.
Okay. The other aspect is tariffs itself. Now, you, of course, have manufacturing, if I'm not wrong, India, Bangladesh, Vietnam, Indonesia, Guatemala as well, which is great for you for nearshoring. I'm trying to understand if indeed tariffs come into effect, and right now it's in the realms of a hypothesis, but allow me to hypothesize and say that there are tariffs which come in. Have you tried to, you would have tried to gauge about what countries might get what kind of tariffs depending on what kind of reciprocal tariffs they might already have in place, or what have you, or the numbers that they have. How does business get impacted for you or for Indian textile sector by and large, Pallab?
So you see, one thing, definitely most of these retailers and brands, they would be buying the goods because US is not manufacturing apparels at this point of time, or whatever they're manufacturing is very negligible. Now, globally, if you look at, there are 4 different, big supply chains, like either you call it, whether it is the Far East, the South Asia kind of, India hub, then you have got all the Mediterranean region and the Central America region. Now, these are the places where most of the garments are made. I'm not talking about textiles, I'm talking about the garments, and which is traded internationally or going into the markets like US and all. So whenever a big retailer or a big brand, they are sourcing, they would divide the sourcing in between these 4 buckets. Now, with the kind of tariff discussion that is going on, or what's happening in the US mind, definitely there will be a discussion about what impact it will have onto these imports. There could be inflation, So it doesn't mean that, okay, immediately the tariff would be coming in and the Trump administration will look for a huge amount of inflation, because most of the retailers and brands would pass off the increase of their expenditure into the consumers sector. So that's something I think is a prohibition factor for tariffing so much of consumer goods. In terms of looking at the areas, what kind of balance of payment or balance of trade, I think that's one of the driver of the tariff in President's mind, which also safeguards it, because most of our apparel gets manufactured across the globe in those countries, where the trade balance, I wouldn't say, isn't so much of a tilted against the US numbers. So those are the things which will play when these decisions are being made.
But so therefore, would you reckon that even if, let's say, reciprocal tariffs on India make the rates for India very high, but because you are spread around, the impact on you might be less? And conversely, by the way, just for the sector at large, Pallab, would it be a dampener if indeed the reciprocal tariffs make it very high in terms of the rates?
Yes, like for US market, it can be. There's one slight risk. I'm sure, we have started a bilateral discussion at this point of time. That could actually turn the tide so much in India's favor as well. But yes, that's like speculation at this point of time. Can't talk of much on that. As a company at Pearl Global, we definitely have a risk mitigation approach in all the things that we do. So if you look at our production, like we have a major production happening outside of India as well. Like India contributes to about 25% of our revenue as of now. And some of these very large sector of supply chain, that means I told you about the Southeast Asia or the Central America or the South Asia. So all these regions do compromise that division of where we are manufacturing and where these customers are sourcing from. So that definitely is a risk mitigating factor for us. And India, like if there is eventually, like if it happens, let's say I say probability would be very low. If that happens, then we have on the other hand the other markets of the globe. So let's see how this sector does. But I personally don't believe there would be an immediate impact in terms of tariff.
Pallab, the other question is then I'm just coming down to some numbers. One, your Q3 numbers, EBITDA. You mentioned that there was additional cost in operations in Guatemala, Bihar, etc. And you expect improvement in both of these at least in the next financial year. But when I also look at the Q3 EBITDA numbers, the India business is a significant lower number relative to your console EBITDA numbers, right? So one, why is this dichotomy? And as you expand in Bihar or otherwise also, would the India EBITDA numbers come up, part one? And when you say that you expect operational improvement from this 9% mark that you kind of, how do I say, steady at, if I'm not wrong, or operating margins in the last 2 or 3 years at least, do you expect to go to double digits or you kind of stick around these numbers?
Yes, the whole plan is to get to the double digit. Early double digit is our goal. And I think we have given some kind of forecast for 2028, what kind of top line that we should be doing more than 6,000 crores. And we should be in the early double digit in terms of our EBITDA. So that I think we are solidly on track. And in India, definitely our factories have been in the metropolitan cities. And the strategy that we have adopted is to go to the tier 2 cities where the costs are less and availability of manpower is more. So that's one of the trend, and it's supported by a lot of government initiatives at this point of time, and that we are very confident of. As these new facilities get more and more efficient, we should be getting better EBITDA in India as well.
Okay, interesting. So, I looked at your numbers from FY21, right? Your EBITDA margins have improved from 4.1 to 8.9, but at all this during this time, your gross margins have stayed steady at around this 48-50%. So when you improve your EBITDA margins to double digits, would it be at the same gross margins of 50%? And part two of my question is, early double digits can be 10%, can be 12%, can be 14%. What is the ambition?
So yes, first of all, we have to get to the double digit, and that's the first step. I think over the next few quarters, we'll be in that. And then, of course, take it to the highest possible. That's how we can give the returns to the shareholders.
No, most certainly. I was just wondering that if you have given some kind of forecast around 6,000 crores of revenues, you may have some insight about whether you will clock in 12% or 13% or what have you in 2028. That's what I was trying to get to.
Yes, that's definitely the aim, and that's how we are working for.
Okay, fair call. Point well noted. A couple of other things. I looked at your presentation for the 3-month and the 9-month. Multiple references, 3 or 4 references to a very strong order book. Not a number though. Are you in a position to share some numbers of where is it that your order book might be, or a book to bill, or what have you, depending on the industry, and how do you expect it to move ahead in terms of order book?
So overall, if you see, CAGR that we have been forecasting for our company has been at the rate of, I would say, mid-teens. So that I think we are solidly on target. This particular year, if you see the 9 months results, so we are definitely clocking in at a much higher rate. Because last year, if you see, when most of the industry was down, negative, we were still at +9. So this year, we look like we should be, as of now, the run rate is going at 25 to 28%. So that's something I think is the next quarter might continue on that. And what else should I say? I don't want to give much of forward numbers or statements at this point of time, but yes, we are solidly on track, I would say.
Sorry. So did I hear you say that the order intake run rate is about 25 to 28%? Is that what you meant?
That's the run rate that you're seeing this particular year.
Okay, got it. Now, the other aspect is, one is of course hard numbers, and you've given us some sense, and including the forecast, so we'll kind of get there. We kind of leave it at that. The other aspect is the soft aspects, right? When I look at the profile of the key managerial personnel, right? Strong experience across multinational brands. I believe some of the other key people, including the CFO, again, similar stuff. And you pride yourself on some deep relationships with global majors. What's the growth number? What's the growth coming from? Is it deepening relationships with existing clients because you have those relationships already existing? Or are there newer brands that you target? Because I would suspect that the existing brands would be the deep-pocketed ones, wherein maybe you can deepen relationships. I'm just trying to get a sense of how do you expect to reach these numbers in 2028 that you're talking about? Mine existing clients or getting a large set of new clients?
So both. First of all, the customers that we are already servicing, some of them are good, very solid customers. And those are the ones where we have really invested and we work very closely with them. The strategic relationship what I mean is that where I can sit down across the customers and talk about the next 2 to 3 years, what kind of discussion, what kind of business that they would have, what are the problems that they have, and how do I solve those problems. So yes, from our existing customers, we do have those kind of list where we are very focused upon. And at the same time, there are a few other customers which are new, which Pearl doesn't have been serving. We are adding those customers also. So the strategy includes both of them. That's why this aggressive growth that you are seeing in the company for the last few years, and which we continue to do that for the next few years as well.
Got it. Pallab, my final question. Capacity expansion in Bihar, I believe in Guatemala as well. Anything else which is significant in terms of capex that we need to be aware of, part one? And part two, for any of this or the future expansion plans, would you need to raise any kind of equity capital, or would you do it largely around cash flows and internal accruals? Because I do see that your cash flows numbers are fairly decent.
Yeah. So we definitely would like to fund it ourselves from our own cash flows. We do have a very almost negligible net debt if you look at our balance sheet. So that's something we will continue to have. We have a very strong financial discipline. We do want to comply as per that. And in terms of growth, yes, if I am hitting that number of what I just mentioned, so to do that, we will be needing additional facilities. And that's something we are aggressively and continuously looking at. We have expanded this particular year our capacity, and we would be expanding capacities again next year.
Okay, Pallab, lovely talking to you. Thank you so much for taking the time out, and all the best for the quarters ahead.
Thank you.
Thank you so much. That's the sector which will be right in the thick of things when it comes to any kind of tariff conversations. But remember, it's a employment heavy industry, and as Pallab Banerjee said, that we might already be doing our set of negotiations to try and see where is it that both the countries can find a sweet spot. But Pearl Global down about 2.5% today. The management talking about reasonably strong numbers for the next 3 years out relative to where they are right now. We need to take a quick break though. On the other side of the break, some market intelligence from Equity Intelligence. Porinju Veliath joins in. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Do you really know the company you invest in? What's the picture behind presentations and claims?
Hi, thanks so much for joining in. You're watching NDTV Profit. This is Ask Profit. My name is Alex Matthew. With me is Mahima Vachrajani, and we'll take you through the next 1 hour of trade. Well, if you thought that the equity markets would be in a Friday mood based on how things started today, well, that didn't last very long because we've lost out on some of those gains. And in fact, you're trading with cuts of about 0.5% for the Nifty 15. We have, in fact, broken below that 22,800 mark, which the bulls have defended very staunchly over the past few sessions. The question is, do we end below that number, and what does that imply for the next trading week? It's going to be a curtailed week, remember, with a Wednesday holiday. That's something to bear in mind. The broader markets as well, having given up on those early gains, and in fact, you have the mid-cap index that's trading very close to the low point of the day. The small cap index trading with cuts of about 0.4%, having recovered from the low point of the day. Let's also take a look at the market breadth, because early on in the session you had it favoring the advances, and I would also like to see the lines because that will indicate how it's progressed through the session so far. And it's early days, just about an hour and a half, but it's completely reversed. There you go. So it started with a wide gulf between advances and declines favoring the advances, but now you have the declines that have taken precedence. There is a significant update in terms of key changes in the NSE indices that we will bring you in just a bit. And it's going to be significant because heading into the next month and towards the end of the next month, you will likely see, actually towards the end of the month, 27th of March is when you will see the changes. And why this is important is that based on the inclusions and exits, you will generally find inflows and outflows from select stocks because you have a significant amount of passive flows into these stocks because a lot of funds invest in the ETFs, or there are several ETFs that are governed by the Nifty 50. Somit is joining in to tell you about the key inclusions and exits that are on the card. Somit?
Well, yes, what I understand is that as per the past trends that we have seen on the NSE index announcement dates, most likely NSE might come out with its announcement on the index changes today. And whatever changes the NSE announces, the adjustment for this, which means that the inflows and outflows regarding the same will happen on March 27th, and the changes will be effective from the 31st of March 2025. Now, when it comes to the Nifty 50 index, Zomato and Jio Finance are expected to be included in the Nifty 50 index, while BPCL and Britannia will be removed. Jio Finance and Zomato will see an inflow of close to 338 to 650 million US dollars, which is nearly 3 to 5 times its 20-day moving average, while BPCL and Britannia could see an outflow of anywhere between 220 to 260 million US dollars, which is nearly 7 to 10 times their 20-day moving average. Apart from that, when it comes to Nifty Next 50, Indian Hotels, Britannia and BPCL, because they are moving out of Nifty 50, they'll get included in the Nifty Next 50. Other than that, it's CG Power, Polycab and Hyundai. These stocks could get included in the Nifty Next 50. Now, because of this inclusion, there could be inflows of anywhere between 30 million to 100 million US dollars on these stocks. And when it comes to exclusions, it's Zomato and Jio Finance which are getting excluded, and this is natural because they're getting included in the Nifty 50 index. They're getting excluded from the Nifty Next 50. But apart from that, it's BHEL, NHPC, IRCTC, Union Bank and Adani Total Gas which get moved out of the Nifty Next 50, and because of the same, there could be outflows of anywhere between 25 to 40 million US dollars in these stocks. Now, when it comes to Nifty IT index, Oracle Finance might get included, where L&T Tech might get excluded, and inflows and outflows for this would be anywhere between 8 to 11 million US dollars, and there are no changes expected when it comes to the Nifty Bank index. So this is what is expected out of the NSE index changes. Most likely the announcement would come in today post market.
All right, interesting one to watch out for because Zomato being included in Nifty 50 is a big one, and even Jio Finance for that matter. So both of these counters, let's pull up those counters and see what it's doing in trade. Well, Jio Finance is trading flat. Let's also pull Zomato. Zomato is down by about 1%. But some stocks that are really buzzing in trade today, and one of them is Godrej Industries. It's been buzzing since yesterday. It's up by about 10% even right now as we speak, 11%. Some other counters, which are doing well in trade also include something like Hindware Home, Century Plyboard, La Opala, etc. But, these are the counters which are buzzing in trade today. And let's, also move on to our queries for today. And let's welcome in our guests for the day. Sameer Dalal, from Natulal & Sons Stockbrokers is joining us as the funder guest. And Jatin Geria is technical research analyst at Mirae Asset by Sheikh Khan is also joining us. Welcome to both of you gentlemen. I'll start with the first query. The first stock that we're talking about is Shakti Pumps. Taran from UK has around 340 odd shares bought at 86 a piece. He wants to know whether he should sell at the current levels and move to another counter. His vision is from a longer term perspective. So Sameer, I'll come to you. What's the view with respect to Shakti Pumps?
Unfortunately, Shakti Pumps is not under coverage.
Okay, and then Jatin, with respect to the charts, how is it faring? Should he wait for some time or exit the counter at current levels?
I think the recent correction is done. I believe I'm expecting a bounce back towards 1100 odd levels. So I think he should hold on to his investment as of now and try to exit around 1100 odd levels. So as of now, the suggestion is to hold with a stop loss of 870 is the level below which he can sell or wait for an upside towards 1100 where he can exit his position.
All right. He's making quite a bit of money on this investment that he's made in Shakti Pumps. The stock has done particularly well. It wobbled a little bit around COVID-19 if I remember correctly. Let's talk about the next question though, and we've got a caller. Shweta is calling us from Hyderabad. Hi Shweta, morning. How can we help you today?
Hi Alex, hi Mahima, good morning.
Good morning.
Yeah, I want to thank you guys for your support and for your advice.
It's our absolute pleasure to facilitate this, and thank you for calling us. How can we help you?
Yeah, actually my query is regarding the Rainbow Child.
Okay.
I have 1536, by price 1536. And I also have Kims at 610 rupees.
Okay.
So I want to know whether it is okay to hold both of them, or is it would be wise to exit from one stock and to have that in another.
What is your
stock?
time frame? Allow me to focus on one because it allows our experts also to give you better advice. Rainbow Child, what's your holding period like, and how long would you like to hold this for?
I would like to hold both of them for a year.
For a year, okay. So then, Sameer, Rainbow Children's Hospital or Medicare, would you hold this for a year if you bought at slightly elevated levels, 1,536? The stock price is currently 1,305. What are the prospects based on the fundamentals?
So companies' fundamentals are decent, but the problem is valuations are a little high. Yes, the stock has seen a slight bit of a correction recently from the high, and that's why your investors probably losing some money, but then they probably bought it at the highest point. Now, we believe that the entire segment in India, when it comes to Medicare, is going to see a huge opportunity for growth. But for the kind of fundamentals that they have and the kind of growth that they have because of the capex that will be required, we think it doesn't make sense to hold on at this point. I think the stock could probably see more valuation de-rating. The valuations are still punchy at about 48 times, I think, FY26 earnings as per what we are talking of. I think maybe get out can come closer to 35 times earnings, which is where some of the other Fortis or some of the other companies could also be trading at. So I think that makes more sense, getting into another counter at this point.
So that's the view with respect to Rainbow Children. The next counter that we're talking about is M&M. Gul purchased M&M at 2896 and he wants to add more, and he wants to know whether this is the right time to buy more or there is more downside to this? The stock is currently down by about 5.7 odd%. We had an exclusive story today in the morning. We will take you to that story in a bit. But before we go to that, Jatin, quickly your view with respect to M&M on the charts?
See, M&M has reached a very crucial support zone of 2650, 2630 on the downside. I think last year between July, September and somewhere in the month of October, this zone has been acting as a very crucial support zone. So I believe that this zone will once again act as a very crucial support zone, and we are expecting buying interest to resume from this zone. So yes, around this zone of 2600, one can average out or add to his existing holdings in M&M. So overall, the structure is range bound, but yes, current levels or around the 2600 levels, one can average it.
And the stock reacted quite sharply in trade yesterday. It dropped initially and then recovered about 5.5% from the low point, but today it's under quite a considerable amount of pressure on the downside. Of course, the story that we were talking about, that Mahima just told you about, is the fact that the government may modify the terms of its EV policy that it announced about a year back that could come into play right now. And this is at a time when the rumor and the buzz is that Tesla is readying for an India entry. You've seen a lot of news stories out there about the potential price of those vehicles. We also had source-based information coming through on that. But here's what Shrimi's report had to say. This is essentially what she had reported earlier. Listen in.
Government is working on finalizing the guidelines on the new EV policy. Remember, the EV policy requires the investment of 4,150 crore, which gives you the concessional duty of 15% tariff from the current 110% tariff at this point of time. So what we've been given to understand that government is working on making some changes in the terms and condition of the EV policy, and in fact companies and car makers may give a mandate to have a revenue target of 2,500 crore by the second year itself from the date of manufacturing unit being set up. In fact, in the draft policy which was approved last year itself, already have a provision of 5,000 crore revenue target in the first 4 years and 7,500 crore by the fifth year. So this is one addition which is going to be crucial if at all they are going to come as a change in the final policy. Other than that, the assembly line could be included in the existing factory, and any past investment by these car makers whomsoever is interested in the policy would not be considered as a fresh infusion. Any land building cost will also be not counted as a part of the total investment. However, there are consideration around that 5% of the total investment could go towards the EV infrastructure. So that consideration is still in work. So overall, some terms and conditions could see some tweaking, and once the scheme will be notified, the application will be sought, and 2 to 3 months of the timeline will be given for the approval, and after the approval comes, the companies can go ahead with the import. This is important and coming at a time when Tesla, one of the considered to be a key beneficiary of the EV policy, is planning its foray in the Indian market. So this is important, and we've been also told from our sources that 2 to 3 car makers have already showed interest. However, there is no such commitment came so far. So government, especially the heavy industry ministry, who is the nodal ministry, is working with the commerce ministry and finance ministry on the proposal, on the changes, and we will see some development in next month itself. And if all goes fine in the internal consultation, we would see that application will be invited by April itself.
Right, interesting one out there. Thank you so much for that, Shrimi. Now, Mahindra & Mahindra's Group CEO and Managing Director Anish Shah told NDTV Profit that he was confident of competing with Tesla. Listen in.
But that's exactly the question that was there 25 years ago, but various deep-pocketed global players came into India and Mahindra was written off as dead, saying you're not going to be able to compete with them. Right? That's happened on multiple occasions. Today, we have the products that speak for themselves. And in fact, we went to the extent where at our launch, at our test center in Chennai, we actually had some of the best vehicles in the world there along with our vehicles, and we invited the folks at the launch to drive all of them. And our vehicles stood up extremely well against some of the best vehicles, some of which were priced 3 times or 4 times our vehicle as well. So that confidence today comes from the people we have, from what they've done, from what they've developed. And therefore, we feel fairly good about the fact that we can compete with various folks.
All right, Samir, quickly your view on this entire EV policy thing and how does it, overall impact the Indian auto players?
So the EV policy, whenever it comes, will be a good thing that happens. At the end of the day, our Indian car companies have launched good products. What is the problem is the pricing at the moment when it comes to these EVs. They are much more expensive than the ICE vehicles, and which is why the adoption has not happened. So if there are certain incentives given by the government to push the entire EV space and make it more competitive, I think the opportunity is very large. For me, Mahindra has launched excellent cars. What Anish talked about, the fact that their products are very competitively priced and the features that they offer us are extremely good. Plus, the distribution reach that they have is phenomenal. The servicing and all of those things will be able to be taken care of a lot more easier than for a Tesla who's just setting up its base. So the entire EV policy that comes through will benefit everyone across the board. Of course, we need to see what exactly comes in it. But we feel the opportunity is very large, and companies that have the products in place. So where Mahindra is there, the Tatas are there. I think they are ahead of the curve. Maruti is probably a little behind the curve. So they need to do a bit of a catch up. But of course, they have the fastest reach and the best pricing and all of those things. So I'm sure they'll be able to get their act together. But I believe the opportunity is extremely large, and this is a space that one should focus on, and there will be money made for investors in this space.
That's the view with respect to the auto space. Moving on to the next caller, Yashwant from Andhra Pradesh is calling in. Yashwant, a very good morning to you. How can we help you?
Yeah, good morning to having this call.
Morning, I can hear you, Yashwant. Go ahead with your query.
Yeah, it brought a shares of warrants in 400
Okay.
at the price of 3,000.
Okay.
This is a long-term view, and I need to average my shares now. This is the right time or not?
Okay.
And also explain the fundamentals.
Okay. All right. Samir, I'll quickly come to you. Vari Energies is the counter. He's sitting on a loss of roughly 2.9 lakh rupees on the counter because he's bought it at elevated levels of 3,000 rupees. But he's saying that he wants to accumulate more from a longer term perspective. Is that the right thing to do right now? What's the view?
So on Vari, I'm not as positive. I'm very, very positive on the entire renewable energy space. We've spoken about this multiple times because, in India, we are seeing a massive shift to solar, given the government agenda of by having 500 gigawatts of renewable energy by 2030 and being net carbon neutral by 2070. So obviously the push that's coming for the renewable side is going to be phenomenal, and companies in the space will benefit. But where Vari probably has a little bit of a problem is that they have operations and exports to the US. So 2 things. First, of course, we're talking of reciprocal tariffs and things like that, which could hurt them. 2, you're also going to remember that the US has exited the Paris Treaty Agreement, which means that their setup of renewable energy may not be as great. So someone who's making these PV cells, which Vari is, and they have the largest capacity in the country, could face some amount of pricing pressure because eventually they got to sell their product somewhere else, and that somewhere else could be very well India, but at not the same kind of prices that they were able to generate in the international market. So if that is the case, then obviously profitability could come under some pressure. Like I said, I'm very positive on the renewable energy space and solar space. So if one wants to, make a good investment where valuation corrections have been significant, and you can hold on to his Vari. But I say, if you want to make further investments, there is 2 companies that we recommend also that have seen a huge correction in this market. One is Sterling and Wilson Solar, which is catering to the EPC side of the business, so they don't get affected by any pricing whatsoever. They basically take an order from a customer, execute it, set up the solar plant, and do the O&M. And the second is KPI Green Energy, which also does the EPC, but apart from doing the EPC, they are also an IPP. So they set up their own power plants and they sell power to the grid and to other customers for their requirements of renewable energy. And also, if somebody wants to set up a plant on their land, it's a CPP, which is they set it up for the person, they do the EPC work and put it onto the books of that individual, but they run the O&M and the rental of the land. So they earn a continual revenue stream from that. So these are the two companies that in the solar space that I would be pushing more than a Bari at this point.
Okay, and Sterling Wilson Solar, significant stake. I can't remember exactly how much owned by Reliance Industries now. It is dropped about 66% from the 52-week high. Bear that in mind. It's dropped quite considerably. For the year as a whole, is down about 50%. Okay, the next question we're taking has to do with Goldium International, and Santosh is asking. He's writing in from Chennai. He's got 200 shares that he's bought at a average price of 170. The stock is currently trading at 490 levels. The question is, should he hold on or book profits? Jatin, on the charts, what's your view?
See, in the case of Goldium, the overall medium-term to short-term trend is still positive. Recently, the correction halted at the 40-week average, which was placed around 343. So I will suggest to hold on to his current investment that he is having with a stop loss of 343. Because if this recent swing low or the recent support where it held on, that is 343, if that breaks, then there is a further downside towards the 275 odd level. So 343 should be kept as a stop loss as of now for his position in Goldium.
We've got Dheeraj calling us from Hyderabad. Hi Dheeraj, how can we help you today?
Good morning, Alex.
Good morning.
So I need to actually give a special mention to you actually, because you host the show really well, and you add a lot of your aura adds a lot of value to the show actually.
Thank you so much. Very kind of you. Please go ahead.
Yeah, actually, before asking my query, I have a small concern regarding the shape of the stock market actually.
Okay.
So, is there a huge concern regarding the further progress of the market? Because, like, the biggest groups in the country are facing a lot, like regarding the Adanis, the Ambanis, and then groups like Tata Group, and then Murugappa Group, and even Larsen and Turbo. Like, all the companies have heard something regarding this, like blue chips have been happening in India. So there is a lot of pressure regarding the selling of FIs, and this is being a huge impact there.
Okay.
So furtherly, like if the companies perform really well by the next quarter, from there can we see the upside, or will this be a long-term thing going on, or what's actually the concern is my point, because people like me, like I spend my entire time on the stock market.
Okay.
Like, a day, like my entire work is like from morning to evening. I do trade. And
so I will ask your question, Dheeraj. So, but then I get it, and a lot of people have that question and have that worry. So we will address it. But do you have a specific question? It's on Adani Ports, right?
Yes, actually Adani Ports too, sir. Actually, I have a lot of respect to Adani, Mr. Gautam Adani, sir, and I'm a huge fan of the entire group. But in specific, I like Adani Ports really well. The recent quarter results also have been really good, top notch. But why there is no from the Adani Group in specific? There are a lot of companies from cement space, like ports, like Adani Enterprises and ACC, like Adani Power, and but not even a single segment there is an uptrend from Adani Group.
So what you're asking is whether to hold for the long term and what the prospects are on the upside. All right, I got your question, Dheeraj, and let me go across to Samir on this one. Samir, so essentially what he's talking about is something that a lot of people have asked about, which is, why are the blue chips getting battered so much? And you know, this is par for the course. You've seen so much selling, and foreign institutional investors did have quite a bit of holding in the blue chip companies, and so therefore obviously where would they sell? They would sell blue chips, and they have been apparently deploying in the broader end of the spectrum. But specific question on Adani Ports, a lot of brokerages coming through and saying this is a high conviction buy at this juncture, valuations are looking attractive, earnings are looking good. Would you hold for the long term? Would you buy?
Okay, so let's address the first part first quickly. Yes, you're right. The foreigners have been selling and they have the largest holding in the blue chip. So obviously the selling is coming there, and that is why we are seeing the prices coming off a bit. But you also got to realize that valuations have moved up quite a bit, right? So, if you invest in the equity markets, you want to see return on capital. You want to see your stock price going up. What had happened is from where the stocks were trading, it was going to be very difficult to generate a return of about 15 to 17%, which is what you need when you're taking risk and investing in the equity markets. Because if you're getting a GSEC at 7%, you want to at least get minimum 12 to 15% return when you're taking risk. And that probably was not available at the higher levels. And then the FI selling came in, plus the US interest rates went up. So for them, it kind of became a situation where I was getting 5% risk free if they invest in the US, plus if the Indian currency depreciates by 4%, which has been the tradition, 4 to 5% a year, you were getting kind of 10% returns so you needed something much more in India, which was not available. So that is why we've seen the selling by the FIs. And my guess is we are quite close to the end of the selling. Hopefully, I'm of the opinion it's quite close, but I'm hoping that it's sooner rather than later. And once that happens, what you will see is stability, and the markets then slowly seeing accumulation and going up. So to address that, I think we are closer to the closer to the end of the fall at the moment. So Dheeraj, don't be too panicked on that. Now, coming to the direct question on Adani Ports, yes, it's a very good company. It's got 14 ports that it manages. It's got ICTs, it's got logistics arms, it's got the dredging part of the business. It's got quite a bit of activity. But I'm not convinced on the valuations. As you said that people are coming out with buy reports, that's fair. That's their view. My view is valuations still remain a bit punchy. This is a business that depends a lot on exports and imports. And if Donald Trump is going to be putting a lot of restrictions on exports and imports, and India's exports to US get affected, I'm sure it's going to hurt them profitability as well, because the volumes may decline or they may not grow at the same pace. And then these punchy valuations may not be justified. So like I always say, Adani Ports is probably one of the best companies in the Adani group, something you cannot ignore. But I would like to say closer to 750, 800 is where my comfort level comes for buying, because I want to make a return on capital. So I would wait till that point to add on more. If you are holding, stay put in it because it's a great company. But expect relatively lower returns from this point of time over a period of 3.
All right, fair. The standard disclaimer, of course, this is Adani Ports that we just spoke about. It is part of the Adani Group, and NDTV Profit and the NDTV Group are owned by the Adani Group. Dheeraj, I hope that answers your question, and essentially, I hope that is the case as well, what Samir just pointed out in terms of nearing the end of the selling. We have been talking about 22,800 on the Nifty 50, but if we have broken below that, let's see how we end the session today and the week, in fact. But you saw the 1 month time frame on the Nifty 50, and we're just about 1% lower than we were at the start of the month, or actually a month back. And that should give you some confidence heading into the end of the session and indeed into the rest of the week. We have to slip into a very quick break. We've got more questions on the other side that we'll take, so do stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty.
Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE listed company every single day. Today, we are talking about Apollo Microsystems. This small cap company has made waves because of the kind of growth it has in fact shown over the past few years. And there's no stopping, at least at this point in time, because of the improved visibility. But to tell you a little bit more about the company, well, it was incorporated back in 1985. Apollo Microsystems is based out of Hyderabad. This company does specialize in electronics, electromechanical and engineering designs, and it caters to the segment where we have to do with aerospace, defense, space and homeland security sectors. It does have a significantly high, contribution to the defense sector at this point in time. And in fact, it is working very closely with the government for a lot of the contracts at this point. In fact, it has a very good order book as well in terms of visibility too. But, it does invest about 7 to 8% of its revenues in research and development. And it's only increased in over time, as you can see on your screen there. For FY24, that stood at around 8% of your revenue. So there is a lot of investment going in innovation, a lot of investment going in research and development from this company's point of view. And it does have, in terms of manufacturing facilities, the company has a facility in Hyderabad with a built-up space of around 55,000 square feet. But it does also have 2 additional facilities coming up, which will be on stream and online over the course of the next few quarters, where in fact they have planned a 40,000 square feet in Hyderabad. That's unit 2. And there's a third unit, which is the largest of them all, and that's the 3.5 lakh square feet, which will be completed, or rather they'll be constructed by the end of the first quarter of the next financial year, and which is currently under development. And then a few quarters subsequently, we'll start seeing, it commence commercial operations. At the moment, its capacity expansion is as per these two units that I was talking about, and of course we have a lot more details with respect to these capacities as well coming on stream with the management, but we'll come to that in just a bit. Now, as usual, what we tend to do is with all companies, we take a look at the fundamentals. So we take a look at how the income statements have panned out over the last few years. We talk about the balance sheet, the current state of the balance sheet, cash flows, of course, and return ratios. And once we move beyond the financial statements, we also consider the shareholding, how the street has done in terms of the share price and of course valuations along with the outlook. It's a very, very interesting company because it's a small cap company with a market cap of not much, less than 10,000 crores. So based on that, it does seem like it has a significant runway. But to tell you a little bit more about this, I am also joined by Anushi Vakharia, who's going to shed more light into the fundamentals of the company. So Anushi, good morning and thanks for joining in. Let's start, as usual, by talking about the income statement. It does seem like the company has seen steady growth in the top line and the bottom line.
Right. So if you take the first three fiscals in consideration, that's last three fiscals, that's FY22 to FY24 period, we've looked at a growth of around 19 to 20%, which is gradually increased in the range of 22 to 25%. Now, what is interesting is the trajectory going forward for the company, wherein FY25 is going to be a year wherein they're expecting a more than a 45% of a growth, and this is expected to continue in due course of time in the upcoming fiscals as well. So 45 to 50% growth is what the company is saying. So strong revenue growth guidance that the company has given forward. In terms of margins also, we are looking at a margin of around 18.7% in FY22, which is increased to 22.4% in FY24. And the management has seen that they expect the margins to go upwards in the range of 25 to 30% in the coming period as well. So in terms of where the revenue margins and the net profit is concerned, we are looking at a pretty solid trajectory from year onwards. In fact, the 3-year revenue growth is around 22.3%, and even the net profit CAGR, if we take that in consideration, that has clocked in even a higher CAGR growth at 45%. Now, considering what has happened in this fiscal so far over here, in the 9-month period, we've looked at a revenue growth of 69%. So this is even higher than what the guidance they've given for the FY25 period. So watch out would be on if they exceed the guidance with the fourth quarter number also coming into picture. Margins have remained majorly flat in the range of 23% if we take the last year 9-month period into consideration, and net profit stood at 42 crores as compared to 18 crores. So we're looking at a more than 100% growth in terms of where the net profit number is. So income statement, we are looking at a solid set of numbers, but let's also talk about the balance sheet, Agam.
So the balance sheet is a slightly tricky one, but for now, the company is in a growth stage, and it's also invested and investing in 2 additional facilities coming through. So which is why its debt number at the moment, specifically the short-term debt, does look slightly higher. So if you consider how things are panning out, firstly, its equity share capital at the end of the first half of this financial year stands at around 575 odd crores. It doesn't have any long debt, or rather, long-term debt is not as much. It seems rather small as compared to its net worth. It does have short-term debt of about 185 crores, of which, do remember that about 26 crores worth of cash in bank is also being held. So on a net basis, it doesn't have that much debt at the moment. A lot of this is short term, as I mentioned. A lot of investments being put into its new facilities, since the company is looking into 2 new facilities. And we'll talk about the order book in just a bit, but because of the fact that it has an expansionary order book right now, it is looking at 2 capacity units being put up is the reason why we are looking at that, that debt number, that short-term debt number. If you keep that on the side, because it's a growth company and because it has a reasonably good net worth, we'll give this one a thumbs up. So overall, this is how things stand as far as balance sheet's concerned. But Anushi, perhaps on expected lines, cash flows are looking at more negatives than positives.
Yeah, right. If we look at the trajectory, as you've mentioned, that cash flow from operations, if you are looking at 16 crore, is the negative 16 crore is the figure that we've seen in FY23. While H1 FY25 onwards, we have started seeing improvement in where the cash flow from operations are considered. Net cash flows majorly remain negligible for the company. Now, do note that the company had raised a certain amount of money in terms of where the preferential issue was also concerned. But we'll give cash flows for now a neutral rating. It depends on how the order flows are, how the revenue growth expectations are going forward, and the net profit, how that builds on to the cash balances for the company going forward. So while that's what we are looking in terms of where the cash flows are concerned.
All right. So, moving on, let's take a look at the return ratios. Now, again, as I was mentioning, it's in a phase in which it is making investments, which means that its return ratios will not be good. And they are not only below the 15-20% mark, but they're actually below the 10% mark. So if you consider the return on equity, that currently stands at around 7%, and the return on capital employed stands at around 8.3%. The only reason why we are not giving this a negative or a thumbs down is because these return ratios are also improving. And from what we understand is that once we have a lot of these capacities in place to contribute to the top line with the execution of the order book currently, these return ratios could potentially improve further, which is why we're going to give this a neutral rating at this point in time. And then eventually they can go through our ideal levels of around 15, 20, 25% moving in. That certainly is something that a lot of shareholders will definitely look up to and hope for. But this is as far as return ratios go. Now, Anushi, let's talk about the shareholding.
So if you look at the promoter shareholding, that has majorly remained stable in the 55% of mark over the last couple of quarters. Now, it's the foreign institutions where we are, and domestic institutions as well, in fact, that we are looking at a considerable smaller number. It's almost negligible. It's 0.7% for foreign investors, and for domestic institutions, they hold about 0.9% stake, while the public holds about 43.3% stake. So majority of the ownership lies between the promoters of the companies as well as the public which is there. So that is as far as where the shareholding pattern of the business is concerned. But in terms of where the street cred is, we are looking at a solid trajectory in not the last 6 months, 1 year, but if you take the 2 years in consideration.
Yes, certainly. So when it comes to street credentials, the way the share price has moved over the last few months and years. Firstly, in terms of the last 6 months, do remember the last 6 months have actually been very terrible for the markets out there, where we've seen significant corrections. Last 5 months particularly, 4.5 months to be precise. We've seen significant corrections for the mid-cap and the small-cap indices, coming well off from their highs. Yet, we have seen a 13% return for this particular company. In the last 1 year, the company has shed over 3%, which is moving largely in tandem with these comparable indices that would the mid-cap and the small-cap indices be. Over the last 2 years, the stock has doubled. So it's not doubled, it's a 2-year CAGR, so it has tripled, nearly tripled. So that certainly is a big positive. But because of the fact that its last 1 year returns have been more or less in line with your benchmarks, we're going to go with that number particularly specifically, and we're going to give this a neutral rating. Overall, that's how it stands. But even in terms of your dividend payout ratio, look, it's a growth company, so naturally your dividend payouts are not going to be high, yet it's managed to give you a payout around 4%, 3 to 4% over the last few years. So that's something which I'm sure a lot of shareholders will possibly find as a positive, given the fact that the company is in growth phase. But let's talk about peer comparisons, Anushi. How is the price to earnings looking right now?
Like You just mentioned about a point about, how the small and the mid caps have been correcting. So these ratios also, when we are looking at that, there has been a significant correction in terms of where the PE ratios are also concerned if you take the forward picture into the mind. But currently, Apollo Micro, considerably expensive than its peers, about 65 times if you take the trailing PE in consideration as compared to Bharat Electronics or Data Patterns, which are in the range of 40 to 50x based on the last 4 quarters trailing P that we are taking. But do note that this, as you've mentioned again, we've talked about it, that it is in a high growth phase. It's expected to clock in about 45 to 50% of a growth. So considering this high growth scenario, it does require that higher multiple also for PE, which is there. So yeah, that is why we're looking at possibly a higher multiple as compared to its peers which are there in the field.
Okay, so there you have it. And remember that growth does come at a price. Which is why this is a neutral. But we do want to talk about the outlook in this case. And, I'm sure that the management conversation that will follow this bit will further elucidate how things could potentially pan out. But just want to mention that when it comes to the order book position, it does not look like a very large one. However, at the moment, the company is also indicating that the order book towards the end of the current calendar year would burgeon to as much as 5 times as compared to what the order book is currently. And the order growth could be led by missiles and naval defense sector. Do remember that the fourth quarter, that is the ongoing quarter of this financial year, is also seasonably the one in which you have a significant amount of order inflows coming through as well. And then, of course, that's followed by the third quarter of a financial year, that is the October, November, December one. So we're expecting a lot more to come through in terms of growth as far as order book is concerned. But all in all, this does offer a good visibility as far as revenues go for this particular company. But speaking of that, the management has in fact spoken about it. So Anushi, what can you tell us about the guidance going forward?
I just want to add to the part about, how you've mentioned that the fourth quarter is critical to watch for majority of the defense companies, because even in the Q3, we have seen some of these defense companies reporting their orders and the street not taking those numbers well into consideration because of certain delays which has happened. So Q4, an essential quarter to look out for majority of the defense plays. But as far as where the guidance is concerned, 45 to 50% is the growth expectation for FY26. That is something we should be watching out for. Now, EBITDA margins, while we've seen them in the range of 22 to 24% in the last couple of fiscal years, the expectation is that this could lead up to 25 to 30% of level there as well. And now the company is also making a shift towards its products. Now the orders would be more from the development oriented side, there'll be more production related orders. So a shift in this could also lead to the change in the margin profile that we are seeing. So overall, even the guidance as well as the order book positioning, it seems like a strong picture going forward for the business if it manages to clock in those orders that it expects by December end of this year.
Yeah, sure. So, overall, it does look like the management seems fairly confident because of the orders that it has bagged, the potential conversations that they are having with government and other clientele with respect to more order flows coming in. And, this gives you good visibility, which is why we're expecting positive things to happen for the company going forward. What does that mean for the overall rating of the company at the moment? Well, so far, because this company is on a growth track, a lot of the parameters are yet to come through, but there are a handful of indications which already suggest that the company is on a path upwards. So when you consider all the parameters which are historical in nature, of course, a lot of these parameters are historical in nature, strong income statement and a balance sheet, with reasonable cash flows along with return ratios which are improving even though they are low at the moment. And pretty steady shareholding, I reckon, very strong outlook, in fact. And valuations are only neutral because the growth is there and the valuations are, slightly rich at this point in time. But that brings us an overall rating for the company at 5.5 out of 8. Now, do remember that we made certain considerations and certain tweaks with respect to what we can expect, and based on that, we're coming at a rating, and this rating can stand to improve further should we see that which has been promised by the management. But speaking of the management, I in fact did speak to Mr. Sai Kumar, who is a director at Apollo Microsystems, and I started by asking him about growth going forward based on the visibility he has on the order book, and this is what he had to say. Listen in.
So, as far as my TAM is concerned, it's a pretty big, but these are all government opportunities, and the defense systems are a little long gestation cycle programs. But we have been giving guidance that we will be growing at 45% rate, 40 to 45% rate every year. And you have seen our Q3 results. This Q3 figures are the highest ever Q3 that we have ever performed in the company. So this growth momentum will continue. And we have already informed that we have internal targets to almost double the revenues. We have projections, we have orders accordingly on hand. But at the same time, we are pretty sure that minimum 45% growth we will continue to record for the next financial year as well.
Right. So can you confirm if your current order book number is what it is? Pardon me. And whether or not you do in fact expect your order book to hit 2,500 crores by December of this particular calendar year, and also what do these orders comprise of? Are these missiles? Is this naval defense? Can you give us a better picture of what your order book is looking like?
So, see, whether or not it touches 2,500, which we have given a guidance earlier, this growth rate of 45% minimum is something that we would record. To that extent, we have orders on hand, and we have a confirmed orders from which my customers have, which will be placed on us from time to time as and when we keep executing the projects. As you know that we are a Tier 2 and Tier 3 supplier for many OEMs, which includes private and public sector companies, and also for the DRDO. So as and when we keep completing that one round of the production orders, we keep getting the orders further. So this is the streak that we would get. We are expecting a very large ticket projects both on the missile defense side and as well as the naval defense side. The order book will continue to grow as I have informed earlier as well.
All right, and so your order book is mostly India and Indian government orders, or are there also orders from markets abroad?
No, presently we are working only for the Indian orders and domestic orders. Our business development, international business development is on. No, presently I am speaking with you from Dubai, and I think in the next financial year we will be able to book a decent order book for the export market as well, which may be executed at Q3 or Q4 of next financial year. But for sure, next after financial year, our export revenues will be recorded, and significant revenues will be recorded next after financial year.
Sure, sir. So I also want to talk about capacity expansion. I believe that you're expecting one of your units to come on stream online in the first quarter of the upcoming financial year. So can you tell me about what that facility is going to do for you? What does it in fact manufacture, and when can we see it come fully operational, in which it will fully start contributing to your top line?
So phase wise, we would be occupying just the beginning of the second quarter. It will be completed by first quarter end, but we'll phase wise from the second quarter beginning. We'll be start occupying, and by around September, full occupation will be done in the next financial year. Fully operational, it will take 3-4 months from there to become fully operational. As you already know that we already have a facility which is our head office, both design center as well as a production center. So the production should not get affected. So we made a plan to do a phase-wise shift. So this facility is a pretty huge facility. It's a 350,000 square feet facility, and we are expecting very large orders. So full capacity utilization will take a lot of time. Maybe 4 quarters to 6 quarters. It will take a lot of time. But this facility is very unique to the existing capacities and facilities that we have. A full-fledged environmental testing facility, including EMMC, is being set up there. We are also setting up rate tables for calibration and testing of inertial navigation systems, which are a very critical part for various programs of ours.
Right. So then there is a third unit which is also being planned in Hyderabad, if I'm not mistaken. Can you tell me a little bit more about that as well?
Yeah. I was talking about the third unit. The unit two is, I was talking about the third unit only, which is 350,000 square feet. Unit two is already ready because this is Q4. We didn't want to shift our teams there. From Q1 onwards, the teams will be shifted there. It's a 45,000 square feet facility, and Unit 3 is the one which I was talking about, 350,000 square feet, which will have a full-fledged facility in terms of engineering, manufacturing, the board assembly, harnessing, weapon integration, environmental testing, including MMC. It's an end-to-end defense manufacturing facility, world class. And such a kind of facility, we are the only company who would be having such a kind of facility in India with an entire end-to-end facility, including MMC.
Sure. So based on that, I also want an outlook on the balance sheet. What does it look like, or what will your balance sheet look like at the end of this financial year? Is there any debt component at the moment? Is this debt likely to change given your plans going forward as well? And whether or not there will be some requirements in terms of your fundraising, considering you already have a large order book?
Yes, there is no long-term debt as on today, and we have taken a term loan from State Bank of India for our capacity expansion. So there will be some debt that you would see at the end of this financial year, in the balance sheet. Also supplemented by huge equity. We have gone recently, announced for a preferential, equity. We are expecting the approvals from the exchange. Then if it comes, in the month of March, the funds will start flowing. But you will definitely see, some debt as of now. But as of now, there is no debt in the balance sheet.
All right, there you have. That's the management of Apollo Microsystems telling us about what we can expect going forward. But on that note, thanking you all for joining us and being part of this edition of KYC. Don't go anywhere though. We have lots more lined up on NDTV Profit. We'll be back in just a bit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Swani could spare some time from his very busy schedule and come in. Thank you so much for joining us.
Thank you for having me.
It's been one of those things that we wanted to do with you for a while, and Harsh and I have been talking about it beforehand. We're trying to analyze the tagline for the event, which is the blueprint for Viksit Bharat, right? The idea being that this country is headed towards a developed country, developed nation status in about 22 odd years. And obviously banking is going to play a crucial part. Because Kotak is also a big business house with multiple other lines, all of which will help the entire country move forward to get closer to that. I want to first ask you and try and understand from you what you think is Viksit Bharat. To your mind, what is the developed nation? What can people look forward to?
So first of all, thank you. Thank you so much for for inviting me. Delighted to be here. I think, see, look, a developed nation has many characteristics. It's obviously economic, with a per capita income of a certain level, so that people have a good, sustainable kind of lifestyle. A developed nation also has, for example, a health system which is appropriate, an education system which is appropriate, opportunities to kind of do things more. Stability is another thing, and stability has many factors, including defense. And so a developed nation is one which you can rely upon to behave responsibly and play a role in the world economy.
So, sir, with that context in mind, if I can chime in, what is it that will be required of the banking system? Because banking as a whole, by its very definition, has seen a sea change. One in 2016 with demonetization, and thereafter in COVID, when everything started to go digital, and now digital is a very big part of banking. So therefore, what changes from here on?
So look, banking is the oil of the economy, and it facilitates payments, it facilitates trade, it facilitates investments, it facilitates capital markets, and it facilitates borrowing, and therefore banking has to kind of develop as the economy develops. Now, typically what happens is that the banking industry, the financial services industry normally grows at somewhere between 1.5 to 1.75 times GDP growth. And therefore, banking has to lead the way to kind of make it happen. And this has to be encouraged, taken care of, nurtured and developed. You talked only about COVID and demonetization. Because I'm older than you, much older than you, I remember the global financial crisis, I remember the internet, the dot-com boom, the Latin American crisis, the Asian crisis, and so every 8-9 years, we've had something which is very substantial, and we've got to kind of guide our way through. Now, if you look at what the banking sector represents in developed markets, let's say like like the United States of America, banking has led the way to that kind of development in all aspects of the market, whether that is, banking itself for payments and stuff, or trade, loans, capital markets, securities, and stuff like that. And as economies develop, what is going to happen is the balance sheets of banks are going to change. And the balance sheets of banks have to change because ultimately the kind of growth that is required in the economy cannot be supported purely by bank balance sheets. In developed markets, capital markets have to develop to provide alternative sources of funding for industrial growth. That in turn has to come where those capital markets reach out to banks, pension funds, insurance companies to be able to fund that kind of growth. So the whole ecosystem has to develop. Another element of that is typically what happens is in a developed market, interest rates come a tad lower than in emerging markets. And as interest rates go down, again, the bank balance sheet changes quite dramatically, with things like mortgage loans taking a much, much, much higher proportion on the bank balance sheet. And different countries have evolved differently as far as mortgage loans are concerned. So, for example, in the US, they have bank or government-owned or virtually government-owned companies like Freddie and Fannie who kind of buy out standard mortgages to release the pressure on bank balance sheets. So elements like this will have to be considered and will come along as we move along. I think there's a third element to it. The third element to it is internationalization, right? A developed market is going to be an international market. And actually, I commend the way the Indian regulators have actually put us on a path of internationalization, which is so unique from any other part of the world, whether that's Latin America or whether that's Asia. The kind of route that we are going down towards internationalization is quite unique. And that will be another kind of thing which will develop, because foreign flows is obviously going to be a very important part.
You mentioned banking alone can't spur the kind of growth that we need or the kind of growth that we should be looking forward to. Having said that, considering that they are large enough players in the debt capital market, at least a lot in equity as well, but largely in debt, right? How do you think banks can maybe then ensure that private companies and private enterprise in this country start spending? Because that is what will actually propel growth. Yes, the government can keep spending and personal consumption can drive balance sheets, but for the country to move forward, you need that private enterprise to start spending, to spend on capex. How do you think banks can help that?
So see, private sector capex is really a function of the opportunities that there are in the marketplace. At least in my view, private sector capex is not being restricted by availability of bank finance, right? It's about the opportunity in the marketplace. If you see the last 1 year in particular, we've had some kind of IPO fever. And frankly, that's been quite scary. If you kind of see the kind of companies that have kind of gone IPO. And it seems that a lot of promoters are looking to take money off the table, right? Now, is that a function of very high valuations? Is that a function that, that the companies have grown? There's a next generation coming in which has different views. That, we can kind of debate. So my point here is it's not the restricting factor for private sector capex is not banks. The restricting factor for private sector capex is promoters saying, hey, either my company has become so valuable, let me take money off the table, right? And I will now no longer run an operating company. It's too hard to run an operating company. I can make a very good return running a family office or investing. And therefore, those opportunities have to come back. Now, that may be a transitionary kind of period. There will be a new generation. As I go around India and I see the startup scene in India, I get very excited. The youth of India today, when I was growing up, if you got a job with a multinational, that was a great thing. After that, if you got a job with a great Indian company, that was a great thing. But today, all the youngsters want to go and do startups, which is fantastic. And those will scale and drive the kind of growth of this country. So maybe a transitionary period right now.
And so sir, as we grow in the next 22 years towards a developed nation, there will of course be plenty of banks who will stand up. How do you stand out in a highly competitive tech environment? Which are the banks which will really stand out in your view? What will be those characteristics which will help them stand out?
So look, technology is changing the world. That is not restricted to banking. In fact, I always say, two things. One, technology is no longer a vertical on an organization chart. It's actually a horizontal. And two, technology is too important to be left just to the technologist. And therefore, technology is changing banking, financial services, as it is changing every single other industry. Literally every single industry is changing. And frankly, if you look at it and you think about it, 25 years ago, even 20 years ago, if you were looking to build out a bank, you would naturally tend to getting a lot of people who had either done chartered accountancy or an MBA in finance. Today, if you look at the banks, like the new digital kind of banks, the kind of people you're looking for is engineers with computer science. That just says it all. What it therefore means is that banks today have to adopt a mindset of change, like in every other industry, frankly. But they have to adopt a mindset of change. That mindset of change is going to be getting people who understand this technology, or at least understand the art of the possible of the technology. If you can understand the art of the possible of technology and say, how is technology going to drive business, then things kind of fall into place. Fundamentally, all banking products and services are a means to an end rather than an end in itself, right? Nobody gets out of bed jumping or dying to get a mortgage. They want a home, right? No corporate treasurer is dying to get a loan. He wants to put up a plant. And therefore, being able to be part of that journey, part of that home buying journey, part of that plant journey, and doing it in a way that is least obstructive to the end customer is what it's all about. And that's where technology will play its role. And the banks that will win will be those who do that the best.
Over the last year, I would say, this intense sort of race for the deposit, right? And it's become a bit of a joke where banks are saying that people will move their funds, they will chase returns, whatever. But then we have more or less stagnated on the deposit rate hike front, and still the deposits aren't coming. So I'm just trying to understand from you, how do you stand out? And is service, the quality of your service and the ease of your service, going to be that factor which sets you apart from your competitor?
So first, I'll give you multiple perspectives on this.
Sure.
Let's start at the macro level. At the macro level, even in a developed market like the United States, if you look at, let's say, what they call checking accounts, what we call current and savings. Checking account, the volume of current checking accounts as a percentage of GDP has actually stayed pretty much flat. This is despite that, 1 in every 2 households in the United States own some kind of mutual funds. So generally speaking, the level of money that lies in low-cost deposits remains pretty standard to GDP. It is not so much the quantum of deposits that's an issue. It is really the cost of the deposits that in the last 12, 18 months has really become an issue. Now, in our country, a lot of the liquidity in the system is really a function of government liquidity and government spending. So when government spending kind of slows down, like it did in, let's say, Q1 and Q2 of this fiscal year, you see a tight kind of situation. Then, of course, there was the issue with the rupee, which led to some further tightening of liquidity. But in our country, the function of government expenditure on liquidity is a big deal. Now, the government expenditure drives the economy, and therefore nobody would be surprised that the government would try and spend more to drive the economy. So hopefully liquidity improves as a result. And the RBI has already started taking action to kind of improve liquidity. So at the macro level, I think that is the kind of picture. At a micro level, look, banks will have to come up with innovative products that help customers and attract customers, right? So for example, at Kotak, we've got a product that's called Active Money. Now, Active Money basically says that we are going to trade off liquidity and return, right? So as long as you keep the money with us, we pay you a higher interest rate. You break it and bring it down, we pay you a lower interest rate. Customer wins, we win, everybody else kinds of win. What are the other kind of products, features, innovation, technology that can be used to actually develop new products that the customer is willing or the customer fancies, that leads to deposit creation for the banks? And that's what we've got to kind of work at doing. And I'm sure all the banks, including us, are working very hard on that.
Right. Across the country, the diversity in the type of customer is very high. How do you appeal to every single one of them and ensure that the best quality in each cohort get tapped?
So, I always believe that the essence of strategy is denial, right? The essence of strategy is denial. It's not important. It is important to, of course, say what you're going to do, but it's more important to say what you're not going to do. Because you have to sharpen your focus. If you try and meet the needs, if you're going to try and say that everybody is my customer or is my target market, you're exactly for the reason that you mentioned, to your point, you're going to kind of miss it. Getting very sharp as to who is your target market, what are they really looking for, how can you define products and services for them, for who you're really looking at, will make you win. See, there is, again, my belief is that a lot of people think finance is all about Excel worksheets and, 13.3% interest rate versus 13.1% interest rate and stuff like that. I would submit to you, finance is all about emotion. In fact, there's so much emotion that even sometimes couples don't talk about finance, right? Let alone you never talk about it to your friends and stuff like that. There's a lot of emotion and a lot of suppressed emotion in kind of finance. So it is right to actually to appeal to that emotional quotient to be able to get the customer. So if you're able to define who your customer is, who you're really going to go after, then you can get very sharp on who we go after. The good news is we have nearly 1.3 billion people. The ability to sharply define the focus on the customer is what I think will make you win.
I want to bring the focus around retail and the story there, right? The idea that retail is going to, or till now, was the steam engine behind which the entire banking system was putting its wagons. And then there was a very unceremonious stop. Then everybody started tightening things. Kotak, to your credit, the bank has remained sort of sane and static throughout this entire cycle. I wanted to get your view. Is the fear a little overblown at this point in time? That unsecured, yes, some people borrowed more than they should have, and they've had lifestyles which were entirely debt funded, and maybe that was not a pretty good idea. But is the overall fear a little overblown, or maybe there is still steam left in the engine to push retail forward?
So again, I'll start with the macro and then come down to the micro. See, on the macro level, even if you look at all the developed markets, consumer spending drives the economy, right? In the United States, about 60% of the GDP comes from consumer spending. That's true of the UK, that's true of Japan, and stuff like that. So as India moves towards a Viksit Bharat, the consumer driving the economy is definitely going to play a larger and larger role. Now that is again a macro kind of 50,000 feet kind of trend, which we will see. In between that trend, you're going to see none of these things is a straight line, right? There are always kind of bumps along the road. So what happened? What happened in this recent past? What happened in the recent past is during COVID, suddenly, the world and the banks froze. Nobody was prepared for an event like COVID. It was unprecedented, right? And in fact, unprecedented became such a cliched word in those 2 years that it was quite amazing. But nobody knew how to respond. Just literally nobody knew how to respond. And therefore, everybody froze and, banks got very, very, very cautious. In fact, a lot of banks raised capital, including ours, because we said we don't know how to manage this kind of downturn. Now, what happened to the consumer? The consumer, because they could not go out, because they couldn't see movies, they couldn't eat in restaurants and stuff like that, they froze too. So, I don't know about you, but the savings rate during COVID went through the roof, right? So what's happened? The banks have kind of shrunk their balance sheets. Banks are sitting on a lot of capital. The banks are sitting on a lot of liquidity. The banks have actually not growing assets and therefore earnings are not growing. On the other hand, you have a consumer who's kind of got stuck at home, not traveled, not eaten out, not met friends and stuff like that. So the minute COVID opens up, guess what happens? There's something called vengeance travel. Everybody said, oh man, now we have to go on holiday, we have to meet, people who've got children living in different parts of the world, they hadn't met. So a lot of customer expenditure went through the roof. The bank said, frankly, nothing happened in COVID, right? Because excess cash was developed. By the way, the government pumped a lot of liquidity into the system, right? So the consumer was able to happily pay off all loans, reduce debt and stuff like that. So the bank said, wow, this is great. So now let's go and extend credit pretty extensively, right? And who do you extend credit extensively to? To the people who you think are quote unquote the safest, which is the salaried class. So therefore, that extension happened aggressively. Now, by the way, I was in the US and this happened exactly in the US as well.
Yeah.
I was running the UK at the same time. Identical happened there. Identical happened in India. So there was an overextension of credit that was done, and that overextension initially was all fine. And initially it was fine because the consumer had a lot of cash to kind of,
cushion,
manage it. Yeah. Cushion. After that, that cushion ran out, so that led to some over-leveraging. And that led to a little bit of issues, right? Now, hopefully, I think, at least at Kotak, what we're saying is credit card kind of stuff has stabilized. It's not deteriorating. But if you go down the chain a little bit, in microfinance, for example, you are still seeing a lot of pain. Same kind of issue around over-leveraging. But hopefully the banks have picked this up pretty quickly. Again, kudos to the Reserve Bank of India. If you remember, Reserve Bank of India actually came out and changed the risk weighting on unsecured assets. They picked up the trend pretty early and signaled to the banks that, you should have been careful. And I think that way we've kind of avoided a major issue. Now, touch wood, these things you have always got to be extremely careful. But as we sit now, hopefully, we've kind of managed through this.
There's a steam left. That was the final bit.
So it will come back, right? Okay. It will definitely come. See, these things are in cycles, right? These things are in cycles. It kind of, if you want to think about an anecdote, it's like a pig going through the python, right? It kind of goes right through, and then, the python starts moving again. And then you're kind of back to, all these things go in cycles.
Okay.
Okay. So for a brief couple of years, there was a sense that your fintech industry will actually be larger than the banks. They will actually start taking risk on their balance sheets because you have plenty of customers who are sitting there. That obviously was an overextension, a little bit of an over-exaggeration. I think we are now in an era where everyone's comfortably accepted that. But I want to understand, what piece of the pie do they take? Do banks continue to take the larger piece of the pie? Because they will take some piece of it, for sure. Just want to understand your perspective on maybe the next 5 years as things stabilize on both sides. What piece of the pie do they take? And what are banks going to do to actually up their tech game? Because that will be one of the big risks for the fintech industry.
So look, here's what happens, right? Why is a fintech able to kind of move quickly? Because they're usually speaking new, and they usually deploy contemporary technology, and they focus on a particular niche. And they go deep in the niche with contemporary technology, and they're able to move quickly. The banks, on the other hand, have a very, very, very wide beach, right? And therefore, they've got to deploy technology at scale. But the advantage that banks and stuff have is that they've got scale, right? So the fintechs have the ability and the advantage of nimbleness and agility. The banks have kind of scale. Now, the minute you start posing the question, is it banks versus fintechs? I think we go down the wrong path.
Correct.
I think the fintechs need the banks because of the scale. The banks need the fintechs because of the kind of contemporary technology. And therefore, the happiest fintechs and the happiest banks are the ones who built great partnerships, right? Also, the fintechs have to be very careful because, if they kind of grow balance sheets and accept deposits and stuff like that, they come under the regulatory net, which the regulatory net obviously adds a lot of responsibility upon them. So I think the best outcome is when you kind of partner. And you partner in certain niches, and where you really require that kind of cutting edge tech and the ability to move quickly is usually where a fintech will bring the greatest amount of value. But the banks will definitely step up their game as well. They're going to invest in technology. They're going to do a lot more, and they will kind of proceed as well. So, frenemies is the kind of term that I think about when I think about banks and fintechs.
But where will the profit pool lie? Just trying to get that kind of.
So ultimately, the profit pool will always lie with the person who owns the customer, right? And therefore, direct engagement with the customer is what drives.
So things are not going to go out of bank hands for anytime soon.
Well, I hope not.
All right, Mr. Vaswani, thank you so much for joining us on this conversation, sir.
Thank you.
It's been a pleasure talking to you.
Appreciate it.
Thank you, sir.
Presented by Pernod Ricard India. Co-presented by Shema General Insurance. Co-powered by Share.Market, a phone pay product.
State partner, Government of Uttarakhand.
Premium menswear partner, Reed & Taylor. Banking partner, SBI.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Welcome to Profit Buzzers. This is Mahima Vachrajani and with me is Varsha. Let's take a quick look first of all as to how the markets are doing at present before we move on to the themes of the day. Well, the market definitely is not in the Friday mode. Let's pull up the Nifty 50 as well as the Sensex and see. Nifty 50 is down by about 0.5 odd %. Sensex as well is trading within the same range. It's down by about 0.5%. Let's pull up the advanced decline ratio as well as the sectoral indices and see what's playing in there. There you go. The advanced decline ratio is approximately 1700 odd advances versus that of 2000 odd declines. So a slightly more than that 1:1 mark, but more skewed towards the decline. So there are more sellers in the market than the buyers. Let's also pull up the sectoral heat map and see what sectors are faring in trade. Metals is the only counter which is actually doing well, up about 1%. Auto is seeing the real pain in trade today. It's down by about 2 odd %. A couple of things taking place in the auto space, the new EV policy as well as the Mercedes commentary coming in. There's Nifty Pharma which is down by about 1.8%. Nifty PSU Bank also down by about 0.9 odd %. But the broader markets is let's see, because broader markets have been doing well in the past 2 days, but today Varsha, it's in red and it's seeing some pressure.
Actually, yeah, so broader markets are actually mirroring benchmark, I would say, So a Nifty Midcap 150, if I were to speak about, it's down almost 0.6%. Let's see who are the losers there. You have Coforge, you have Ipca Labs, you have Biocon, you have Oracle Finance, Bank of India, Marico, who are, under the losers segment. Whereas if I speak about gainers, you have Godrej Industries, JSW Infra, IRDA, KI Industries is actually buzzing on the back of brokerage note and L&T Tech, while Nifty Small Cap 250 is down 0.2%. If you see the losers out there, you have Cyient, you have Spark, you have Radico Khaitan, you have Graphite, you have Sirma, SGS, and in a gainers list you have Vijaya, Century and Maharashtra. But what's buzzing today is JBM Auto. Now, company has received an order of almost 1,000 electric buses, and they've received order under the PM e-bus Seva scheme. But to speak about the numbers and what exactly the order is, let us welcome Nishant Arya, who is the Vice Chairman and MD of JBM Auto. Welcome, sir. Just wanting to know the order details. So you have won an order of almost 1,000 electric buses. Just wanting to know the order details and how much revenue potential it will add to your top line.
So the order is for about 5,500 crores, and we'll be deploying about 1,021 buses across 19 cities in 3 different states of Gujarat, Maharashtra and Haryana. and we will be executing this order over a period of next 12 to 18 months.
Good morning, good afternoon, Mr. Arya, and thanks so much for joining us today. It's Puneet this side. I just wanted to understand, with this new order of about 1,000 buses, you also received an order about 343 buses at the end of December. What is the current total order book in terms of buses and the subsequent value in crores as well?
So the current order book is about 11,000 buses with this new order getting added. Which we'll be delivering over the next 2 years. So by FY27, we'll be delivering all the 11,000 buses.
Got that, Mr. Arya. And is effectively with 11,000 buses, I think you have a capacity of about 20,000 buses. So what is the timeline for these 11,000 buses to be delivered? I know you just mentioned for the current order is 12 to 18 months. Would it be safe to suffice that over the next 2 to 3 years, you should be able to deliver most of these buses?
Yes, absolutely.
And what would that do for utilization currently? As of now, what is the utilization and what is the expectations over the next couple of years in terms of utilization?
So with this, the utilization would go up significantly to more than 35%.
Is that so? It will go up to 35%. Is that what you just said?
Yes, yes.
And what would be the current utilization level? Would it be somewhere around the 20-25% mark?
Yes, 15 to 20%.
15 to 20%. And I just wanted to understand in terms of, the lithium-ion battery specifically, because that has been one of the key things in electric buses. I want to understand, because you also have roughly about a 3 gigawatt capacity, and that's been increased to 5 gigawatts. What is, currently, do most of your buses have the battery manufactured by yourself, or is this some which have been imported in the past and going forward you will be replacing that with your indigenized batteries?
So we are almost 100% with our own batteries. Only in the very initial phase when we launched the buses, that time we were buying the batteries from outside, but for the last more than 5 years, we are only producing batteries in-house.
And would that capacity currently be roughly about 3 gigawatt hour?
That capacity is more than 5 gigawatt.
5 gigawatt, all right. And just wanted to understand, in terms of market share, because we have been seeing that, the listed players currently have about 2/3 of the markets, while the rest is dominated by a lot of players. So just wanted to understand, how do you quantify your market share in terms, is it only electric only? What is the kind of any kind of quantification that you can give us for your market share?
So about 35% is our market share currently, with the buses delivered and our order book put together.
And is that only specifically for electric buses, like within
only specifically for electric only? We only produce electric buses today.
Okay. And just wanted to understand one more aspect, because because of the growing consumer needs, we have specifically seen, you have a partnership with Vertilo as well, which is the Macquarie-owned platform. Any kind of details that you can give on that arrangement?
So we have a contract with them that we can supply any amount of buses, and we definitely see that our endeavor is that in a span of 3 to 5 years, we are working on about 3,000 odd buses.
And where would these be already included in your order book of about 11,000 buses, or would that be over and above that?
No, that is partially included in this order book of 11,000.
Partially, okay. And just want to understand, post, we have seen, the new PM E-Drive scheme as well as the PM E-Bus Seva scheme. That has been, driving increased order inflow with the new regulations, of course. Are you seeing the conversations happening at a much quicker pace because of the new regulations, because of whatever the changes have happened in the PM E-Drive? And what could be the expectation in terms of order inflow going forward as well?
No, definitely the market is quite buoyant, and everyone is looking to see that how we can expedite the whole market segment to electric of buses. So I think going forward, by 2030, we are seeing almost 70% buses to be electric, new buses being inducted in the market. And therefore, the opportunity is quite strong and the potential which companies like us can harness, giving a full EV ecosystem solution, is very positive.
Just final couple of questions, Mr. Arya. Specifically, you had showcased a couple of buses in Belgium as well. I wanted to just understand in terms of order book currently, how much would be the number of buses that could be exported? Is there any kind of export content? And if you could also quantify in terms of margins, do export operations have higher margins as well compared to the domestic market?
So currently, we are eyeing a good share in the international market as well. We have multiple orders in the pipeline for exporting to Europe, Middle East, Africa, Southeast Asia as well.
And just one last question, Mr. Arya. What is the kind of order inflow intensity are you expecting in the next fiscal year? Specifically, something that we should watch out for in your components division as well, because we have seen that roughly I think 70-75% of your component division has revenues from the passenger vehicle space, and while that market has been subdued, there is expectation of growing need in the next year and growth as well. Any kind of, while not quantifying guidance, any kind of commentary that you can provide on both these aspects?
No, so we are always looking to see that the component business is growing more than the industry it is catering to. So that would be our endeavor, and very soon in the next couple of months, we'll be coming out with our guidance for the next financial year as well.
Mr. Arya, thanks so much for joining us today and giving us a whole host of details on your performance as well as new orders. We wish you the best and look forward to our next conversation. But thank you so much for joining us today.
Thank you. Pleasure.
All right, Puneet, thank you so much for taking the lead in that conversation. Lots to know about the company as well as the order win, where the order win is concerned. Now, in terms of our first theme, auto is definitely our first theme. We spoke to the management of JBM Auto, and sticking with the auto theme, M&M is the top loser on Nifty 50, and this is after NDTV Profit reported that government may modify the terms of new EV policy as Tesla gets ready for India entry. Now, sources in government suggest that the new EV policy is expected to be rolled out in March. And this was announced a year ago. Shimi has all the details with respect to that. Shimi, what do you have, and what is exactly this EV policy, and when do you expect it to launch?
Government is working on finalizing the guidelines on the new EV policy. Remember, the EV policy requires the investment of 4,150 crore, which gives you the concessional duty of 15% tariff from the current 110% tariff at this point of time. So what we've been given to understand that government is working on making some changes in the terms and condition of the EV policy, and in fact companies and car makers may give a mandate to have a revenue target of 2,500 crore by the second year itself from the date of manufacturing unit being set up. In fact, in the draft policy which was approved last year itself, already have a provision of 5,000 crore revenue target in the first 4 years and 7,500 crore by the fifth year. So this is one addition which is going to be crucial if at all they are going to come as a change in the final policy. Other than that, the assembly line could be included in the existing factory, and any past investment by these car makers whomsoever is interested in the policy would not be considered as a fresh infusion. Any land building cost will also be not counted as a part of the total investment. However, there are consideration around that 5% of the total investment could go towards the EV infrastructure. So that consideration is still in work. So overall, some terms and conditions could see some tweaking, and once the scheme will be notified, the application will be sought, and 2 to 3 months of the timeline will be given for the approval, and after the approval comes, the companies can go ahead with the import. This is important and coming at a time when Tesla, one of the considered to be a key beneficiary of the EV policy, is planning its foray in the Indian market. So this is important, and we've been also, told from our sources that 2 to 3 car makers have already showed interest. However, there is no such commitment came so far. So government, especially the heavy industry ministry, who is the nodal ministry, is working with the Commerce Ministry and Finance Ministry on the proposal, on the changes, and we will see some development in next month itself. And if all goes fine in the internal consultation, we would see that application will be invited by April itself.
Thank you, Shrimi, for all the details. In fact, we spoke to Mahindra & Mahindra's Group CEO and Managing Director Anish Shah at the NDTV Profits Made in Conclave. Here's what he has to say about competing with Tesla.
Because that's exactly the question that was there 25 years ago when various deep-pocketed global players came into India and Mahindra was written off as dead, saying you're not going to be able to compete with them. Right? That's happened on multiple occasions. Today, we have the products that speak for themselves. And in fact, we went to the extent where at our launch, at our test center in Chennai, we actually had some of the best vehicles in the world there along with our vehicles, and we invited the folks at the launch to drive all of them. And our vehicles stood up extremely well against some of the best vehicles, some of which were priced 3 times or 4 times our vehicle as well. So that confidence today comes from the people we have, from what they've done, from what they've developed. And therefore, we feel fairly good about the fact that we can compete with various folks.
Right, so this is what Anisha has to say about it. But before moving ahead, let me just invite Sunny Agrawal, who is Head of Fundamental Equity Research at SBI Securities. Welcome, Sunny. So, your view on M&M, what do you have to say?
Yeah, good afternoon, and thanks for inviting me for this show. Yeah, definitely. I think lot has been talked about what will happen to M&M prospect of electric vehicle division post the entry of Tesla in India. But one has to keep in mind that if I go by the fine print of the EV policy, I think the price band in which the Tesla is likely to operate is likely to be above 30 lakh category. And if you see the recent launches by M&M are close to 20-25 lakh kind of price band. So I think as of now, it seems that the competition will not be too much. And at the same time, I think there is a volume limit as per the earlier policy document that you can import only 8,000 number of units at a lower import duty. So I think I don't know whether that number will be tweaked in the new policy, which will be unveiled maybe over the period of next 1 or 2 years. So we need to see, but again, I feel that automobile as a business require a lot of infrastructure, support infrastructure, service center. And we as an Indian will always look for service as one of the big aspects while before buying, purchasing any car. And that applies for any price band, whether it is at a lower price band, affordable, premium or mid-premium segment. So I think M&M, if you look at a past number, continue to deliver both on tractor as well as SUV portfolio. EV, although it's a small piece as of now, but that was supposed to be one of the growth driver. And looking at the booking number, I don't think so there is much concern on M&M. I think it's a good opportunity where if somebody has missed the bus earlier, can add in the long-term portfolio gradually.
It's a good time to enter is the view coming in from Sunny with respect to M&M. Currently trading almost at its day's lows, down by about 5.5%. Now, continuing with the auto theme, Mercedes-Benz opens a new tab as a company, and as the company braces for a sharp drop in earnings in 2025 and will consider further cost cutting. Puneet joins us to give more details on that. Puneet, over to you.
Well, thanks for that, Mahima. So definitely, it's a gloomy outlook that the company is picturing for 2025. But, they also announced their 2024 results, and it was a lackluster year, to say the least. Group revenues were down 4%, while, the EBIT was almost down 31% in this particular year. naturally the EPS has also been driven down by 24%, and the free cash flow of the company, which was also one of the major figures to watch out for in these results, were down by 19%, coming at 9.2 billion euros. Now, effectively, that's also had an impact on its return of earnings, coming in at 8.7% versus 12.3% on a YOY basis. What's something is that most of these numbers were, the company has signified that the outlook and the sales numbers were going to be impacted, and it's down by roughly 3% at 19.8 lakhs. The top cars were down 14%. The top end cars, this includes the Maybachs, the S classes of the world, were down roughly about 14%, while the new electric vehicle sales was also down 9% this particular year. Of course, there is a lot of uncertainty in the global auto OEM space. They have mentioned in their commentary as well that the ongoing tension between United States and China, while also the other aspect of European Union and China is something to watch out for. Any kind of reciprocal tariffs will be a key negative for something like Mercedes, because most of their cars are getting imported in the US as well. That's a high share. So that will be impacted by tariffs. And finally, just to end this, is the outlook for 2025. It's a somber one to start the least. Sales, the company has mentioned, are expected to be slightly below the 2024 numbers, and the same number has been set for revenue. But the group EBIT is expected to be significantly below. That's what the company has said, and that effectively signifies a more than 15% drop in terms of EBIT that could be expected. In terms of free cash flow, they've also mentioned again that it could be significantly below the 2024 levels of 9.2 billion euros, and that could be as low as and fall as low as 25%. So effectively, it's not a very good outlook. And the numbers by next, the other guys such as BMW as well as Volkswagen will be something to watch out for as well.
Right. Thank you, Puneet, for all the details. Meanwhile, important takeaways coming from Motilal Oswal and Indian Pharma Alliance meet, where the industrial body says that the Indian companies will see minimal impact when it comes to US tariffs. So what they say is, let's just highlight the key takeaways. So they're saying that the reciprocal tariff would have a minimal impact on Indian pharma exports, as India has an export surplus of medicines to the US. While US President Donald Trump is expected to make a detailed announcement on 2nd April, there's a work in progress for a bilateral trade agreement, and the price erosion, if you see, of 10 to 11% annually has already reduced the cost of medicines for the US patient pool. The impact of tariff when implemented according to the IPA would be passed on to patients, thereby increasing the cost of medicines. Government of India has already implemented schemes like PLI to promote indigenous manufacturing, and the Indian pharma products, if you see, accounts for almost 44% of the US pharma market by volume and 47% of generic prescriptions. Thus, according to Secretary General, that is Sudarshan Jain, they say that it would be difficult to replace Indian pharma manufacturers purely by a tariff increase. But we have a city note also on pharma, so they believe that tariffs on Indian generics and API exports to the US are unlikely at this point, and the US, which is a very high which has a very high dependence on Indian generics, are already operating at the thin margins. If tariffs are placed according to city on Indian generic drugs and APIs, which are exported to the US Indian pharmaceutical companies, which might decide that it's no longer profitable to sell certain drugs in the US, and they might rationalize. So the Indian companies might rationalize their portfolio and exit the market. And if this happens, the US could face massive shortage of drug, because they rely heavily on the Indian manufacturers for the generic supply. So let us ask Sunny. So Sunny, all those pressure coming from tariffs on the Indian pharmaceutical companies, what's your view and any counters that you like currently?
Yeah, I think it's not so easy to put tariff on any product which is a kind of which can hurt the larger public in your country. And again, it's not very easy to replace the product at a cheaper cost by setting up a manufacturing immediately in US. Case in point, that if you put a tariff on an Indian product, obviously you are pushing all these companies to set up a manufacturing base in USA. But again, the cost dynamic will change very significantly. Cost will increase, and that need to be pass on to the patients in the US markets. So I think not so easy to be implemented. Yes, obviously over the longer period time frame, very similar to the IT sector, some manufacturing base may move in favor of the US market. But I think in short to medium term, there is no significant impact on all the pharma companies. And if I have to bet my money on the pharma name, then I would like to choose the few names like Blue Jet Healthcare, which is into the contrast media and has reported very good set of numbers during the December quarter. On the pharma side, Cipla is the one stock which we like, a very stable counter. And at the same time, we believe that the growth prospects are pretty good as far as Cipla is concerned. Lupin is another name which is on our radar from a long-term perspective.
All right, so that's the view with respect to the pharma companies as well as the US tariffs. But, shifting focus, in what seems to be the end of Religare saga, the Berman family has now acquired major control of the company and are designated as its promoters. The stock as well is climbing up about 7% if you can pull up the charts. There you go, it's 6.6%. And Charu joins us with more details on this. Charu, what do you have?
The Berman family of Dabur fame has finally acquired the controlling stake of Religare Enterprises Limited. Now, this has happened after an 18-month-long battle before different forums, including the Supreme Court, the Delhi High Court, and several other regulators and tribunal. Now, this has also happened after Rashmi Saluja has been ousted from her board position from the Religare Enterprises Limited, and it remains to be seen how the leadership is going to be taking the company forward. For now, the stock of the Religare Enterprises Limited has also zoomed. However, once the open offer was made to the shareholders, it received a tepid response. However, now the Berman family has acquired the majority stake in Religare Enterprises Limited.
All right, thank you so much for breaking that down for us, Charu. With that, it's time to slip into a very short break, but we'll be right back with more themes on the other side. So stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims?
Welcome back. You're watching Profit Buzzers. Now, moving on to the next theme for the day, there is high probability that NSE might announce index changes today, and this will be the key NSE indices. This includes Nifty 50, Nifty Next 50, as well as Nifty IT, and we have Somit joining you with more details on that. Somit, what are you picking up?
Well, yes, given the past trends, we are expecting that the NSE would announce the Nifty or the NSE indices changes. That will happen most likely today post-market, that the announcement is expected to come in. Now, if the announcement comes in, or if not also it comes in, then also the adjustment regarding that, which means the flows regarding the changes that will happen on the Nifty indices will be on March 27th, and the effective date for these changes will be March 31st. Now, among all the major indices, that is Nifty 50, Nifty IT, Nifty Next 50 and Nifty Bank, we are not expecting any changes to come in on the Nifty Bank index. But when it comes to Nifty 50 index, which is the major benchmark index of India, we are expecting Zomato and Jio Finance to be included in the Nifty 50 index, while BPCL and Britannia will be moving out of the Nifty 50 index. Now, because of the inclusion, Jio Finance could see an inflow of close to $340 million, while Zomato would see an inflow of close to $650 million. On the flip side, BPCL and Britannia would see an outflow of anywhere between $220 to $260 million. Now, if you look at the Nifty Next 50, here it's Indian Hotels, Britannia and BPCL, because they are moving out of the Nifty 50, they'll get included in the Nifty Next 50. Inflows of anywhere between $77 to $102 million. Apart from these three stocks, there are a couple of other stocks that would get included, that is CG Power, Polycab and Hyundai, and these stocks would see an inflow of close to $29 to $62 million. Now, on the flip side, stocks that are moving out of the index, obviously Jio Finance and Zomato will be part of this, given the fact that they're getting included in the Nifty 50. They'll move out of Nifty Next 50. But apart from that, it's BHEL and NHPC which will be moving out, and outflows will be around $38 to $40 million. Apart from these two stocks, the other stocks that will be moving out of the index are the names of IRCTC, NHPC, Union Bank and Adani Total Gas, and these stocks would see an outflow of anywhere between 26 to $37 million. Now, when it comes to the Nifty IT index, only one change is expected on that front. Oracle Finance will get included in the Nifty IT index, and inflows will be around $11 million, while L&T Tech would move out and outflows would be just $8 million. So not much important here, but it's Zomato and Jio Finance that we need to watch out for, because they're getting included in the Nifty 50, and inflows are expected to be anywhere between $340 to $650 million.
All right, thank you so much for breaking that down for us, Somit. We're also welcoming Akshay Bhagwat on the show now. Welcome to the show, Akshay. I'll come to you first. Zomato is something that will, move to Nifty 50 now. How do you read this, and what's the view like?
Good afternoon. Well, on the price charts, Zomato is very precariously poised at its resistance of 240. So for a reversal, positive reversal, or the buy momentum to pick up in Zomato, it's mighty important that it manages to surpass the level of 240. Right now we are at around 230. So the levels to follow is 210 on the downside and 240 on the upside. Expecting choppiness or directionless trades to continue in Zomato for the short term. If it breaks 240, yes, you can expect a momentum uptick or a trend reversal change in Zomato in the days ahead.
All right, so that's the view with respect to Zomato. But I guess there's an interesting brokerage on Bandhan Bank with an upside of 60 odd percent. And we have Somit joining in with more details on that. Somit, 60% of an upside, what is the brokerage exactly saying?
Well, yes, CLS has come out with this note on Bandhan Bank where they have upgraded its rating on the stock to high conviction outperform. From outperform, they have maintained the target price here at around 220 rupees. But this target price suggests a return potential of more than 60% when it comes to Bandhan Bank. So clearly, this shows that it is because of the share price fall, the upgrade has come in for Bandhan Bank. Now, what is the brokerage note saying and why this return potential that they are expecting on Bandhan Bank? They believe that the Indian microfinance space will go from bad to less bad in the next couple of quarters, and from less bad to normal by the second quarter of FY26. In fact, they are also quoting a legendary fund manager, Anthony Bolton, and they are saying that the most money in equity market is made when things go from bad to less bad, and they're expecting that to happen in the microfinance sector, and hence such kind of an upside is what they're expecting from Bandhan Bank. They're also saying Bandhan Bank is a play on MFI recovery cycle with gradual migration to secured loan. That is a stated target of the management, and they are also saying that they will be gravitating towards secured lending without any capital raise. So no equity dilution is expected to happen when it comes to Bandhan Bank. Apart from that, they're also saying that new management team does not have any legacy baggage, and Bandhan is performing much better compared to its other MFI peers. So on that front also Bandhan is better, and on valuation front also they are saying the valuations are quite cheap, and hence this upgrade has come in for Bandhan Bank with a return potential of more than 60%.
All right, thank you so much for breaking that down for us, Somit. Sunny, valuations is something that is looking attractive, to CLSA with respect to Bandhan Banks. What's your view, and do you also think that the 60% upside is justified?
Yeah, I think no doubt that valuations are reasonable, but again, one has to keep in mind that the MFI as a sector is still not out of woods, and I believe the pain is pain will be seen in asset quality during the fourth quarter as well as 1Q. So I would like to avoid, especially in a light that in a backdrop that many other better banks are available at a reasonable valuation. So I would like to bet my money where risk reward is relatively favorable. So our top pick as far as banking sector is concerned are ICICI Bank, Axis Bank, and HDFC Bank among the frontline private sector banks, Karur Vysya Bank among the mid-sized bank. And if I have to bet money on public sector, then Canara Bank and Bank of Baroda.
Okay, Akshay, your quick view with respect to Bandhan Bank, how are the charts faring?
Well, it's too early to call it a bottom in the stock because on the long-term charts, technically it has breached its vital support zone of 160. So I would like to take this one step at a time. Right now, considering the highly oversold parameters, I would look to target 155 to 157. That's what I'll be looking forward to. But there is no still concrete evidence about long-term scenario playing out extremely well for this counter. If it sustains above 160, we will again need to take a review. But as of now, 155 to 157 is what you can target in Bandhan Bank.
Right. Okay. Well, sticking to the brokerage itself, Morgan Stanley has initiated overweight on KEI Industries. Anushi joins in for more details.
KEI Industries for Morgan Stanley has initiated coverage here with an overweight rating, and this is with a target price of 4,391, which implies around 18% of an upside. First, they are very bullish on the cable and the wire franchise business of the company, and it expects the business model to improve going forward as well. Other than that, there are multiple business growth drivers for that, which includes the future of energy theme, which the company is focusing on, that could drive the performance of the business going forward. Exports is something that is expected to improve going forward and should aid the earnings and the margins growth forward as well for the company. We have seen the company talking about their Sanand facility expansion, and in line with that, the step up in this capex to meet the domestic and export demand is something expected to drive the revenue growth forward. With this, Morgan Stanley expects around 23% of an earnings CAGR growth, and this is expected between the fiscal year of FY25 to 28. So this is the overall key reasons why Morgan Stanley is bullish on KEI Industries, and they see a 18% of an upside.
Right. Thank you, Anushi, for all the details. Well, Sunny, coming to you first, what is your view on KEI Industries? And also cables and wires sector as a whole?
Yeah, so coming to KEI industry, no doubt that company has reported a very fantastic set of numbers during the December quarter. But again, growth outlook in terms of the entire cable and wire industry as well as for KEI industry is pretty robust over the period of next 3 years. But what I feel is that looking at a current valuation at which KEI is trading, we are not very comfortable to enter at a current juncture. Maybe buy on dip is the right strategy as far as KEI is concerned. In place of KEI, we are advising our clients to buy Polycab, where we have seen a decent amount of correction. And recently, Polycab has unveiled their 5-year growth plan, where the company is likely to grow at 1.5x the industry growth rate. And that should give at least a kind of 17 to 18% CAGR growth over the next 3 to 5 years. So Polycab, I feel the fair value is close to 6,500 rupees, and Polycab can be accumulated at every day.
Okay, so Sunny is actually bullish on Polycab. Well, Akshay, KEI stock is up almost 4%. How is it looking in charts? Will you suggest buy rating on this?
Yes, if your outlook is with a time horizon of a year, definitely, because I was just going through the monthly charts of KEI Industries. There is a very strong demand pattern which I see on the prices at the levels of 3,600. Lately also volumes have been pretty high at the levels of 3,600, which gives me more confidence that buying is seen at lower levels. So easily you can buy and hold, and with a target area of 4,800 with a time horizon of a year, and furthermore with a higher time frame horizon, you can even look forward to targets till 5,300. So yes, I am convinced with this to go for a buy or a hold, going by the price patterns.
All right, so that's the view with respect to KEI Industries. Now, on the sideline of Invest Kerala Summit, Union Minister Piyush Goyal emphasized the strong India-US relations, aiming to enhance their comprehensive strategic partnership. Rishabh joins us with more details on that. Rishabh, what are you picking up?
Right. We have some hint on what this bilateral trade agreement between the India and the US actually holds for the two countries. Piyush Goyal has come out and said that it will be the mother of all deals, and it will provide huge opportunities to citizens from both nations to sort of complement each other's strengths in what are very turbulent times in geopolitics. A little backdrop on what the bilateral trade agreement is. It is basically not a full-size FTA or a free trade agreement so far, but it is a commitment from both countries to double trade between the two to about $500 billion in the next 5 years. Apart from that, there will be deepening of market access from both sides. There will also be a reduction of tariff as well as non-tariff barriers, and a supply chain strengthening on both sides. What we're also seeing is that this BTA, or the bilateral trade agreement, is expected to come into force by the end of this year. So negotiations can start at any moment now. Now, let's take a listen to what Piyush Goyal said at Invest Kerala.
We'll soon start discussing with the Trump administration in the United States of America a strong, powerful economic engagement and a bilateral trade deal, which will be the mother of all deals, providing huge opportunities for Indians and Americans to work together to complement each other's strengths in this very turbulent world. And this is the time that I would urge investors from across the world not to miss the bus, not to miss the boat, as I would say it in Kerala, because those who miss the boat may be left at the shore, while others will sail along with the tailwinds of growth, progress and prosperity that India offers.
Right, so this is what Piyush Goyal has to say at Kerala Summit. While energy stocks will be in focus, as two brokerage firm Investec and Morgan Stanley has issued report on Suzlon and JSW Energy. Mika joins us with more details.
Morgan Stanley has also initiated coverage on JSW Energy. It's initiated with an overweight rating at a target price of 545 rupees, which indicates a 20% upside. They've stated how the one-year forward EV to EBITDA valuations of the company are now standing at 13 times, which is below the 3-year average of around 14.3 times. They are calling the JSW Energy one of the best Indian utilities to play the future of energy theme. They mentioned the diverse asset portfolio across power, generation, the emerging businesses that the company is getting involved in, and also the various investments is looking forward to as positive for the company. And it's also stated that JSW Energy is one of the smartest and most experienced management teams in the space, which works in favor for the firm. Lastly, Morgan Stanley has noted steady cash flows, and the recent equity raise by the company will help fund the growth capital for the company. They expect JSW also to achieve its 2030 target of 20 gigawatts of operational capacity well within time by FY28. They also expect EBITDA compounded annual growth rate of 24% over FY24 to 28. They do expect net debt to rise to 7 times in FY27, but then reduce subsequently.
Right. Thank you, Mihika. Sunny, your view, I mean, what do you like? You like Suzlon or JSW Energy?
On a relative basis, again, I would like to go ahead with JSW Energy because, again, recently we have seen JSW Energy going ahead and acquiring a big portfolio as far as renewable energy is concerned. So that is diversify the portfolio for JSW Energy, and the kind of growth outlook which we are seeing for renewable as a portfolio. I feel JSW Energy is trading at a reasonable valuation, but if given a choice from within the power sector, I think post correction now, even other power players like NTPC and Tata Power are trading at a very reasonable valuation, and both these stocks offer a decent upside from the current market price.
All right. Now, shifting focus to something that's announced today, SEBI Chairperson Madhvi Puri Booch weighed in on the flurry of sectoral and thematic schemes launched by the mutual funds over the past 1 year. Now, she said there's an incentive to sell these schemes, and the regulator is open to curbing this. Alex is joining us to explain what this is exactly.
All right, the context first. There has been an absolute flurry of sectoral and thematic schemes that has been launched by the mutual fund industry over the last 1 year. Let's look at some of this data. For actively managed equity mutual fund schemes, the inflows over the last 12 months have been about 4.1 lakh crore rupees. Out of that, the inflows into sectoral and thematic have been about 1.6 lakh crore, and that's about 40% of the total. Now take a look at how much has come through NFOs, that is new fund offers, new schemes that are launched over the last 12 months, 81,774 crore, or roughly half of the inflows into these sectoral and thematic funds have come through NFOs. Take a look at how many schemes have been launched over the course of the last year, and you will find that there were 50 plus schemes that have been launched in that time frame, and about 90% of the total flows through NFOs have come through sectoral and thematic schemes. To put things into context, at the end of January 2025, there were 205 sectoral and thematic schemes, and 54 of those were launched just over the last 12 months. Now, understand why this is taking place. To understand that, you will have to understand what total expense ratio is. A total expense ratio is the cost that you bear when you invest in a mutual fund scheme. Now, the rules state that the mutual fund has to reduce the total expense ratio, which is described as a percentage of the net asset value, which is essentially the per unit cost of a mutual fund scheme. It has to reduce this as the assets under management go up. There is a grade in which this goes up. Let's pull that table up just so that you can understand how this works. On the first 500 crore, that is, if a scheme is launched today and in the new fund offer, 500 crore or less than 500 crore is collected, if you are one of those investors, you will pay a maximum of 2.25%. If it goes up to 750 crore, then that total expense ratio, the maximum that can be charged by the mutual fund scheme, goes down to 2%. And there's a graded reduction over the course of the increase in the assets under management till we go to 40,000 crore, beyond 40,000 crore, and then upwards of 50,000 crore. When it reaches upwards of 50,000 crore, and let's go to the next slide, and one more after that, about 1% is the amount that you would pay, right? So why is it important? Every new scheme that is offered, the mutual fund is able to charge a higher rate for the scheme the distributor that is selling that to you gets a larger amount of money, and what happens is that they are incentivized to sell this to you. So if your distributor has come and told you, hey, there's this new scheme that you should consider, sell your old scheme and go to the new scheme, then you probably understand why that is taking place. SEBI chair is saying that when a regulator comes across certain things, they have to try and find out what the reason is. And they have actually found out that there is an incentive for the sale of these schemes, and they are open to curbing it. Now, the only way seemingly that they can curb this is to stop the approvals that they themselves have been giving over the course of the last 1 year. Remember, 54 schemes have been launched.
Interesting take, Alex, and quite a comprehensive understanding of and breakdown of the entire topic. Sunny, I'll come to you. Interesting takeaways coming in from the Amphi meet. What's your view with respect to everything that Madhvi Puri has said?
Yeah, definitely. I think if I talk from a mutual fund perspective or AMC company perspective, looking at a telescopic pricing model, obviously it makes sense for any AMC company to launch a new scheme and garner more yield or increase the yield by at a lower AUM, and that definitely augurs well for AMC or mutual fund company. But from a consumer perspective or from a investor who is investing in this NFO, obviously that leads to sometimes mis-selling by the distributor, wherein distributor is incentivized by selling of a new NFO or new launch of any new scheme. So again, it's a dilemma between profit on one end and at the same time consumer interest on other end. I think ultimately, again, a thematic fund, if you look at it has got a higher risk because ultimately you are trying to invest in only one particular sector, which can have a cyclical up and down over the period of 3 to 5 years. So again, what I feel is that ultimately this will be curbed by the SEBI. That is what I can feel or what I can get from the conversation by Honorable SEBI chairperson. And yeah, let's see how this plays out over the period of next 3 to 6 months.
Right. Big relief for Indian pilots. Directorate General of Civil Aviation pushes for new pilot duty norms and high airlines opposition. Sesa Sen has more details on this.
Right, so the aviation regulator or the DGCA urged Delhi High Court to dismiss a writ petition filed by pilot unions, arguing that a two-phased timeline had been set to ensure sufficient rest for pilots in order to minimize the risk of untoward incidents while maintaining operational stability for airlines. The DGCA submitted a detailed plan to the High Court for enforcing the revised rules. Notably, 15 clauses will be implemented from July, which includes the extended rest periods for pilots from 36 to 48 hours, while 7 clauses that will take effect on November 1st are related to the night duty rules. Now, this is according to an affidavit filed before the High Court. The revised rules limit night duty flight timings to 8 hours and allow for a maximum of 2 landings. The definition of night period has also been altered to span from midnight to 6 a.m. and extension from the previous midnight to 5 a.m. Pilots operating on long-range, ultra-long-range routes have been guaranteed a minimum of 120 hours of rest. Now, these changes were originally supposed to be implemented from January last year. However, it was put on hold due to severe resistance from airlines, forcing several pilot unions to approach the court. Airlines had warned that these changes could impact their operations. However, after several rounds of deliberations, the aviation regulator has agreed to a staggered implementation of the new rules. The DGCA has now urged the Delhi High Court to consider its detailed revised plan as the final roadmap and have requested that the writ petition be disposed of. The High Court will now hear the matter next on February 24th.
Thank you so much, Sesa, for giving us the update with respect to the new guidelines for pilot, given out by DGCA. With that, Sunny and Akshay, thank you so much for joining us today at NDTV Profit, and thank you so much for taking our time and giving us all those insights. All right, with that, it's the end of this edition of Profit Buzzers, but let's listen in to what Rajneesh Karnatak, MD and CEO of Bank of India, said about digital products being the solution for reducing current accounts. Listen in.
As I said, digital is the solution. The more we digitize with our current account, the more digital products we offer to the customers, both on the current account and saving, the more will be the engagement of the clients, both on current and saving, and the deposit would be there.
Are you working on any such projects right now?
Yeah, a lot of projects and products are going on which are digital products, and we want to increase the product per customer, both on saving and current accounts.
So what's the sense of the stress in the unsecured? Do you believe that is secure? Are you worried it will leak into the secured assets?
No, as far as unsecured personal loan book is there, it is hardly 2% of our entire global loan book. Within that, the stress is only hardly, within that book, it is hardly 2%, which includes the SMA also.
Right. And the rate cut that you've already passed on, what's the kind of impact that you would see on margins would you expect going forward?
Yeah, definitely there will be some impact on the margins because the conversion of the deposit side will take some time. So there will be some immediate short-term impact on the margins.
Could you quantify?
No, at this present I will not be able to quantify, but definitely there will be some short-term impact on the NIMs.
Right. So
it will be a sharp impact or some marginal? No, marginal impact.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture?
Hello and welcome to NDTV Profit. You're watching Top Trades. I'm your host, Anushi Vakharia. Now, what's happening to the markets? Yesterday, we were talking about how it was a sigh of relief for the markets that were in green. But it's not the same case scenario that we can be seeing again. Now, if you look at what's happening with Nifty 50 down about 0.68%, let's see which are the stocks which is leading to this downtick in trade today. A couple of names which are pulling down the index. Let's see some of these counters in focus. M&M, the biggest loser on the Nifty 50 chart, seeing cuts of about 5%. ICICI Bank continues on the downward trajectory, seeing about 30 points of a negative contribution over here. Infosys, Kotak Mahindra Bank adding to the pressure as well. Now, if you look at what's also on the other side, what's working out, we have counters like L&T, Tata Steel in focus. We are seeing a couple of metal stocks in focus. In fact, it's the only gaining index in trade today. That is why we are looking Tata Steel, Hindalco up in trade today. We have something like HCLT Technologies also up in trade today. But let's also pull out the advance and decline ratio. Mostly we'll be looking at more declines than the advances in trade today. Of course, the markets skewed in the red. 1,300 declines as compared to about 900 advances in trades that we are seeing in the NSE market overall. Coming to the sectoral picture overall, so we are looking at all the sectors in red. Currently, metal is the only gaining sector today. In fact, it's up over 1.35%. We are looking cuts of around 2% in the pharma we are seeing in the last 2-3 sessions because of what's happening with the US Trump tariff plans on pharmaceuticals. 25% of imposition on the imports is something which is leading to a continuous drag on this counter. We have counters like PSU Media, PSU Banks and Media seeing also cuts of around 1 to 1.3%, and consumption and realty pack also losing seeing about 1% of a downtick in trade today. But coming to the broader market picture, it's not a pretty picture here as well. Nifty Midcap 150 is down about 1% in trade. Let's in fact pull out some of the indices which are leading to this kind of a downtick that we are looking at. So Ipca Labs, Biocon, Muthoot Finance, some of these counters down about 4% in trade today. Marico as well seeing cuts of around 4%. But what is in the green? Let's pull out some of those stocks as well. What is working out over here is counters like Godrej Industries up around 9%. JSW Infra Sale seeing about 4 to 7% of gains. Now coming to the small cap 250 index, even we are looking at pressure there as well. The index currently seeing about 0.6% of cuts. So we have seen pressure building up for overall broader markets. But with that, let's understand the overall view on the markets. And for that, we are joined in by our today's guest, Narendra Solanki, the Head Fundamental Research of Investment Services, Anand Rathi Services and Stock Brokers. Hi, welcome to the show, Narendra. First of all, I think the last couple of sessions, all the views have been on not the stock-specific action, but on the market-specific action. I want to understand your view on the markets currently.
Yeah, good afternoon. Yes, definitely. Yesterday, it looked like some buying interest is coming in on the market, especially if you look at the broader market breadth. So it was promising, and we were expecting that Friday would be a weekly close, so market should support, and if it supports, then the next one would be good. But today, post opening, the kind of selling we have seen in even all the sectors except cyclical metals are in red. So basically, the market has lost yesterday's support, and right now again because of a new wave of Trump tariffs. I think the auto sector is leading the declines, and as well as sentiments. So definitely the markets are in a very volatile scenario right now, and the global volatility and Trump tariffs volatility is also hitting the markets straight away. So in short term, I think the market needs to find a base and from where it can try to build up some gains. But right now, it looks very difficult whether the market will find any base. So let's hope for next week we could find some kind of base for the markets. But right now, markets are weak.
Okay, but in today's volatile markets, what we are currently looking at, what is working out is the metal pack, the only gaining sector in trade today. In fact, MK has released a note on the space, issuing a bullish call on certain counters. What are these metal stocks that MK is bullish on? We have Mika standing by to break this down for us.
MK has always been bullish on metal counters in terms of their pecking order or preference to the stocks. First lies Nalco, then Vedanta, and then Hindalco Industries. Now, they do expect Hindalco, Vedanta, and Nalco to generate upcycle profitability and returns. Now, currently, the market is factoring in 16.5% and 11% lower commodity prices for counters like Nalco and Vedanta, respectively. And for that, for Hindalco, they're factoring 9.8% higher commodity prices. What this basically indicates is that the stocks that are pricing in lower commodity prices tend to provide more cushion on the downside end, and if the spot metal prices do uphold, then Nalco and Vedanta could see a 16.8% and 4.4% upgrade to their consolidated FY26 EBITDA estimate as per the brokerage. Lastly, one thing that lies a key variable are the alumina and aluminium prices, and if they do stay higher for longer, then the near-term earnings would be due for an upgrade, is what the brokerage is saying.
Okay, well, thanks for that, Mika. Narendra, I'll come to you on the metal pack. We were just discussing about that before. Some stocks that Mika talked about included the likes of Nalco, Vedanta, and Hindalco. Want to understand your views on these counters and if you have preferred picks in the space?
Yeah, definitely. We also have a positive view on the overall sector, and most of the stocks under our coverage have filtered towards buyer rating rather than otherwise. And if you look at the global scenario, so yesterday's news of aluminium prices trading at highs is also positive for overall metal sector. And in terms of stocks, right now, one of our top picks is Lloyd Metals and Engineering, which is currently going to see a good capacity expansion. Plus, it is backward integrating, and it is the only player in the region in Maharashtra where only large player. So it is going to cater to all the demands, most of the demands in the region. And in terms of its captive mines, it has one of the lowest cost captive mines in the industry. So it is going to have a very big leverage, operating leverage in terms of margins. So Lloyd Metal and Engineering is one of our top picks. And after that, I think Hindalco Coal India in materials space is also one of our favorite picks in this space.
Okay, Lloyd's Metal is something that we can track from in the metal space along with the counters that Mika was talking about. But another stock in focus is Bandhan Bank, and this is after CLSS upgraded this bank to a high conviction outperform. Somit joins us with a more detailed report on the same.
CLSA has come out with this note on Bandhan Bank where they have upgraded its rating on the stock to high conviction outperform. From outperform, they have maintained the target price here at around 220 rupees. But this target price suggests a return potential of more than 60% when it comes to Bandhan Bank. So clearly, this shows that it is because of the share price fall, the upgrade has come in for Bandhan Bank. Now, what is the brokerage note saying and why this return potential that they are expecting on Bandhan Bank? They believe that the Indian microfinance space will go from bad to less bad in the next couple of quarters, and from less bad to normal by the second quarter of FY26. In fact, they're also quoting a legendary fund manager, Anthony Bolton, and they're saying that the most money in equity market is made when things go from bad to less bad, and they're expecting that to happen in the microfinance sector, and hence such kind of an upside is what they're expecting from Bandhan Bank. They're also saying Bandhan Bank is a play on MFI recovery cycle with gradual migration to secure loan. That is a stated target of the management, and they're also also saying that they will be gravitating towards secured lending without any capital raise. So no equity dilution is expected to happen when it comes to Bandhan Bank. Apart from that, they're also saying that new management team does not have any legacy baggage, and Bandhan is performing much better compared to its other MFI peers. So on that front also Bandhan is better, and on valuation front also they are saying the valuations are quite cheap, and hence this upgrade has come in for Bandhan Bank with a return potential of more than 60%.
Okay, well, that's the view for Bandhan Bank, a clear, positive view from the brokerage. Narendra, I want to understand your view for Bandhan Bank. Now, the expectation is that the picture would look optimistic from the second quarter of the next financial year forward. What's your outlook on the stock?
Yeah, as far as microfinance sector is concerned, definitely right now the situation is that unsecured lending and the small portfolio lending has been facing some pressure in terms of delinquencies. But as far as Bandhan Bank is concerned, it has one of the lowest in its ratios, delinquency ratios in its industry, and the slippages were higher than the previous quarter in the latest quarter. But the overall book has remained healthy, and I think at 1.7% ROA in the medium term, I think the banks looks good for long-term basis.
Okay, well, that's the view for Bandhan Bank and the overall microfinance sector as well. But shifting focus, government may modify the terms of the new EV policy amid Tesla readies its entry in India. Sources in government said that the new EV policy is expected to be rolled out in March. This was announced a year ago. Shrimi has the details on the same on this one.
Yeah, so the new EV policy, which requires the fresh capital infusion of 4,150 crore to avail the concessional duty of 15% tariff against the 110% tariff at this point of time, could see some modification. Government is working on the final guidelines and could be notified next month, that is in March. Government sources tells us that, companies, EV makers may be mandated to have a revenue target of 2,500 crore by second year itself from the date of setting up the manufacturing unit. The draft policy, which was announced last year, already mandated 5,000 crore of revenue by fourth year and 7,500 crore of revenue by fifth year. So this is going to be the additional requirement. Other than that, there's some caveat is also be the part of the new EV policy, which include that no past investment will be considered under the new scheme. Land building cost would not be the part of fresh infusion, and you will see some changes in terms of EV infrastructure. So 5% of the total infusion could be considered as a part of the total investment coming from the EV maker. So 2 to 3 EV makers already sort of showed interest in the scheme. However, there's no commitment so far came. So when the scheme will be notified, government will invite application, and 2 to 3 months of the timeline will go for the approval, and post that they will start importing under the scheme criteria. So this is coming at a time where, one of the key beneficiary, Tesla, of the scheme is, announcing its, entry in the Indian market. So this is going to be, beneficial for this, for them. And, we are also getting indication that government is wanting this scheme to be in place. And that's why we will see some progress next month itself.
Okay, well, thanks for those details, Shrimi. Narendra, coming to your particularly big development that we are looking in terms of where the EV policies are concerned, and one standout line if we see is the 4,150 crore of investment for 15% import duty versus the 110% tariff which was there. Want to understand your outlook on this development, and even on the auto sector, what could the implication be with the Tesla's entry and the other considerations? What's your overall view building in for the auto sector?
Yeah, definitely. And I think this is the news which has been making the auto sector down today. And I think definitely short-term sentiments are more negative. But I think as far as if you see overall impact of this sector on the auto sector would be very gradual and very minimal in the short to medium term. Because if you see the kind of contenders, the products they are having, so they are all premium products. And even after these kind of stops, the pricing in the India would not be below 50 lakhs. So it would be about 50 to 70 kind of lakhs minimum ending range Model 3 if we want to talk about for Tesla. So these are all premium products. So and the mass market does not seems to be pretty much impacted by this. However, in the long term, we have to see how the overall EV infrastructure growth goes on and how the overall costing comes down. So I don't see any major negative for short to medium term. But long term, you have to see beyond 3 years how the overall landscape builds up. But I think Indian companies are well equipped and they have also invested a lot in R&D developments and the products they have and the cost advantage they have over these products. And I think so they are very competitive, and I think they would be giving a good competition, and it's very good for the overall auto sector as competition is concerned. So don't see any much negative over for this sector right now.
Okay, well, that's the view for the auto sector. But thank you so much, Narendra, for joining and sharing your outlook on various of the counters that we've discussed in trade today. But that's all the buzzing stocks in focus for the day. But before we go, let's take a look across at Crompton, which unveiled a couple of indigenous platforms for smart and energy-saving products. We spoke to the MD and CEO, Promeet Josh, who talked about the roadmap ahead for the company. Listen into that chunk of conversation.
We've coined the term Crompton 2.0. This is a strategy that we rolled out about a little bit more than a year and a half ago. The essence of this strategy is to drive growth in Crompton in absolute terms, both in revenue terms as well as in profit terms. And how are we doing that? That we are doing by investing into all the drivers and the underlying building blocks that will generate long-term growth for us, steady long-term growth for us, which means in various sectors putting more money than we had previously done, putting more focus, more people than we'd previously done. One of the areas is innovation. We have, as you already heard earlier today, unveiled the initial benefits of the kind of focus that we've been putting on innovation. We're currently spending order of magnitude about 100 crores in innovation every year. We have created centers of excellence in each one of our functions. Now, these are working on elevating the capabilities that we have across the board, across the company. Finally, we are also putting more money and effort into stepping up our digitization as well as our A&P spends. So we have, as you may be already aware, the last quarter we spent 50% more than we spent 1 year ago. The previous quarter also was a 50% more than the quarter before that, 1 year before that, and so on and so forth. And none of the transformation of Crompton is eventually going to pan out unless we make digitization happen. So that's an area that we are embedding in various parts of how we do business in Crompton.
All right, Mr. Ghosh.
So that's in a substance summary of what, yeah, go on, please.
Right. So, Mr. Ghosh, I just wanted to understand, you mentioned that digitization is one of the key, aspects that you're looking into. I was also seeing that you're set to launch a new range of next-gen fans as well as pumps. I want to understand as to how are these different from the normal ones that you're already doing, the product portfolio that was already there with you. And what is the kind of, market response? You might have done, your first survey for these things. What is the kind of market response that you've gotten, and how big can this be, let's say, 2-3 years down the line?
Right. So, Mahima, what we have launched or unveiled today is not a new range of fans or pumps. What we have instead done is actually unveiled the next generation of platforms in induction motors and BLDC motors. Now, these next generation of motors will progressively be embedded into our fans, in the future into every one of our fans, and also finally into every one of our pumps, right? So what do these platforms do, and how are they next generation? Firstly, our next generation of induction motors is called X-Tech. As you know, induction motors is a fairly well-established technology, has been around for years. But it's also technology that India has an incredible benefit in, because we have arguably the largest scale anywhere in the world. Our estimate is that we are the largest fans market in the world, and within that, our own estimate is that we are probably the largest ceiling fans company in the world at Crompton. And this technology has very extensive supply chain already built into India. What we are doing is coming up with the next generation of technologies which elevates these motors and leverages off the supply chain that is already available in India. The next generation of induction motors will be more energy efficient while preserving all the benefits that induction motors have, which is durability, reliability, repair. And in addition to this, this platform is an interoperable platform between BLDC and induction, which allows us to come up with, leverage the huge scale that induction motors have to also come up with BLDC fans. The external looks of both the induction and the BLDC fans would look the same, and therefore allow us to defray the costs over a much larger volume. So across the board, we believe that our induction motor products, currently in fans, eventually also in pumps and mixer grinders and air coolers, will transition to this technology. Now also simultaneously, we have indigenously in-house also developed what we are calling Nucleus. That's the next generation BLDC platform. Now, this takes current BLDC fans that we today sell and embeds into them superior electronics, superior technology, which not only keeps them on the trajectory of progressively improving energy efficiency, but also is a platform which has been tested in the vast number of operating conditions that Indian fans today work in. High voltage surges, heat, dust. We believe that in making fans which suit the Indian consumer, we have not only to embed high technology, but also durable technology, and that's what we're doing with Nucleus.
Got it. Mr. Ghosh, one last question from my side. In terms of the Q3 numbers, this is the first quarter, after 5 quarters that you've not seen a double-digit growth, but margins have expanded, YOY. I just wanted to understand that, margins have now come to the range where, they were earlier. Do you expect them to sustain at the same level, or do you see a growth from here? And what has, led to the kind of, single-digit growth in terms of revenue?
Yeah, as you said, Mahima, we haven't seen double-digit growth this quarter, though year-to-date our double-digit, we continue to see double-digit YOY growth. This has come in, behaving as a market leader, Mahima. You would have seen that there are, some competitors of ours who've chosen not necessarily to be as disciplined as one would have hoped, and that has shown up both in revenues as well as in profit margins. We do believe that we have to behave in a disciplined manner.
very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello, welcome. This is India Market Open. I'm Agam Vakil. We are taking a look at how markets are faring on this Friday afternoon. It's the last trading day of this week, but we haven't had as much traction in the benchmarks. Sure, the Nifty is coming off further, pardon me, and it's breaking a very recent low. It does seem like that. And if we do close at around the mark of 22,750 odd, well, things could potentially take a turn for the worse. But let's hold on. We still have an hour and a half left for close, so we will perhaps reserve those comments until 3:15. For now, however, the Nifty is down by around 0.7%. The Bank Nifty is down around 0.9%. And it has wiped up all the gains it had made in the session day before, because that was a day in which the Bank Nifty was clearly outperforming the Nifty 50. Let's take a look at the heat map for the Nifty 50 then and see where there is a pull and push. So firstly, the breadth isn't, well, encouraging at all on the Nifty 50. We have a 6% cut for M&M, about a 2.5% for Wipro, Tata Motors, Adani Ports and BPCL. And among gainers, just about a 2%, 2.5% up move for Tata Steel and Hindalco, and L&T and Eicher Motors advancing by 1%. But there are only 4 names on the Nifty 50 which are advancing by more than 1%. Everything else looking very, very lackluster at this point in time. Let's move on and talk about the broader markets then. And first, I'd like to start by taking a look at the advance decline ratio, which actually has reversed after 2 or 3 sessions where things were looking favorable. We now once again have advances take over, well, or rather declines take over advances. That brings me to the broader markets. Broader markets currently are once again, well, lackluster. The mid-cap index is now underperforming the Nifty. That's down around 1.3%, and the small cap index is also down 0.1%, pardon me, 0.9%. Now, in terms of your key movers as far as broader markets go, let's pull up that list of all the big gainers and losers there. And while in terms of momentum, we do have Godrej Industries, Godrej Century Ply, JSW Energy and Laopala advancing by around over 5%. Cyient, Asahi India, Ipca Laboratories and Radico Khaitan looking at a reversal. In fact, Radico Khaitan, it does seem like it's looking at about a short covering after some strength that we have seen off late in the company, as is the case for TVS Motor Company and Spark. Piramal Pharma as well is one of those counters which was showing strength, but today it's down in trade. Well, all in all, it's once again a mixed day of trade, but not very encouraging signs when it comes to the markets out there, Neeraj.
Yes, indeed. And in fact, let's take it to our guest to try and figure out what to do in a scenario like this. Ruchit Jain, of course, joins in, President of Equity Technical Research, Wealth Management, Motilal Oswal. Ruchit, good having you. Thanks for joining in. Good afternoon. How important would it be for the markets to close above 22,800? And if we don't, does it augur very negatively, or are you looking at a range of 20 to 700 to 800?
Yeah, hi, very good afternoon, Neeraj. So, Neeraj, last couple of trading sessions were very important for our markets because we had seen a decent pullback move, I would say, in the mid cap and the small cap space when they were trading around their 4th June, the election day results panic low, which was there. So, the previous low support was there. That was a very good level for the markets to stage a comeback since the momentum readings were oversold. But what we saw that the mid caps witnessed a pullback, small caps witnessed a pullback, but no momentum was seen in the large cap space. So the markets cannot see a run up without leadership coming in from the Nifty, the benchmark index, or from the large cap stocks. And today we have seen that we have again seen a continuation of the down move. So I don't think it would make a much difference if we close around this 22,800 mark as well. I think what is more important for us to surpass the 23,000 mark again, because 23,000 is now the 20 days exponential moving average, the short-term moving average which has not been surpassed since last few days. So I think until we see a move above this 20 EMA, I think the momentum would continue to be a bit negative bias. The pullback moves are getting sold into, and major next support we would watch out for the short term would only be around 22,500. So I think still rather than looking at 22,800, I think I would wait for some more time to see some more participation from the larger names. Maybe a breakout about 20 or 20-day exponential moving average is required. Else, I think we will slowly and gradually go towards the 22,500 mark where next support is placed.
Okay, Ruchit, while we have you here with us, why don't you give us your top picks as well for this hour?
Yeah, hi Agam, very good afternoon. Very difficult time to give any stock ideas, frankly. The kind of momentum that we are witnessing. We just have one sell idea for today's show, which is a sell call in Poonawalla. So ideally, we are just looking for some stocks which have not shown any kind of up move or strength in last few trading sessions. So Poonawalla is one stock where there has been a relative underperformance consistently. So here we believe that the down move could continue since the price volume action is also bearish on positional charts. So one can go short on the future segment with stop loss about 296 for potential targets around 269.
Okay. Well, Gurmeet Chadda, Managing Partner and CEO of Complete Circle, also with us. Gurmeet, great having you. Thank you so much for joining in as well. Gurmeet, I want to start off, I have limited time with you, right? So, with both of you. So, I want to start off with the main talking points of today. One is, firstly, the last 2 days, small caps are showing a bit of an uptick, kind of getting sold today. Are you guys putting in money to work right now, or are you waiting for lower levels?
So Neeraj, we are going in a staggered manner, and a lot of it we need to first understand. I think this particular sell-off is more maths than something fundamental. Your risk-free rate in US is 4.5% for 10-year and almost 5% for 20-year bond. You add about currency depreciation of 2-3%, that makes it 7.5-8%. If you want to stay in India for a risk-free return, you add 4-5% as the risk premium to EMs, which means the FIs need to have a sight of 12-13%, right, to consider equity allocation here. And this point of time, we can argue whether 22,700 gives that level, or maybe slightly lower level it may come. So I think the key metric to track here from a sell-off perspective, because sell-off is more, first it was US and now it is within EM, maybe India to China, is bond yields coming off and India becoming relatively more attractive. So I think for me, the main metric is US bond yields dropping slightly because of the tariffs issues and all. It's also got stuck at about 4.5. The positive news is the dollar index is now sub 107 and hopefully it remains for some time. And if bond yields fall, I think the sell-off will reduce. So, it's very difficult to guess how long will this selling keep happening. But there are pockets which are offering a lot of value. And as an investor, I can only control what is in my control, which is equity allocation. And we are adding to names where we think, the valuations are becoming attractive.
Okay. It clearly shows, Gurmeet, that the fear factor is very high. On the slightest whiff of possible challenges or bad news, stocks are getting sold off. M&M a case in point today, right? Auto stocks by and large are dragging down. But this story about maybe lower duties for global companies coming in if they're making select investments, etc., and therefore competition heating up. What's your thought here? I mean, independent of whether Tesla or BYD or anybody else really makes a dent or no? Just the market fragmentation. Is that enough to cause this kind of damage in the stock prices of companies like M&M, for example, which actually came out with a really good quarter?
I looks a little overdone to me, Neeraj, in the short term. It always happens. And if you see the top 10 selling cars in India, only two cars are above 20 lakhs, which is Creta and Scorpio. The highest selling is your Tata Punch, followed by WagonR, and then you have a lot of Maruti models, and then Creta and Scorpio. So if you see that, and if I don't see Tesla entering at 22 lakh. I think it will be more like 35 lakhs. In fact, their best selling model is Model Y, which is more closer to 67, above 50 lakhs, which is upwards of $50,000, right? So I think it's a little overdone to me because the EV penetration is just 2% right now. We 2.5 maybe. We sold 1 lakh EV cars on 40 lakh cars we sold last year. Assuming it picks up by 15-20% over the next 3-4 years, you're still talking of 3-4 lakh units. So I think it's a little overdone, especially in case of M&M, because M&M is also tractors, M&M is also farm equipment, and automobile is 55% of the mix, and it's a leader in most categories. Even in SUVs now, the market share is inched back to 23%. So only when there is challenges is when you get better prices. But in short run, the market can humble you. I may say M&M is good and it may further, because of the sell-off tag. But that's the call you have to take. That you have to ask yourself: is this pain temporary or this is structural? My view is this is temporary, and that's why the best way to do is stagger it rather than keep waiting. And nobody's going to call us and say now M&M is attractive. Let's start buying.
Gurmeet, in what areas are you staggeringly allocating funds now? What are the areas that are emerging for you as far as your portfolios go?
So, as I said, we are looking at banks. I think banks are extremely attractive. I think a lot of the negativity on NIMs getting under pressure. I think a lot of it is in the price. Plus, I think you should have another rate cut in April, and RBI will infuse more liquidity and more credit-related measures, liquidity through OMOs and CRR card. And maybe you might also see some risk weightages also getting realigned on certain categories of loan, which they think needs to be boosted. Secondly, we like niche IT names. I think there is the pressure of wage inflation is less, attrition has come down, discretionary spending is picking up. So a lot of both large and mid cap IT offer that near term earning momentum. In a market like this, you need a bit of an earning momentum. We are adding some of the digital names which have seen very good correction. Some of the new age names like Zomato. I think I keep saying this, that a traditional business puts up a factory and we call it OPEX. Non-traditional e-commerce business does open dark stores and we call it cash burn. I think that thing needs to change because digital businesses create habits, while traditional businesses create assets. And I think habits are as important as assets in the long run. So that is something we are looking at. We are looking at some pharma names, especially the branded pharma names, with very little US linkage, where we find good earning momentum. So especially names like Mankind Pharma, a few more branded generics, and some select CDMO names where a lot of molecules are in stage 3, especially in consumer health, animal health, and couple of path-breaking therapies. And last theme being the environment theme, which is the water treatment and plastic recycling. I think that problem is structural and here to stay. Elections are getting changed because of water and river cleaning. So I think that's something we are looking at.
Okay. Just before we ask the final question to Gurmeet, Ruchit, I want you to come in on the auto weakness today and the kind of cuts that we've seen in M&M in particular. I mean, Gurmeet, of course, believes it's overdone. Do the charts show that as well?
Well, I think some more pain could be there in M&M because I was just, when Gurmeet was speaking, I was just looking at some positional charts. On the weekly charts, the 50 weeks, I had just seen the 50 weeks exponential moving average on M&M. And it gave a breakout which started a bull trend in the M&M in May 2023, when the stock was, I think, around 1350 kind of levels. From there, we have seen a decent uptrend, from since that period of time, and the stock had hit a height of 3,300. And after May 2023, this is for the first time where we are going to witness a weekly close below its 50 EMA. So I think this should lead to some more price-wise correction. Probably a consolidation should bring the stock maybe down towards 2400 to 3350 mark, where major long-term supports are placed. So yes, I think if one has to buy the stock, then maybe on dips towards 2400 if we get, then the risk-reward ratio would become favorable not to go long over there.
All right. Well, one of the interesting names that even Gurmeet mentioned right now is Mankind Pharma, and of course, well, it's on a downtrend along with a lot of the other companies. But the important factor here, of course, is that it still has a lot of earnings runway to come through. Ruchit, a quick word on Mankind as well.
Short-term trend seems to be a bit corrective phase in Mankind as well. Now 2600, 2550 is the resistance which has not been surpassed since last few weeks. And on the lower side, 2000 is where the major support for the stock is placed. So I think either one should wait for a breakout above 2600 or on dip towards 2200, 2000, 2100 range where one can look for buying opportunities there.
Okay. Gurmeet, one last question from pockets which have not corrected too much. In the recent fall at the broader end of the spectrum, is there something that you would still look to shun? Because one is, of course, people looking to buy what has corrected quite significantly. What is still expensive or not showing growth in the market?
Neeraj, I think a couple of consumer staple names. I think the tax cut would have a bigger impact on discretionary spending. So we've added names like Trent in the portfolio, which is more at a mass affluent and a mass segment. And we are also looking at some travel names. We've added some hotel names in the portfolio. Indigo has been there for a long while now. We found it very structural. But some of the consumer staple names, I think, which are giving you a bit of a cushion right now because, but I don't see really volume growth in staples coming back to double digit, maybe with a few exceptions. Maybe Tata Consumer or Imami or some of the Godrej Consumer could be a bit of an exception there. But in general, I think the companies are still facing headwinds. I think rural recovery, once it comes back in full throttle, with the harvest season around April, I think that's the time you want to watch that. So that's one space where, which right now has acted well in defending it, but that's something you can look at in terms of moving into from non-discretionary to discretionary, and then try and play the uptick. Because my sense is a high beta portfolio right now. If you can do a bit of a transition, it's a risky call, not easy to see a lot of pain in the portfolio, but we have seen it enough, and this time the difference is that this correction has been a more grinding one. Last few years, the correction happened in a month, including the Russia-Ukraine one, 15% happened in a month and we recovered. This time it's been like 5 months, and it's not that you're getting lower circuits, you're getting, grindingly 1%, 2% going off, on a weekly basis. And that's something which tests you. It tests you more in the stomach than in the head.
Gurmeet, we leave it at that. Thank you so much for joining us and giving us your perspective on the markets right now. A much needed one as well, perhaps. But we have yet another, expert joining us now. We have Rahul Veera. He's the fund manager of equity at Nippon India, joining us on the show. Rahul, good afternoon. Thanks for joining in. The strategy here on in these Indian markets, how are you approaching them now at this point in time?
Right. Hi, good afternoon. Our idea is at this point of time, right, be very stock specific, focus on companies which are having strong earnings visibility and comfort on valuations. And our last 3 years has been a little bit too momentum-less market. Everything was working. We believe going forward, it will be very selective market. In terms of the stock selection, it will be very, very critical in terms of your convictions, in terms of your earning visibility. Have that comfort. Stay with the portfolio for next 3 to 5 years. We believe that still there is a lot of money to be made in the medium term. Near term, there could be volatility from a global perspective as well.
All right. Well, in that case, areas that you like, Rahul, areas that look interesting to you, where there is quality and perhaps a valuation comfort?
Yeah, so some of the themes like power, right? We believe that the power transition theme over the next 3 to 5 years in India specifically is going to play out very well. Now, next 2 to 3 years, we know that 14 to 15 gigawatt of capacity is getting added in India at 237 gigawatt of peak power demand. We are seeing some shortages that will happen in India from next 2 to 3 years that will continue. A lot of capex plans in the transmission side as well. Almost 9 lakh crore, 9 trillion was the layout given by the government for the NEP2 plants. we believe a lot of opportunities in this particular segment will play out. There is still decent earnings comfort as well as the valuation comfort in some of the names in this segment. The other segment that we like is the pharma. We believe the earnings consistency, whether it's not just the CDMO, but even the branded generics on the domestic side will do relatively well. On the global side, the larger names in the pharma will see some volatility as one of the large key molecules is going off patent, and that could be lead to some kind of a P&L pressures for some of the names who have not been able to substitute it with the equally good opportunities.
Rahul, good afternoon. Neeraj here. Great talking to you. I believe it's the first time that we have you on NDTV Profit, so thank you for your time. And correct me if I'm choosing one fund as a depiction of what you might be thinking about the whole portfolio, but when I look at the Nippon India Growth Fund, for example, I see that there is a fair degree of bias towards the mid-cap end of the market. Your giant caps and large caps are maybe about 35-38% and not really dramatically higher number as some of the other fund managers have been telling us. I found that interesting. Why is that the case? Everybody seems to be more constructive in large caps and find safety there. You're not quite doing that.
Yeah. Hi, Neeraj. So now just to talk from the Nippon AIF side of it, right? So we believe that mid caps and small caps from a 10-year perspective, right? If you see the returns that have been generated, the kind of alpha that small caps and mid caps have made, and given at this point of time, the valuations, we still continue to believe mid caps and small caps will do well in the medium term. Near term volatility will be there. Now, for example, if I take the case of Nifty Small Cap 100 index itself, right? It's at 18 PE today on a FY27 basis, almost closer to where Nifty is today. So a lot of people have these questions that usually it trades at a discount. But if you see the earnings profile for between the large caps and the small cap and the betas or the PEG ratios, hence we believe that small cap will continue to do better in the medium term.
Interesting. Okay. So, but typically the way a rising tide would carry all boats higher, a tide which is going down might even drag the good boats lower, right? So is that a risk that you foresee in the very short term, or do you believe the 20% correction that we've seen, circa 20% that we've seen, kind of bakes in the negatives?
See, the intensity of correction that has happened in the past 6 months, right, has baked in a lot of valuation drop that was there in the system. It has largely taken care of that. At this point of time, somewhere the comfort is coming on in terms of valuations. Broader market may not do well. If you see NSE 500, right, the profitability growth between the top 100 and the bottom 400, still bottom 400 profitability pool is growing at a faster rate. All the pool is smaller. So NSE 500 profitability of 14 lakh crore approximately, right, that has been growing in the high single digit. Now, if you remove the cyclicals, OMCs or even the global cyclical like metals, then the earnings growth is in the 10 to 14% kind of range. So there are opportunities. The profit pools are increasing in the mid cap and small cap space as well. So your PEs are deflating. So near term pain in the volatility, it will be there. But medium term, again, these things, as you rightly said, the tide will be back. In 3 to 5 years, we'll see the decent earnings growth happening, and probably the stocks eventually will reflect that.
All right. And Rahul, I want your opinion on what's happening globally. I want your opinion on dollar index, the way things are panning out. Of course, you know, the way changes are happening with respect to US policies and the kind of implications it may have for fund flows in India. How are you reading the situation?
So on a global scenario, if you see, usually US and India, in terms of ROE profile of the companies, right, at the index level, has always been on the higher end, including the PEs for both these countries. Now, there is some kind of a asset reallocation happening. In the near term, yes, 6 months basis, we see some kind of a continuity in terms of outflows will happen. But again, in the mid-cap, small-cap space, you will see that largely it's the HNI and retail money that is more critical here. We believe that that is more or less stabilized at this point of time.
All right. And in the way you are going about constructing your own portfolios at the moment, say, for example, you have about 30 stocks in a portfolio. Are you witnessing, or does it land up at this point in time that you have 25 instead of 30 or 35 instead of 30?
No, so we are at closer to 30. What we have promised to the investors, we are in line with that. But in terms of the cash in our recent most portfolio, we have almost 35% cash in the portfolio, which has helped, right, through this volatility. Now, in terms of the conviction, like we are building positions in some of these very niche names, again, pure bottom-up stock selection strategy across pharma, across power, across of some of the selective consumption names we are doing.
Rahul, this, so again, just trying to understand this strategy of spreading out, and of course your AUM is very large, but the strategy of spreading this whole AUM out across, I think in one of the schemes it's maybe 90 odd stocks, maybe some of the others it might be lower, but are you consciously doing that in order to mitigate the risk of some accidents happening, and would you veer towards a more concentrated strategy once the market stabilizes, or not quite that?
Right. So see, in our alternate space, right, in Nippon Alternate, so we consistently are doing 25 to 30 stocks only in each of the portfolios. So they are slightly higher beta, but we believe given the strategy and the conviction call that we are taking in the portfolios, we believe that this will help us in the long run. So the kind of alpha generation possibility these concentrated strategies have, that can help the investors to generate that incremental alpha in these alternate strategies.
Now the other interesting thing is what you started off the conversation with in terms of what do you like, and there seems to be almost a consensus for healthcare, but within healthcare, after Donald Trump's comments and the fact that maybe Revlimid revenues for a lot of companies might come off, people have taken the sheen of pure play pharmaceuticals which are US exposed and focusing more on CDMO, on hospitals, on diagnostics and that variety. Now, I'd love to know, how are you looking at the healthcare bucket?
Sure. So if you see Revlimid, right, it was a very large opportunity, almost $8 billion in US itself and global $12 billion. Now, when such a large molecule with very strong gross margins and EBITDA margins in the portfolio for a lot of these Indian companies as well who are supplying, if suddenly that goes off, it's very difficult to replace with any other molecules. So the kind of volatility in the P&L, right, even if you're doing a SOTP for all these pharma companies, large cap names, it'll be very challenging for a lot of these names to do scenario analysis. So we believe some of the money will go to where more certainty in terms of earnings profile will be there. So CDMO, again, branded generics on the domestic side, and probably hospitals. So largely these three sectors buckets will people start realigning themselves now.
Okay. The other aspect, Rahul, that is around tech. Now, of course, what the commentary from global majors might be is difficult to say, but Walmart sounded off the bugle of caution overnight. And in the last 4 or 5 days, we've seen two distinct types of notes from the sell side, right? One on LTTS today, wherein they have clearly focused, one of the brokerages has clearly focused on the valuation comfort. And there was one 3 or 4 days ago on Persistent, wherein they are saying it's a quality franchise, having corrected, we want to buy it because it will continue to deliver growth, so even if it's expensive. When you are trying to pick up businesses at the mid-cap, tech name, if you will, you are preferring growth, or are you preferring the valuation comfort?
Right. For us, it's largely going to be a blend of both. Right, some of the names in terms of the sustainability of growth, not the near-term growth, but the sustainability of growth. The visibility is very minimal. So what you are paying like 40, 50 P for some of the names becomes challenging for us. So what we do is we go a little bit down the curve in terms of valuations, but reasonable growth at reasonable prices that we are looking for.
Right. Rahul, I also have a question on the auto sector, not just in India, but globally, because we've had indications from Mercedes where they've said that they're expecting lower operating gains. It does seem like, I was surprised to know that Mercedes is in fact offering discounts. On the other hand, you also have the potential entry of Tesla in Indian markets, which is why we could see weakness in the EV space in the Indian markets to a certain extent. My question is, how are you going about Indian auto OEM guys specifically?
Right. So yesterday in the Siam conclave, right, the industry conclave, some of the industry experts mentioned that the kind of growth that they'll see across CV, PV, including the two-wheelers. Two-wheelers continues to be on a low base where they are expecting like high teens growth. Also on the CV and PV, it's going to be mid-single digit that they are looking forward to. But if you see the kind of commentary they made and the delivery that has happened by the industry over the past 6 years, largely we have underperformed what the Siam has guided. So from year on, right, we've already crossed 2018 volumes for two-wheelers as well as four-wheelers. So incremental growth on this kind of a base is going to be challenging. So all of us will have to work with like mid-single digit PVCV volumes, and at best high single digit in two-wheelers as well. So from those numbers, you'll have to take a valuation call from there on.
Right, Rahul, we'll leave it at that. Thank you so much for joining us and, well, giving us your views on markets and how to potentially approach them. But on that note, we slip into a short break. But stay tuned in. Back in just a bit. You're watching NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday.
Welcome back. This is India Market Close. Want to take a look at a handful of companies from the EMS space and how they're looking technically, because these are companies like Dixon, KS Technologies. These are companies which have come off to a certain extent from their recently made life highs. But the question really is this a good time to get back in? How are they looking on the charts? Kunal, this question is for you. How are you rating and what is your assessment of Dixon Technologies? And second is Keynes.
I think I'll first start with Keynes. I think here the setup looks quite good. The stock is already trading in an oversold zone. We have witnessed a correction from almost 7,800 to the mark of 3,800. And even if I take a retracement of this, I think at least towards the mark of 5,000 on the short-term basis is what I look at. So this is a buy for me, good volume-based buying, what we have seen in today's trading session. Plus it has given a breakout above the previous 5 to 6 days trading sessions high as well. So 5,000 is what I'm looking for a short-term perspective. On the downside, one can keep a stop loss of 4,100 for Keynes Technology. Dixon over here, it has been trading in a very narrow range. It is trading near the very critical support zone of the 200 DMA, which is placed at 13,738. And if that is reached on the downside and we see follow-up selling pressure, then this could again go down towards 12,400, 500 zone on the downside. But here there is still no view, no confirmation. I'll be only bullish once the stock breaks above 14,563, which is the 200 DMA, which is the 20-day moving average for Dixon. So once that is taken out, then one can go along into not at the current levels.
Right. Nirav, are valuations conducive at this point in time for these names?
Well, valuations at this point of time look quite expensive because we've not seen that operating leverage, etc. kick in yet for all these companies. At the same time, I think another factor which needs to be taken into account is that these stocks tend to get euphoric on various occasions. Stock prices tend to go up and then the results tend to pull them down, or you have a random announcement that a Tata Group has big plans to enter into this space and they are planning to make huge investments in this space, and then fears of competitive intensity, a lot of other factors which tend to pull down these stocks. So I think these stocks are likely to consolidate at the current levels before we find any concrete news flow to support the valuations.
Okay. Well, let's move on and talk about the pharma space. In fact, there are some important takeaways coming in from Motilal Oswal and the Indian Pharma Alliance meet, where the industrial body says that the Indian companies will see minimal impact from potential US tariffs. Varsha now joins us to give us more details. Varsha.
Motilal Oswal had hosted Sudarshan Jain, who is the secretary of IPA. What they're saying is the reciprocal tariffs would have a minimal impact on Indian pharma, as India has an export surplus of medicines to the US. While US President is expected to make a detailed announcement on 2nd April, there is work in progress when it comes to bilateral trade agreement. And the price erosion of 10 to 11% annually has already reduced the cost of medicines for the US patient pool. And what they're saying, the impact of the tariff, when implemented would be passed on to the patients, thereby increasing the cost of medicines. While Government of India has implemented schemes like PLI to promote indigenous manufacturing, and if you see the Indian pharma accounts almost 44% for the US pharma market by volume and 47% when it comes to generics prescription. So thus they're saying that it would be difficult to replace Indian pharma manufacturers purely by a tariff increase. While there was a note on pharma by Citi also, where they're saying that they believe that tariffs on the Indian generics and API exposed to the US are unlikely at this point. The US is very high dependence on Indian generics, which are operating at a very thin margin. If tariffs are placed, then Indian drugs and APIs exported to the US might decide that they no longer want to, go into a place where that is less profitable, and they might rationalize the portfolio and exit the market. And if this happens, the US could face massive shortage of those drugs because they rely heavily on Indian market. However, due to uncertainty, the stocks may remain volatile.
Okay, Varsha, thank you so much for those updates. Neera, back to you on this particular sector. What are you making of it considering the current moves from the US?
Well, I think whatever was said in the last couple of minutes is something which should make every Indian proud, because it was India which supplied hydroxychloroquine to the US in a very, very tight situation during COVID. And we've always been a reliable supplier of generic drugs to the developed countries. Having said that, I think there are a lot of opportunities in the generic space. A lot of patents are going off expiration, and this is a big opportunity as far as the generic space is concerned. So I think while the pricing pressure tends to prevail in the generic space, but there are a huge amount of opportunities. And I think our personal assessment of the situation is that I think Indian companies are likely to face a minimal impact because by virtue of being reliable suppliers of medicines to the world. And of course, the opportunity is there as far as generics are concerned, CDMO is concerned, which we all know. But I think more so also in the case of specialty drugs. Then, of course, companies like Divi's Labs have spoken about the custom synthesis process, which can be a very big contributor to the revenues, as well as nutraceuticals. So a whole host of opportunities are there, and I think it's only a question of time where we see minimal impact on the pharma sector.
Let's talk about the other names which are actually gaining in trade on the Nifty 50, and of course among them, besides the two metal counters, we also have SBI Life, which has come to the fore now. That's up around 2%. That's followed by Eicher Motors, which is also up and about in trade today. We haven't seen significant gains in any of these counters, but SBI Life looks like, well, it's making gains in today's share of trade. What do you do with it on a technical basis? What's SBI Life telling you, Kunal?
One of the call recommendations, what we recommended in the start of the show was SBI Life, where we initiated on the long side. So we feel that the structure is still bullish. We expect 1510 to 1530 to be achieved in the very short term. So we continue to be bullish on the counter.
All right. Well, let's move on and talk about Bandhan Bank then, which is in focus. CLSA upgrades Bandhan Bank to high conviction outperform. Somit joins us to give us more details here. Somit.
CLSA has come out with this note on Bandhan Bank where they have upgraded its rating on the stock to high conviction outperform. From outperform, they have maintained the target price here at around 220 rupees. But this target price suggests a return potential of more than 60% when it comes to Bandhan Bank. So clearly, this shows that it is because of the share price fall, the upgrade has come in for Bandhan Bank. Now, what is the brokerage note saying and why this return potential that they are expecting on Bandhan Bank? They believe that the Indian microfinance space will go from bad to less bad in the next couple of quarters, and from less bad to normal by the second quarter of FY26. In fact, they're also quoting a legendary fund manager, Anthony Bolton, and they're saying that the most money in equity market is made when things go from bad to less bad, and they're expecting that to happen in the microfinance sector, and hence such kind of an upside is what they're expecting from Bandhan Bank. They're also saying Bandhan Bank is a play on MFI recovery cycle with gradual migration to secured loan. That is a stated target of the management, and they're also also saying that they will be gravitating towards secured lending without any capital raise. So no equity dilution is expected to happen when it comes to Bandhan Bank. Apart from that, they're also saying that new management team does not have any legacy baggage, and Bandhan is performing much better compared to its other MFI peers. So on that front also Bandhan is better, and on valuation front also they are saying the valuations are quite cheap, and hence this upgrade has come in for Bandhan Bank with a return potential of more than 60%.
All of these may have cooled off, but this argument is interesting. Now, first, Kunal, what do the charts show for some of these stocks which are either pure play MFIs or have an MFI piece to themselves? Bandhan is one. People talk about IndusInd Bank being the other, and then of course some of the pure play MFI names as well. Are they bottoming out, any of these?
None of them looks like a bottoming out at the current levels, but there could be some pullback rally what we can see in this stock. As I said, that the markets are at a very critical level, needs to hold on to this level to witness this pullback rally. So firstly, Bandhan Bank, yes, it has been trading in a deep downtrend where a lot of low bottom formations were there. Finally, we are seeing some positive divergence on the technical charts. So that's a positive sign. If this rally continues, it can go towards the mark of 153, 154 in a very short term, which is the swing high for the stock in the near term. Whereas IndusInd Bank is concerned over here, I think IndusInd Bank is trying to break out on the upside, but the overall structure has been very weak for the stock. So I will be bullish on the stock once it surpasses the mark of 1070 on the upside. Once that is taken out, that will give me a confirmation for further higher levels towards 1100, 1120 on the upside.
Okay. Nirav, one times book IndusInd, Bandhan Bank, CLSA believes again the correction makes it valuable. Would you bottom fish, or are there better names?
I think there are better names at the moment, and I think the recovery at this point of time is wishful thinking. Hopefully, things should recover, as it has been pointed out in this report, towards the second quarter of FY26. But I think it would be better to wait and watch.
I want your overall view on what you made of earnings so far for the quarter gone by. How have they panned out with respect to your expectations? And what can we expect from earnings based on the commentary of managements in the fourth quarter?
I think the first three quarters have been a disappointment, and a lot of things, a lot of managements who had given very lofty expectations in terms of revenue guidances for FY26 and FY27 are now beginning to look a little bit difficult to achieve. Margins have come under pressure suddenly. We've seen the commentaries from management pointing out various issues like how there have been delays in procurement of orders, how there has been a shortage of skilled labor, how there has been a delay in processes, how there has been a delay in receivables in certain sectors like the water-related sectors. So a whole host of issues which have suddenly come up and impacted various companies. At the same time, we've seen companies where there have been healthy order wins, but the stocks have just refused to react. Yesterday, we had a good order win by Bharat Forge, but the stock refused to budge. We have today Action Construction Equipment, which has come out with a 420 crore order, which is the largest order which it has got from the defense sector. But the stock has reacted negatively to this development. So I think there are many such instances which we have seen. There have been companies where there has been a hit of around 2 to 3% on the net profit margins, which are barely around 7%. And these companies have come ahead and said that they expect the competition to intensify and the margins to decline further going ahead. So there's no recovery or respite which is there in sight at this point of time. We've seen many such instances. We've seen large companies like the FMCG sector companies also complain that there has been input pricing pressure which they have experienced. We've seen paint companies also feel the heat. So overall, it's been a very difficult quarter in terms of performance.
Well, this certainly has, but I just want to give a disclaimer here. As far as Action Construction is concerned, it's something that the company has spoken about. This particular government defense order, well, it's something the company's spoken about, that they have been working on it, and today was the final conclusion of it. Of course, the development is a positive one, but Action Construction is under pressure, as Nirav just pointed out. But let's shift focus to energy stocks then, and we have two more on our radar. In fact, Investec and Morgan Stanley have issued reports on Suzlon and JSW Energy. Mihika joins us with more.
Morgan Stanley has also initiated coverage on JSW Energy. It's initiated with an overweight trading at a target price of 545 rupees, which indicates a 20% upside. They've stated how the one-year forward EV to EBITDA valuations of the company are now standing at 13 times, which is below the 3-year average of around 14.3 times. They are calling the JSW Energy one of the best Indian utilities to play the future of energy theme. They mentioned the diverse asset portfolio across power generation, the emerging businesses that the company is getting involved in, and also the various investments is looking forward to as positive for the company. And it's also stated that JSW Energy is one of the smartest and most experienced management teams in the space, which works in favor for the firm. Lastly, Morgan Stanley has noted steady cash flows, and the recent equity raise by the company will help fund the growth capital for the company. They expect JSW also to achieve its 2030 target of 20 gigawatts of operational capacity well within time by FY28. They also expect EBITDA compounded annual growth rate of 24% over FY24 to 28. They do expect net debt to rise to 7 times in FY27, but then reduce subsequently.
Well, thanks so much for that, Mihika. Let's talk about JSW Energy because what we've seen is a little bit of a resurgence here. And maybe I can take this one up on the charts as well. Kunal, how are you reading cues on this one?
I think JSW Energy, the structure was very weak post this, the fall what we had. Now in the last 3 to 4 trading sessions, we have seen a good rally on the higher end. The stock has surpassed its 20 DMA. Now the resistance for the stock on the higher end is placed at 550. So still some 20 bucks left on the higher end for the stock. But post that, again, we will see the stock coming down towards the mark of 460, 470. So still a little bit, if you are holding long, continue to hold long. Fresh longs can be added with a very strict stop loss, where 480 should be a stop loss on the downside, and 510 and 515 should be a target on the upside.
Okay, 6% higher today on that note, and doing really well for itself. Power companies selectively, or energy companies, and I think Nirav Ashar was talking about it, that some of these have seen some powering ahead. I would love to know, Nirav, from a Suzlon, Inox, JSW Energy, some of the cable companies, etc. Lot of verticals, there are sub-verticals. Where is it that you are the most constructive on as a house?
Well, I think we still continue to like the power distribution space, where we have the transformer related companies, GE, Vernova, Hitachi Energy, because of the technology backbone which they have. And at the same time, I think on the power generation side, we like stocks like JSW Energy and Torrent Power, Tata Power. More so because they are very well backward integrated in terms of operations. They have a strong execution capabilities. They have good power purchase agreements in place. They have a diversified portfolio in terms of having the right mix of thermal and renewable sources of energies, and a lot of other technical expertise and elements. And I think going forward, we are coming into the summer season, and we will start seeing the demand begin to pick up going forward. And hopefully this should also pull up the spot rates as far as the power exchanges are concerned. So we'll be waiting for data to come out of these power exchanges as to what is the spot rates which have been going on, to give us an idea about where the power rates are headed.
Okay. But clearly, some of those stocks have done well, and you can't take your eyes away from those for sure. What else? I was trying to look at stocks which have had a bit of a pain. Kunal, for all the talk around how CDMO is looking very strong, after a brief spurt, some of these stocks have given way. So, for example, Laurus Labs is at 521 now. The all promise came in, stock went up all to 600. It's significantly off. A clutch of others too have come down. Is there a short trade on any of these?
Yeah, I think over here, Laurus Lab, as you mentioned out here, the structure is getting weaker, where already we had seen a good sell-off from the high levels, and post that the stock has been making lower top, lower bottom formations. So the next support for the stock on the downside is placed around the mark of 510, 505 level on the downside. So a quick 10 to 15 bucks can be seen, where the 200 DMA for the stock is also placed. So one can look for any bounce to utilize it for short side. The resistance on the higher end is placed at 540.
Actually, Kunal, another question is for you on BSE. Would you buy the stock at this point in time?
See, all the structure has been very strong. So already if somebody is holding from the lower levels, then continue to trail your stop loss. And on the high levels, I will be buyer in the stock once it surpasses again on the higher end the levels of 6,000. I think that will gain more strength into the stock, and you will see a quick momentum towards 6,250, 6,300 levels on the upside. So not at the current levels, because here it has multiple resistance around 6,000, 6,000 zone. And if that is surpassed in Monday's trading session, that would lead to further short covering, and that will pull the stock higher towards 6,200 to 50 mark on the high end.
All right. Hold that thought. Let's shift focus to a couple of companies who may face some heat on the back of tariffs from the US. I am talking about apparel manufacturing companies, Pearl Global, as well as Borosil Renewables. We spoke to the managements to understand if these tariffs would in fact impact them. Listen in.
US market, it can be. There's one slight risk. I'm sure, we have started a bilateral discussion at this point of time. That could actually turn the tide so much in India's favor as well. But yes, that's like speculation at this point of time. Can't talk of much on that. As a company at Pearl Global, we definitely have a risk mitigation approach in all the things that we do. So if you look at our production, we have a major production happening outside of India as well. India contributes to about 25% of our revenue as of now. And some of these very large sector of supply chain, that means I told you about the Southeast Asia or the Central America or the South Asia. So all these regions do compromise that division of where we are manufacturing and where these customers are sourcing from. So that definitely is a risk mitigating factor for us. And India, if there is eventually, if it happens, let's say I say probability would be very low. If that happens, then we have on the other hand the other markets of the globe. So let's see how this sector does. But I personally don't believe there would be an immediate impact in terms of tariff.
The US has imposed tariffs on imports and exports, and they are not solar industry is not very important under the new regime. Well, we were never exporting anything there anyway. There's nothing of great significance, so it doesn't really matter to us.
All right, I guess it's time to take buy today, sell tomorrow ideas. Kunal, anything on your radar?
So I think over here, one stock which looks attractive to me at the current levels over here is PCBL, that is Philip Carbon on the cash trend. The stock has given a breakout on the technical charts. The previous 5 to 6 days highs have been taken out decisively. So 396, 397 is where it is currently trading. One can look to go long. Keep a stop loss of 389 on the downside and look for targets of 405 to 410 on the upside.
Okay, watch out for that particular stock. The other is the weakness that we've seen in a clutch of these mid-cap IT names today. All of them, or rather a lot of them, have corrected quite significantly. How do the charts look here, Kunal? Let me point out. So for example, Persistent Systems is certainly down in trade about 3.5%, and KPIT Tech is down about 2%. In fact, LTTS is probably an exception to the rule, so which is up about 4%. So let's try and divvy up and tell us, where do the charts look weak, where do they look okay?
See, firstly, I'll talk about the Nifty IT as an index first. So Nifty IT index, we have seen some correction from the R levels. Now the index is trading at the critical support of the 200 DMA, which is placed at 40,593. So right now, when we are speaking, we are trading just below that 200 DMA. Now we need to have any reversals from the current levels to have some positive momentum building up. If not, then this correction could get deeper into the IT index going towards the mark of 39,900 on the lower end. The IT index is currently trading at 40,600 mark. So more 500, 600 points on the index perspective would be there. Coming back to your stocks, I think persistent overall the structure has been sideways. In today's trading session, we have taken a resistance as a 20 DMA, which is placed at 5,933. So once that is taken out, then we can see some reversal coming into the stock. Till the time it could be sideways to mild on the negative side.
Okay, well, on that note, let's take a look at what we are keeping an eye on as we move into the weekend. First up, we have India MPC meeting minutes, which will give us an idea about what the MPC, in fact, is thinking at this point in time with respect to the economy, inflation, and of course, interest rates. We also have an update on India Forex reserves, which I suspect will stay afloat because it doesn't seem like the dollar has corrected against the Indian rupee. So that's going to be another important key factor to watch, certainly. But moving on, we're also keeping an eye on the US flash PMI as well as home sales. The US home sales could be another factor to keep an eye on as far as the US economy is concerned. Moving on, we will have shares which will exit in lock-in for Swiggy. This will come to around less than 0.5% on Monday. NTPC Green as well, where 2% equity could potentially see some selling. And Interarc Building Products a whopping 40%. So watch out for that as well. But besides that, we don't have too much to keep an eye on as far as this upcoming Monday goes, or for that matter, this weekend in general, Neeraj.
Yep, but pain certainly in and around some of the key names, and that's to be remembered as well. You know, I was looking at some research done by companies wherein some mid-cap names actually stood out as outliers and did reasonably okay, if you will. So Muthoot Finance stands out with that list, right? And people have been talking about a possible deal brewing in Manappuram. The question is, this downtick that we've seen in Muthoot plus Manappuram staying quiet, should you look at gold financing companies at all or avoid them completely? And if so, what within the two looks more palatable? Nirav, do you guys have coverage here?
No, we've not been looking at gold financing.
Acha, not looking at gold financing. No mind. Okay, the other one is Nirav around the wealth management firms, because we were doing this piece yesterday about how some of the stocks have seen upticks in earnings estimates for both FY25 and 26, and Nuvama maybe 361, but Nuvama for sure stood out there. Any thoughts here on any of the wealth management firms?
Well, I think we like Nuvama and it's likely to perform well. So that's there in the portfolio. So we continue to hold that.
Nuvama. Okay. The other one is APL Apollo Tubes, Nirav. Very quickly here. Any thoughts here? Apparently taking a price hike, guidance to meet EBITDA might be met. Any thoughts?
Yeah, but I think they have superior quality margins. The product trajectory is also quite strong. But I think still the valuations leave a little bit more to be desired.
Okay. Kunal, what about you? Any of these? And specifically the gold finance companies, how do the charts look here?
If you look at gold finance company, Muthoot had been an outperformer in the recent time. I think the structure still remains bullish where heart of our bottom formations are there. There could be short-term correction, but I think it has a good enough support at 2150, 2160 zone. So I think that dip, even if it comes, that could be a buying opportunity. I expect the stock to go back towards the mark of 2300 on the upside.
2,300 on the upside for Muthoot. So bear that in mind. Lastly, hotel names. Anything from a chalet to Indian hotels to APJ Park or any of those? Kunal, what do the charts look here?
See, I think if you look at the hotel space, I think one stock which stands out over here is Indian Hotels. I think the structure is still strong. The stock had taken a support at exactly at its 200 DMA and had witnessed a strong bounce the last 3-4 trading sessions have been very good for the stock. Already the short-term rally has been played out. I think you will get some correction into the stock, but that would be a buying opportunity. The support for the stock on the lower end is placed at 730, 725 zone. Currently trading around 755. So more 20 bucks down. That is the place where it finds a good support zone. One can go long at those levels and can see further higher levels of at least 810 to 830 on the upside.
Okay, less than 2 minutes to go for close. On that note, thanking both our experts, Nirav and Kunal, for joining us and taking us through their views on the markets. As far as the Nifty is concerned, well, it's closing below 22,800. I don't know if it's just good news, bad news, but I can tell you that at least as far as technicals are concerned, may not necessarily be the most encouraging of notes. Still, it's going to be about next week as well, whether or not consolidation continues. The Bank Nifty has also come off and has also moved and closed now below the mark of 50,000. So not the best of data points to come out so far. Let's talk about the heat map and see how things are faring there, where there's pull and push as far as the Nifty is concerned. And we continue to see an advance for two of these metal counters, that is Hindalco and Tata Steel. And on the losing end, the biggest loser on today's day of trade is M&M, followed by BPCL, Adani Ports, Adani Enterprises and Tata Motors, losing out anywhere between 2.5% to 3% in trade. And as far as your market breadth is concerned, well, we've seen a little bit of reversal based on what we have been used to over the last couple of days. More losers than gainers, but there isn't a very big gap between these two numbers. That perhaps can be taken as a positive. I'm not really entirely sure whether or not that is the case. But let's move on and talk about your broader market indices too. And today is a day where we have in fact seen underperformance with respect to the benchmark. So the mid-cap index down around 1.3%. And the small cap index is down around 0.8% as well. And moving on in terms of the constituents of these as well, let's take a look at the BSE top gainers, BSE 500 top gainers and losers. Of course, I'm not about the contribution. We do know that M&M and ICSM are weighing down on the indices, but we do have something like a Godrej Industries, Arkin Chemicals, JSW Energy and ITI advancing in trade. And on the losing end, something like the Cyient, Asahi India and Piramal Pharma looking at a bout of profit taking. That said, let's also take a look at how things have panned out for the benchmarks through the course of the week, the last 5 trading sessions. How has that come through? So it's flat. Well, again, this isn't much of a surprise because it's something that we've been telling you. And after today's decline, it will have been 12 out of the last 13 sessions where the Nifty did in fact come off from the previous day. As far as the Bank Nifty is concerned, again, flat, but marginally in the green. So consolidation continues for both these benchmarks, and we don't have too much to go in for otherwise. The mid-cap index, sure, it's moved up around 3%. What about the small cap index? That's also moved up around 2.3%. So all in all, well, a good week for the broader markets, not so much for the benchmarks where consolidation continues. But on that note, that is all that we have for this edition of India Market Close. But lots more lined up on the other side. You're watching NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind present?
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. Viewers, benchmarks indices ends with losses. The Nifty fails to cross the 23,000 mark, ends at 22,800 levels. The Sensex declines over 400 points to end below 75,300 mark. Broader markets snapped their gaining streak to decline today. The mid-caps underperformed the Nifty to end lower over 1%. Small caps register losses as well, decline over 0.5%. All sectoral indices barring metals end with losses. Auto falls the most over 2%, followed by pharma, media, PSU banks and realty. Foreign investors offload nearly flows worth nearly $2.5 billion in the first fortnight of February 2025. As per MK Research, telecommunication receives the highest inflow of $269 million, whereas the financial services saw outflow of $615 million. Additionally, capital goods sector lost funds worth $586 million. Jefferies says that hospital stocks have been on a downward spree on negative news flows due to price standardization, free bed allocation. The recovery was equally fast once investors gauged the minimal impact from the news flow. Jefferies believes that recent news flow of Adani Group entering healthcare is unlikely to alter the competitive landscape as feared. Adds that weakness in stocks should be used as a buying opportunity given resilient earnings outlook. For the consumption space, JP Morgan says that price hikes speed up and the innovation pace is healthy ahead of summer. Monthly price checks across multiple FMCG product categories indicate that the pace of price hikes rise. The hike is driven by inflation in various agricultural commodities like edible oil, tea, coffee and cocoa. Nomura maintains a buy stance on Axis Bank with a target of 1,230 rupees. The bank's evaluations are inexpensive for a healthy return of assets outlook. Nomura says that a tough liquidity scenario weighs on the financials growth. The asset quality is not a cause of concern on the back of healthy profitability outlook. The domestic pharma industry may not be significantly impacted by potential US tariffs. Brokerages of Motilal Oswal and Citi see a minimal impact as India inches closer to a trade deal. The price erosion has reduced the cost of medicines in US and tariffs may raise the US patent costs. Citi, on the other hand, is of the view that tariffs on Indian generics and active pharmaceutical ingredients are unlikely. Since US relies heavily on low-margin Indian generics, tariffs could cause shortages and price hikes. L&T Technology Services gets a double upgrade from Macquarie. The research firm gives a target of 6,530 rupees with an upside of 33%. Macquarie expects the company's growth to pick up in plant and engineering, whereas the margins to benefit from tailwinds. CLSA upgrades high conviction outperformers list. CLSA has a price target of 220 rupees on the stock and had an earlier rating of outperform. CLSA's price target implies a potential upside of 60%, calling Bandhan Bank a play on the MFI recovery cycle with a gradual migration to secured loans. CLSA cited that the new management's intention to increase the share of secured loans to 55% to 60% from the current level of 50%. Morgan Stanley initiates overweight on key industries. The company has a strong cable and wire franchise. The company's business model continues to improve and has multiple domestic growth drivers. The most important growth driver is future of energy theme. Elara Securities is bullish on Adani Energy, believes the company is set to post robust growth in its transmission, distribution and smart meter segment. The company sees growth potential in Mundra Discom. The smart meter segment emerges as key catalyst. Investec initiates a buy rating on Suzlon, says favorable macros are boosting wind energy prospects, which augurs well for the sector. Unlevered balance sheet and strong operations and maintenance portfolio to deliver healthy return on capital employed. MK has come out with a positive view on Indian metal stocks. As per the pecking order, he lists Nalco first, followed by Vedanta and Hindalco. MK expects Hindalco, Vedanta and Nalco to generate upcycle profitability and returns. Citi has come out with a note on oil marketing companies, says that LPG compensation could make or break FY25 earnings. Citi also believes that OMCs could end FY25 on an ugly note unless compensation for LPG losses saves the day. Without the LPG compensation, Citi believes that investor confidence could be shaken and earnings would fall sharply. Vedanta creditors meet today to vote on India demerger plan. The demerger will lead to 5 listed companies: Vedanta Aluminium, Vedanta Oil and Gas, Vedanta Power, Vedanta Steel and Ferrous Materials and Vedanta Limited. For every 1 share of Vedanta, the shareholders will additionally receive 1 share of each of the few newly listed companies. The benefits of the demerger lies in the fact that investors will get exposure to 5 pure play companies. Newly formed companies have a strong case for re-rating. One MobiKwik system is acquiring 3.39% of the share capital on fully diluted basis of Blostim Fintech. So Blostim is a B2B banking infrastructure platform founded in 2021, specializing in fixed deposit aggregation as its core offering. The company has built strategic partnerships with multiple banks and NBFCs, seamlessly integrating their financial products through robust API solutions. Blostim's plug-and-play technology stack empowers B2C platforms across diverse sectors to efficiently distribute banking products. By leveraging its cutting-edge infrastructure, Blostim enables financial institutions, B2C platforms, and super apps to offer scalable and seamless financial products to end customers. Maharashtra Scooters closes Satara factory due to non-viability of manufacturing operations. The company will transfer leasehold rights and machineries at Satara factory for 73 crore rupees. Government may modify the terms of new EV policy amid Tesla prepares for India entry. Government sources told NDTV Profit that the new EV policy, which was announced in March 2024, will be rolled out in March. The car makers may be mandated to show 2,500 crore revenue by the second year. New guidelines are in work, like 15% import duty for a 4,150 crore